Check 1 2. Check 1 2. Check, check. Check 1 2. Got it. Good. All right.
Important thing for us to know. Was it? The now deceased. The late.
I'll get the ring.
All right, let's go. Hey, good morning. Good morning. We know you're all trying to get out of your heavy coats, bundled up. But it is 9 a.m. Welcome to the 2024 joint appropriations hearings from the House and the Senate. You know we have a full day. There's also a lot of things that are going on outside the building. And we pray for our first responders and those DOT crews who are working to keep us safe. There have already been a few members who've let us know that they could not attend for one reason or another. Some of it due to sickness, some due to other issues that are going on. So we'll keep them in our thoughts and prayers as well. We have a full day. You've got the schedule ahead of you. We want to get started really quickly. And I've asked Senator Strickland if he doesn't mind leading us in the invocation. Strickland, if you don't mind, 28. There we go.
Thank you, Mr. Chairman. If y'all please bow with me. God, thank you so much for this day that you gave us, Lord. Thank you so much for the ability and the opportunity to serve you and to serve the people of the state. Please be with all of our first responders, all of our state DOT workers and local workers around the state that are serving our citizens as we deal with the weather. Please keep everyone safe, Lord. And Lord, please give us wisdom and help us to make the right decisions in this room for all the Georgians. In Jesus' name I pray. Amen.
Just a brief overview. You've had your budget books now for a few days and been able to see what has been proposed by the governor, who we'll hear from here in a few minutes. Appreciate him making time in his busy schedule, even from overseas, to join with us. I want to tell you, though, Chairman Hatchett and I've had a time to talk too. We really do need your help this year. We need you to comb through things in your subcommittee reports as carefully as possible. There are a lot of needs around our state, but you'll also see that revenues, as you'll hear from Dr. Bushman later on, are not as strong as they have been over the past few years. You'll see where even in the next month, revenues are not as strong this month as they were the month before. And you'll see where he may predict that we have at least a slight chance of a recession in the first half or the second half of this year. So we need your help as we comb through the needs of the state, as we comb through things that we've looked at as legislative bodies over the past few years. There's a lot of good items in this budget, but we need to make sure we're being prudent with state money and with taxpayer money. Remember, we're not creating anything ourselves. All we do is reallocate funds that we collect from others. So I think I'd speak a little bit for Chairman Hatchett as we've been talking. This might be the hardest one we've looked at yet. Would you agree, Chairman Hatchett?
I'll agree, because everybody in here keeps asking for funds.
So that being said, please do keep your please do help us dig down deep on these issues over the next couple of weeks, and as we work to prepare a budget that's suitable for all Georgians. Chairman Hatchett.
Thank you, Chairman Tillery. Good morning. All right. Y'all been kind of rowdy already this morning, so I hope that means y'all are getting ready to ask a ton of questions and some great questions. Just a little bit of housekeeping. So we do have very, very full schedules today, and if you've looked at your calendar, even more so tomorrow. So I know we sit in here and we get questions, and I'm going to ask that you, if it's a question that you can ask offline to the presenter, because of timing, and y'all will know if we're behind. You can read or watch just as easy as I can. But we got to give these agency heads time to present their story. So just keep that in mind. I hope we do have some good questions. We'll have some good banter as we had during our special session with those that presented then. But I'm excited, really, for the first time in a long time, that our agencies were able to ask for funds to meet their growing needs for our growing state. I'm glad that we're able to use some of the one-time surplus funds for some of our strategic long-term investments like ERS, DOT, and infrastructure needs all across our state. I'm looking forward to hearing from our governor and the agencies about all these additions that they've asked for, and looking forward to putting our stamp on the budget and appropriating these funds across all corners of our great state. And with no further delay, I believe our governor is waiting on us as we speak. So if y'all would like to tune in to Governor Kemp. I hope technology works today. There's Governor Kemp. Hello.
Hey, Chairman, can y'all hear me all right?
We can hear you and you can't see it, but the room is packed. Everybody's waiting to hear from you.
Yeah, I can actually see the room right now, and I see that it is, and I hope I'm centered on my screen. I've had our new historic first female chief of staff, Lauren Curry's had this thing working all morning from here in Switzerland to make sure that we could get connected with y'all. So I'm glad that it's working.
It's working and the floor is yours, Mr. Governor.
Well, I appreciate Chairman Tillery, Chairman Hatchett, appreciate Senator Strickland's prayer. I appreciate the members of the Appropriations Committee and for being able to join you this morning from Switzerland, where Marty and I are really sharing Georgia's success story and our business-friendly environment with the world, and to advocate for the principles that we're so proud of in the great state of Georgia. I know a lot of the media is probably following the meeting this morning, and if the two chairmen will just indulge me, I wanted to just give a quick weather report. I've been in communications with Director Stallings at GEMA and Commissioner McMurray at DOT. We pre-treated roads north I-20 all day yesterday and last night. We've had a little bit of accumulation in northwest Georgia, but they're dealing with that up there. We're continuing to monitor the very cold temperatures and especially the wind chills that are blowing into the state as we speak and will later today. I know we've had some school closures out of an abundance of caution and potentially some state agencies that may have had a little delay opening depending on where they were in the state. And I just want to urge all Georgians to continue to be winter weather ready over the next week. It's going to be very cold. And just some really treacherous conditions. And GEMA is going to continue to keep us updated. So I'd urge Georgians and everyone out there to be ready, but also just to follow the updates in their local media. With that, we're, as I said, just honored to be here across the big pond, if you will, to let the world know about Georgia's economic success, why we've been ranked the #1 state in the country for which to do business. We had some great meetings here yesterday, and I know Commissioner Wilson will be joining you like I am today, and he'll speak a little bit to some of the companies that we had the opportunity to meet with, and we've got a lot more to do here on our trip. I just want to thank the members of the Appropriations Committee and the members of the General Assembly. With your help during my time in office, we've helped attract 171,000 new jobs and roughly $74.5 billion of investment to our great state. And I'm pleased to say that the amended 24 and fiscal year 25 budgets will help us further these historic economic development efforts in the years to come. As you all know, across Georgians, millions of hardworking families are dealing with the disastrous consequences of Bidenomics, and the federal government thinks the solution is to take more money out of the pockets of the taxpayers. But thankfully, here in Georgia, with your support, we're giving those dollars back to the people where it belongs. And I just want to thank you again for your support of these measures that we've taken really over the last year or so. And just want to offer our willingness to continue that partnership to find other ways to provide Georgians relief. As you know, over the last 2 years, we've returned nearly $5 billion to Georgia families through tax refunds, multiple suspensions of the state gas tax, and direct property tax relief. The budgets you see before you will go even further in helping our fellow Georgians fight through the failed policies of Washington, D.C. It reflects the historic tax cut legislation that we all worked on together to provide permanent tax relief for our citizens. As you all know, originally that legislation called for an additional 26 basis point reduction as the first step in permanently reducing our state income tax rate. As I announced back in December, alongside Lieutenant Governor Jones and Speaker Burns, both chairmen of the Joint Committee and other leaders in the General Assembly, I'm proposing that we accelerate that tax reduction by an additional 10 basis points, lowering our income tax rate from 5.75% to 5.39% this year. This 36 basis point reduction will save taxpayers nearly $1 billion every year beginning this month. And while this is a great first step, I want you all to know that I remain fully committed to implementing this landmark tax reduction during the rest of my administration, giving families billions of dollars back in their pockets to invest directly into our economy. We're able to do this at a time when other states find themselves in financial trouble because we have focused on growing our economy, not the government. We're certainly not like California, which right now is proposing raising taxes to fill a $68 billion budget hole. Because we chose the smart, fiscally conservative path, we're returning money to people while meeting all of our liabilities, and we need to stay on that path, or else we risk going the way of these failed blue states. As companies worldwide flock to Georgia to expand their operations, we're making sure communities across the state are able to welcome these growth opportunities, particularly in rural Georgia. One aspect of our state we make sure to highlight during our meetings with potential investors here is Georgia's unique position as the home of the most utilized and efficient airport in the world, the fastest seaport in the country, and also our ability to move freight and goods to and from our ports across the country and across the globe, which in my opinion is unmatched. But as you all know, and as Chairman Hatchett stated earlier, as our state continues to grow, we got to maintain a safe, efficient, and reliable transportation infrastructure network that will keep these goods flowing freely in and out throughout our state. That's why the amended 24 budget includes $1.5 billion of investment in Georgia's Department of Transportation to maintain our roadways and accelerate construction on shovel-ready projects in every corner of the state. I'd like to note that $641 million of those funds will go specifically to projects that improve our freight corridor. Another $200 million will go to the local maintenance and improvement grants to help our local communities keep their own transportation networks ready to handle the business that we are sending their way. And while we have many transportation projects across the state that are shovel-ready, we also want to make sure that our small and rural communities are shovel-ready for business as well. This means identifying sites for potential development, infrastructure to support those sites, and the capacity for the workforce needed to support those projects. This budget will help our local government be shovel-ready by infusing $250 million in the Georgia Environmental Finance Authority's Georgia Fund. These funds won't just be available to meet immediate needs. As a revolving loan fund, this will permanently grow our capacity to assist local governments in expanding critical water infrastructure. We're also investing an additional $56 million into our Rural Workforce Housing Fund at the One Georgia Authority for housing site development to ensure families have affordable housing opportunities close to the new businesses and these investment sites. Furthermore, my proposal includes $200 million for economic development grants provided through the REBA and One Georgia programs. $16 million from that investment will be available to provide assistance to local governments for economic site development in rural communities. Together, the amended 24 budget will infuse more than $2 billion directly into our state's infrastructure and local communities to make sure we're ready for the unprecedented opportunities that are coming our way. These budgets also invest in our people and ensure that we can continue to reduce the tax burden on Georgia citizens and businesses while still meeting our fiscal obligations. Our status as a AAA rated state is an important economic development tool that lets investors know Georgia is a safe bet. Just as Georgia families must ensure they pay their bills and put money away for a rainy day, we must do the same with their precious tax dollars. That means living within our means and not creating unfunded future liabilities for our children. I believe that in times like these, when our state is on strong financial footing, we should make careful and strategic investments to ensure we're prepared for when times are lean. That's why my amended 24 and fiscal year 25 budgets include more than $1.8 billion for capital construction and maintenance for state facilities. These funds will ensure they're maximizing the practical use of facilities we already have, reduce future costs that can result from deferred maintenance, and meet projected needs in growing parts of our state. And I would like to add that we will make this investment without issuing a single additional dollar in debt, saving taxpayers millions in future debt service costs over the next 2 decades. I'm also directing that the savings we realize in our most recent bond sale be reinvested to pay down outstanding debt, further reducing the state's fiscal burden for future generations. We're also putting a record $1 billion in our retirement, risk, and health portfolios to keep those assets on sound financial footing and ensure they're able to grow sustainably to meet future demands. This includes more than $500 million for our retirement system to ensure we meet our obligations to those who dedicated their careers to public service. And we're putting $250 million in our risk insurance pools to hedge against future potential catastrophic claims and settling existing claims. Much like our families and businesses are experiencing substantial increases in the cost of insurance, so is our state. Providing funds to settle existing claims while beginning the process of tackling civil litigation reforms will save our taxpayers millions of dollars in future settlement costs. And finally, we're investing nearly $250 million in the state health benefit plan through our local K-12 schools. These funds will ensure we're offering quality health care to our teachers without requiring reductions in coverage or further increases in out-of-pocket cost. And to help our educators and state workforce fight through the impacts of Biden inflation, I was pleased to announce a supplemental payment of $1,000 for teachers and state employees this past December. And my amended 24 budget includes $306 million to cover that payment. On top of that, my fiscal year 25 budget includes $630 million to provide a 4% cost of living adjustment to state employees and a $2,500 salary increase for our K-12 teachers to ensure we remain competitive in this tight labor market. But that is not all. For too long, we have not updated our pupil transportation formula for our local schools. And as our student populations have grown, school systems have absorbed the annual cost to continue to provide transportation to and from schools each day. This means funds that could have gone towards teacher pay and classroom instruction have gone to covering transportation costs instead. Therefore, my fiscal year 2025 budget includes almost $205 million to update the pupil transportation formula and provide significantly more state support for system transportation needs. We're also making smart investments to ensure our students can learn and our teachers can teach in a safe and secure environment every day. With your support, we've already provided $185 million to local schools for school safety needs. I again want to thank you all for your support of those efforts. My fiscal year 2025 budget includes $104 million to provide ongoing annual funding to build on that success. In total, the fiscal year 25 budget proposal provides our local schools with more than $1.4 billion in additional funding to meet growth needs, improve teacher pay, and maintain health and retirement benefits, as well as securing our schools and ensuring the state is doing its part to meet the educational needs each and every student across our state. I appreciate your support and partnership as we have weathered the uncertainty of the last 3 years. Our fiscal conservative approach has served us well, and as a result, we have the opportunity to make unprecedented investments in our state, while at the same time enacting the largest state tax cut in our history. I want to thank you for your time this morning, and I look forward to working with each of you over the next few days of the legislative session as we keep Georgia the best place to live, work, and raise a family. Again, Chairman Tillery and Chairman Hatchett, members of the Appropriations Committee, Thank you for letting me present this morning. I wish you the best the rest of the week. Look forward to seeing you when we get back. God bless.
Thank you, Governor.
Thank you, Chairman. Y'all have a great day.
Thank you. We appreciate all you and First Lady Marty Kemp are doing to always market the great state. Thank you.
It's an honor. Y'all have a great day.
You too. Thank you.
All right. I think we still have a few seats. I think the members that have come in have gotten a place to sit. I think so. We're packed. Thank y'all. So we'll move on. You ready? Okay. All right. First up this morning, after the governor, so second up is our state economist, Dr. Bob Bushman. Dr. Bushman, the floor is yours.
Okay. Thank you very much. Good morning, everyone. And thanks for braving the weather to come out, especially if you were north of the metro area and might have seen a little snow. Thank you, Chairman Hatchett and Chairman Tillery, for inviting me to speak today on the economic and revenue outlook for the state. There we go. My presentation today is in two parts. Focusing first on how we got here, explaining the phenomenal revenue growth the last 3 years. And second, where we're going. What is the economic outlook and what does it mean for revenues? First, to recap revenue trends, this graph shows tax revenues by major tax type since fiscal 2018. Starting at the base with personal and corporate income taxes, followed by sales, motor fuels, TABT, alcohol and tobacco, excise taxes, and insurance premium taxes, and then all other, that then blue line at the top. Over 5 years, state revenues have grown cumulatively by, I have a hard time with that word, I don't know why, by $10.4 billion, or about 45%. But it's important to note that 91% of that growth, about $9.4 billion, came in just 2 years, fiscal 2021 and 22. The state's three largest revenue sources, personal and corporate income taxes and sales taxes, in fact, grew by $11.1 billion over the 5 years. Other taxes performances varied, and of course, motor fuels tax was suspended for parts of both fiscal 22 and 23. Total fiscal 23 tax revenues were essentially flat from fiscal 22. Focusing on the latest full year, we can see that in fiscal 2023, personal income tax was down about $1.3 billion, while corporate income tax was up by roughly the same amount. So what explains this divergence from the two? Large gains in one, really unprecedented gains in one, and a decline in the other in the same amount. A large part of the answer is a structural change in the way pass-through entities, S corporations, partnerships, and LLCs pay taxes. Starting with tax year 2022, these businesses are allowed to file and pay their Georgia income tax at the entity level rather than at the individual owner level. The reason they would do this is the $10,000 limit on state and local tax deductions on their federal tax returns. For the state, it's roughly a wash. What they pay through the corporate income tax would have otherwise been paid through the personal income tax. But they save money on their federal returns. So 30 states now allow entity level filing for pass-through entities. So how much did this loss shift from personal to corporate income taxes? Based on a tabulation by the Department of Revenue of tax year 2022 corporate tax payments, about $950 million were paid in fiscal 23 just from pass-through entities opting for entity level filing of their 2022 taxes. So there'll be more from their 2023 taxes, a little bit in the 23 numbers and a lot more in the 2024 numbers. The rest of the story on what's been driving income and other major taxes besides motor fuels is to be found in the economy and in the markets. This graph shows what's been happening to Georgia and U.S. real personal incomes since the last quarter of 2019, indexed to 100 in the first period, so you can see the cumulative growth over time and compare the U.S. to Georgia. The solid lines are total real personal income, including income from employment, from dividends, interest, and rents, and from transfer payments. Georgia in orange and the nation in blue. The dotted lines represent only the wage and salary component of total personal income. The spikes in total income in 2020 and 2021 are the result of the big federal transfer payments during the pandemic. So as those transfer payments wound down, total incomes fell back and ended the period up only about 4%, inflation adjusted over nearly 4 years. That's not bad, but wage and salary income did much better. Nationally, up 5.2%, and in Georgia, up 8.5%, and continuing to climb through the third quarter of 2023. Historically, wage and salary income has been the main driver of personal income tax revenue. No surprise there. Taxes on wage and salary income are collected generally through withholding payments. And historically, withholding collections have been approximately equal to total income tax collections on average each year, each vary differently from quarter to quarter, so the lines go up and down. But over the full year, they've been roughly equal. In fact, the dotted lines on this graph that show the 12-month moving average or the 4-quarter moving average, they're roughly equal from 2015 through 2019. But they diverge in the last few years. For 2022, the gap between the orange and blue lines represents an extra $3.9 billion of net collections over and above withholding alone, or about 2/3 of the gain in total income tax collections from fiscal 2019 to 2022. So what are these non-withholding payments, and can we count on them continuing? Well, most of these are tax payments related to income earned from a business, from self-employment, or from investments, offset by refunds, including those from over withholding against wage income. I read something the other day that said 75% of wage earners are over withheld and thus get a refund at the end of the year. I try not to be. I try to make the number as small as possible. Manage my own savings instead of letting the federal government do it. My predecessor talked to you last year about an apparent windfall to the state from taxes on capital gains. But at the time, data weren't yet available to try to quantify how much the state collected on capital gains in fiscal 2022. Those data are now available, and I'll show you what we found on the next slide. But before we leave this one, note that in the last 4 quarters, calendar 2023, withholding has grown to $15.7 billion, up 34% from 2019, before the pandemic. I mentioned before that real wage and salary income in Georgia is up 8.5% since the last quarter of 2019. The rest of the gain is from inflation, or the portion of all raises given by Georgia employers just to keep up with the cost of living. Now let's see how much of the $3.9 billion of non-withholding collections in 2022 are attributable to capital gains. To estimate this, we drew on 2 data sources, the IRS's statistics of income data for Georgia residents and DOR data compiled from e-filed Georgia tax returns for which capital gains income can be broken out. The IRS data, unfortunately, stops in 2020. 2021 numbers won't be available until next month. The DOR data go through tax year 2021, but only cover e-filers. So some filers are left out, particularly low income, but also more complicated returns that are perhaps more likely to have capital gains. The IRS data then should better approximate total taxable gains in Georgia. So we estimated comparable 2021 numbers, assuming the gains are taxed at the top marginal rate, shown in the shaded area, if you can see that shading in the last column up there. Estimates of the tax revenues, assuming the gain, oh, I just said that. The bottom line here is an estimated $3.2 billion of taxes on capital gains from tax year 2021, mostly impacting fiscal 2022. That's $2 billion more than the estimate for 2019 fiscal 2020. $2 billion is 40% of the personal income tax gain from 2020 to 2022, and more than half of the $3.9 billion of non-withholding payments in 2022. Now, we also wondered how best to understand the risk to revenues from the volatility of capital gains taxes. So we broke down the DOR numbers over time by the size of gains reported on each return. The figure here shows reported net gains in several size bins from less than $100,000 per return to over $25 million. What this shows is that the volatility in realized gains comes mostly from the top end, much of which is likely one-time gains, like those from selling a business. In a down cycle, those gains can dry up quickly as a source of revenues for the state. In 2019, for example, when the Fed was last raising interest rates, gains realizations in the largest bin fell by 70%, while gains in the smaller bins all increased. We expect to find, once data are available for tax year 2022, a significant decline in capital gains realizations that helps explain the 7.2% decline in personal income tax collections, even as withholding grew by more than 6% in fiscal 23. Now, the income spikes that I showed you in an earlier figure from pandemic assistance payments, as well as the sustained revenue growth of ordinary personal income since 2019, have contributed to state revenue growth in another way, through the sales tax. Sustained growth of ordinary personal income from a job, a business, or investments in pensions, is the main driver of sales tax revenue growth. Nominal personal income growth in Georgia, excluding transfer payments, averaged about 5.5% over the last 4 years, while sales tax revenues grew by 9.3% from fiscal 2019 to 2023. Now, what explains the faster growth of sales taxes versus income? First, the income spikes from pandemic assistance supported consumption even as income from other sources initially fell for a lot of people. Second, in what should have been a surprise to no one, a large part of those payments were not immediately spent, but rather saved. Now, many of you have probably seen a graph like this before, showing U.S. personal savings rates compared to some normal rate. The orange line across there being the 2015 to 2019 average savings rate across the U.S. The positive gap for about 18 months of the pandemic represents the accumulation of excess savings. The negative gap the last 2 years is those savings being spent back down. The story is not quite over. Estimates vary as to when the remaining excess will be spent, but analyses I've seen all suggest sometime this year. The other big factor has been the mix of consumption spending. Beginning with the pandemic, consumption shifted from services to goods. Nationally, goods consumption has risen over 35% in the last 4 years. Services consumption, on the other hand, is up only 25%. As you know, goods are generally taxable in Georgia, while most services are not. A shift back towards services would mean less sales tax revenue for the state. In the interest of time, I'm going to skip repeating what I just said, but this slide will be in there to summarize the how we got here part of the presentation. Now let's look at a few other broad measures of current economic conditions and performance over the last year to set up for the 2024-25 outlook. First, unemployment. Going into the pandemic, both Georgia and the nation were enjoying a low unemployment rate of about 3.5%. And as you'll recall, unemployment spiked to double digits by that April, with much of the economy shut down. But Georgia's rate peaked lower and came down faster. setting an all-time record low of 2.9% in April and May of 2022. This low unemployment rate has put upward pressure on wages, contributing to real wage growth. The flip side of that is higher costs for employers, pushing businesses to raise prices, which in turn puts pressure on the Fed to tap the brakes. The good news is the Fed's 11 interest rate hikes since March of 2022 have not yet slowed the job market. Unemployment remains at historically low levels of 3.4% in Georgia and 3.7% nationally. Another problem with a tight labor market is that it's hard for businesses to find workers. So we need a growing labor force of qualified workers to grow the state economy. This graph shows how that's going. Since February 2020, just before the beginning of the pandemic, Georgia's labor force has grown by 3.1% cumulatively through November. This compares to only 2.3% nationally, not counting the decline in the latest month. Also, since February 2020, Georgia non-farm employment has grown by 5.8% versus 3.1% nationally. The Bureau of Labor Statistics survey of households reports a record 5.18 million Georgians employed in November, 243,000 more than before the pandemic and up 98,000 in 11 months of 2023. Growing employment leads to growing output from businesses, which brings us to the broadest measure of economic performance, real GDP, or GDP adjusted for inflation. Georgia and U.S. real GDP, shown here indexed to 100 for the fourth quarter of 2019, have grown by 5.6% and 7.3% respectively on a cumulative basis from pre-pandemic highs. Growth has mostly stayed positive since the plunge, even in the face of Fed rate hikes. Georgia outperformed the nation through the end of 2022, but has lagged a bit in the results we have so far for 2023. Nevertheless, the state economy is headed up strongly again in the latest quarter, up 4.5% annualized in Q3. Now, speaking of the Fed, we've seen 11 rate hikes over 17 months, taking the Fed funds rate from near zero to a target range of 5.25% to 5.5%. The Fed has done this to fight inflation, which had gotten out of hand because of the extraordinary measures taken by both it and the federal government to boost the economy during the pandemic. This graph shows you the inflation surge that prompted their actions and how their fight is going. Headline inflation, the all items consumer price index shown here in blue, started climbing in early 2021 and peaked at 8.9% in June of 2022, far above the Fed targets. The purple line shows inflation in goods prices. These prices skyrocketed in 2021, and goods inflation peaked at 14.1% in March of 2022. Many of us are old enough to remember that from the late 70s and early 80s, similar inflation rates. Since then, it's fallen dramatically. Some prices that made the news in 2021, like eggs and meat, have fallen since that time, while overall goods inflation has been near zero in recent months, dipping into negative territory 3 times since June. So why isn't the Fed done? Why are we still seeing headline inflation of 3.4% for December and core inflation of 3.9%, both still well above the Fed's 2% target? The reason is prices for services, which accelerated their rise while goods inflation was easing. Services inflation didn't peak until a year ago and is still high at 5% in December compared to a year earlier. Monetary tightening has had partial success in bringing inflation down, but the Fed is likely to stay tight for a while longer given the latest inflation readings and the lack of other signs of major slowing in the economy. So I wouldn't count on a March rate cut, probably a little bit later than that. So what is the outlook for the economy then? Will the Fed stay too tight for too long and cause a recession, or will they engineer a soft landing? What about the labor markets? Can we really fall into a recession with demand for labor so strong and unemployment so low? Well, of course we can. Recessions start from highs, not lows. But a strong labor market certainly helps make for a milder recession, like those in 2001 or 1991, compared to what we experienced from the Great Recession. It also helps that households still have some of the excess savings accumulated during the pandemic. What else is different than the last major recession in 2007 to 2009? Well, consumer financial health for starters. A lot of those pandemic savings were used to pay down debt. So household debt service ratios are far below the levels before the Great Recession. Household debt service payments as a percent of disposable income are about 9.8% as of the third quarter of 2023, compared to 13.3% just before the Great Recession. That's a 26% drop in household debt service, debt burdens. Household debt to GDP is down about the same amount, a 25% drop from 2007 levels. We also aren't in a housing bubble. Yes, prices rose because of high demand and limited inventory during the pandemic, but we don't have easy mortgage money and low rates feeding a speculative bubble like we had in 2005 to 2007. Finally, the banking system is far stronger than it was then. A recession now won't start bank runs or crash the financial markets. I hope. What should we worry then? Well, inflation is still high and the Fed is still tight. An early start to the Fed rate cutting would likely mean they see the economy weakening more than they would like, not that inflation has been whipped. Rising labor costs and difficulty hiring squeeze profits and slow business growth. Higher mortgage rates put downward pressure on prices, discouraging new home construction. And office vacancy rates are at all-time highs. In Metro Atlanta, according to data cited by the AJC a week ago, 32% of office space in Metro Atlanta sits empty because many workers want to keep working from home, and so far, employers are mostly accommodating them, reducing demand for office space. One more thing that I worry about is whether this particular recession indicator, the spread between 3-month and 10-year Treasury rates, will finally be wrong. The last 8 times the spread has gone negative, the 3-month rate above the 10-year rate on a monthly basis, a recession has followed by between 6 and 17 months. The only time a recession didn't follow a monthly negative spread was in 1966. This time, the spread first went negative in November of 2022, so we're in the 14th month. Take it as you will, but it's an objective indicator that hasn't been wrong in a very long time. The New York Fed, in fact, publishes a recession probability indicator based on this spread. As of December, the probability of recession by the end of this year is about 63%, according to this model. In summary, the economic outlook that went into the budget estimates is this: a mild recession is more likely than not, beginning in the first half of this year. The Conference Board is calling for, that's the publishers of the Leading Economic Indicators Index, is calling for real GDP growth of -1% in Q1 and -0.7% in Q2. Other forecasters are more optimistic, including those at my own school, Georgia State University and UGA, as well as the Wall Street Journal Economic Survey consensus. But the headline on the Wall Street Journal's release of their January survey over the weekend was, quote, "It won't be a recession, it will just feel like one," end quote. The consensus forecast in their survey is now for real GDP growth of just 1% for the full year 2024. Inflation should continue easing, but just fast enough for the Fed to start cutting rates between April and June, according to the new Wall Street Journal Economic Survey. Unemployment should rise above 4% by Q2. and peak later in the year at between 4.2 and 4.3%, depending on which survey you listen to. Georgia should do better given our current rate of 3.4% versus 3.7 nationally. And of course, we have mitigating factors that should make any recession a mild one, and we still may avoid one. All of which brings us to the revenue budget, which is conservative for good reason. The scenario I've outlined suggests pullbacks from the unprecedented revenue growth since 2020. A slowdown in the economy and a modest increase in unemployment, along with much lower inflation, will be a drag on nominal taxable incomes. While generally more cyclical corporate taxable profits will put corporate income tax revenues at risk in a recession scenario. Goods inflation is behind us, and we can expect a consumption shift back to services, suggesting lower tax revenues from consumption spending, including both motor vehicles and from the general sales tax. We're also halfway into the year and already seeing significant declines in several of the larger revenue sources. Personal and corporate income taxes are both down around 4.5%. Sales taxes are flat, and excise and insurance premium taxes are also down significantly. In sum, we've had phenomenal revenue growth in recent years, which makes the comparisons tough, especially with a slowdown looming. Still, the budget forecast only brings us back to the post-Great Recession trend. And with that, we can open up to questions.
Thank you, Dr. Darfin. Any questions from members of the audience?
Leader Beverly.
Thank you, Mr. Chairman. Thank you for your presentation. I have a quick question for you. You said that, we have a potential recession or at least a slowdown. It seems like a recession may happen by the end of this year. How do your revenue estimates based on this year or that assumption play into how we should be allocating money? The reason I ask is this. The last several years, the economists prior to you had revenue underestimates, which led to increases, which now we have this huge surplus. So how can you ensure that the General Assembly now knows that, look, we're going to be on track, not because of revenue underestimates, but because you factored in the potential recession that may come in, and then how should we be allocating money in that space?
Well, the allocation of money is y'all's job, along with some of my colleagues at OPB and the governor's office. The question you asked is why I spent so much time in this presentation going over how we got here on revenues to date, and particularly the phenomenal growth in 2021 and 2022. I also talked about the capital gains contribution to 2023 revenues. And if you look at the capital gains data, you can have windfall years, but those are usually quickly reversed. In fact, 2022 was a down year for the stock market. We don't have 2022 tax data to show capital gains yet. But like I said, we're expecting those to pull back to more normal levels, nothing like tax year 2021, which hit 23 revenues, tax year, I'm sorry, 21 revenues. The other thing that's in the income tax numbers are the tax cuts that y'all already enacted that took effect a couple of weeks ago, as well as the 10 basis point reduction that the governor proposed in his budget. The corporate income tax numbers show a bigger decline than personal income tax because like I said, in a recession scenario, corporate profits, taxable profits can come down a lot. So, we're being conservative. We're budgeting. We're not trying to be, the most perfect predictor. We're not Wall Street forecasters where the risk of being wrong is the same in either direction. As budgeters, you have to be conservative.
Representative Evans, is that you?
Yes, sir.
Okay.
Thank you, Chairman. Yes, so thank you for your presentation. Hello. Yeah, I'm over here. So you talked about that the office vacancy rate was at an all-time high at 32% empty, but you said a sign of strength was stronger banks. And I just watched 60 Minutes the other day where they were talking about that some people feel like that might be that I guess the banks hold the loans for these commercial buildings, and that might be a potential big downside to hit our economy. It's like the beginning of a potential crisis. I don't know. I just welcome your feedback on that.
Well, in an earlier life, I was a banker for a little while. So I do know how particularly the commercial side works, not so much the housing side. Frankly, the regulatory reforms and the higher capital requirements and all of the excess reserves that banks hold now tells me that any banking pullback from bad real estate credit, whatever, is not going to be a crisis. The banks are unbelievably strong now. Their capital levels are really at levels we haven't seen in my lifetime, at least. So I'm not worried about a banking crisis. No. Yeah.
Representative Bruce, do you have a question?
Does the unemployment numbers that you were talking about, do they factor in the number of people that have just given up looking for work?
Well, the unemployment numbers count people who are actively seeking work as
Right.
unemployed.
But
They don't count people who are not seeking work. I haven't looked recently. The BLS also publishes that number that includes people who have just given up looking for work.
because that could be a very large number, and that's why I was asking it, because I keep seeing these numbers talking about the low unemployment rate, but I also keep hearing about a bunch of people that just can't find work and for giving up. So that number could be a significantly different number. And also you mentioned that there are a lot of employers that are having difficulty finding employees. What types of jobs, what category, I guess, of jobs are they having difficulty finding people for?
Particular industries, well, y'all would probably, from talking to your constituents, businesses in your districts would probably know better than I would. But back to the question about the unemployment numbers, they're not low because of people giving up looking for work. In fact, the labor force, which includes the labor force, has been growing. People have been re-entering the labor force since the pandemic. We paid people, or the federal government paid people a lot of money not to work and not to look for work during the pandemic, but that stopped, and people are returning to the labor force. The labor force participation rates have been going up.
Chairman Perkle.
Thank you, Mr. Chairman. Down front, I also am a reform banker. Couldn't be happier in that. One of the things, so we derive a significant portion of state revenue from the individual income tax return. Individual income tax payments to the Department of Revenue is a big thing, and you spent a rather significant portion of your talk here today talking about that and how that could impact us going forward. And if I wrote it down right, and I could absolutely have missed it, if I missed it, I apologize. So the total personal income is basically debt service, which you said is down as a percentage of our total personal income.
Mm-hmm.
Essential goods and services, the stuff that we buy that we need. It's somewhat flat for goods. It's somewhat inflated for services. Plus personal savings, which is down. And that's including disposable income, et cetera. How concerned are you when we look at the financial status of the state of Georgia? One of the things that we say is in terms of our health is that we have a pretty good savings account, you know, in times of hard times, that we have something to fall back on. It's the same kind of flows for personals. How concerned are you that that continues to fall?
I'm sorry, what?
If I wrote it down right, the personal savings rate, which is, you know, for, you know, in our personal budgeting, my wife and I might call it mad money. You know, this is money that we have that we can spend, that I have available. And that seems to be continually to decline. How big a factor is that in your forecast going forward, that my personal savings is diminished?
Well, it's not so much that personal savings balances are diminishing, but rather the savings rate. So the graph I showed you was the savings rate each quarter, the percentage of total personal income that is not spent in the current quarter, just disposable personal income, so after taxes. So falling below the orange line on that graph,
that concerned me a good bit.
That's you know, you can draw that line a lot of different places. I think Jeff Dorfman drew it at 8% last year. I drew it at the 2015 to 2019 average of 6%. In 2019 alone, it was at 7.4%. So, you know, how low we are relative to normal is, you know, is uncertain, but the savings rates did drop below where they've been for 5 years before the pandemic. But that doesn't mean that it means balances of savings, of excess savings, are being drawn back down. So you accumulate a lot of savings and then you feel flush. You've paid off all your credit cards. You've paid down some of your other debts. Now you're going to spend money.
Mad money.
Yeah. Yeah. And so the savings rate statistically drops below normal for a while. It's getting back to normal is what hits the sales tax revenues. So people cut back their spending when those excess savings run out. And like I said, estimates vary, but sometime this year, we expect those excess savings to run out.
Okay, thank you.
Chairman Hickman. Oh, you don't. Chairman Hickman.
Yes, sir. To kind of go back, I think to answer my gentleman to the left, a question in the book that we got at the Eggs and Issues earlier this week from Chamber of Commerce on the unemployment actually said that in Georgia, I think the average right now across the state for the people that are available work compared to the ones that are working are only 59%. And if you look at the by county, I remember one county in particular, only 27% of the people in that county that could work were working. So I think if you go back and look at that, I think that'll help us understand a little bit more about the unemployment situation too.
I will be happy to take a closer look at county level data, but I frankly haven't recently. Yeah, I'm surprised to hear that it's that low in some counties. We'll look into it.
Given out Monday or Tuesday, excuse me.
I'm sorry.
It was a red book that was given at the Eggs and Issues breakfast of the morning.
Representative Hughley.
Thank you, Mr. Chairman. I'm on the opposite side of the room.
There we go.
Can you tell us what you're seeing that makes you confident that accelerating the reduction in the income tax rate is a good idea?
Well, I mean, the budgeter's job is to balance the budget. We've had huge surpluses. We don't expect those surpluses to continue, but some and the unprecedented revenue growth justifies both some of the spending increases that the governor has requested, well, frankly, all of them, and income tax cuts, giving some back to the taxpayers. Where y'all draw that line, how much you give back to taxpayers versus how much you increase spending is a political choice. I mean, I'm not sure if that answers your question, but that's.
Chairman Newton.
Thank you, Mr. Chairman, and thank you for that explanation as well. I have noticing in the amended FY24, there's an additional 2.3 billion in spending. And then when I look in the book at the lines, says 35 billion coming in, 37 billion going out. So that's
Right.
some of the spending you're talking about, that
Right.
3 years of conservative budgeting has allowed us now to actually begin spending some of that at a safe time when things are not overly hot. You did mention, however, I think it was 63% possibility of a recession. How do we make sure we keep enough money set aside in case unemployment claims go up, or if national inflation begins to affect
Right.
Georgia more? How do you advise the right balance between how much of that conservative budgeting that's allowed us to have the ability to be generous now? How do we make sure that we aren't so generous now that we aren't prepared for a massive increase in unemployment claims if the 63% comes true?
Well, if the 63% comes true and the recession is more severe than we anticipated, that's what rainy day funds are for. We've got a very strong revenue shortfall reserve. It's overfunded versus the statutory limit of 15%. And the governor's budget does call, like you said, for drawing those reserves down by $2 billion to support additional spending. But how we, protect the budget going forward is to maintain those reserves at a reasonably high level. That's also how we maintain AAA bond rating.
Well, thank you.
Senator Orrock.
Thank you, Mr. Chairman. Thank you for your extensive comments and data that you brought us today. At what point do you all have an estimate of what it would do, what would it do to state revenues if we were to expand Medicaid and get all those federal dollars into our state economy, investing in our healthcare infrastructure and hopefully saving rural hospitals from closures and improving our health statistics? Is the numbers been run on that at any point?
I focus on the revenue side, not the expenditure side, but my understanding is there are some proposals related to Medicare in the budget. But that's an expenditure side question that probably DCH when they're here, or the division director for that area would know better than I would. I'm sorry.
Well, just to clarify, aren't those revenues when we get federal dollars transferred down to our economy?
Yeah,
a knowable thing of what that would do for the economy?
They're not in the revenue numbers that I forecast. They're not tax or fee revenues. They're not own source revenues for the state. They're payments from the federal government. So I can't really tell you much about them.
It's sort of in a different column then, if you will.
Different part of OPB.
Thank you.
Sorry.
And close it out as we see the board now. Representative Maynard, do you have a question?
Yes, thank you. You mentioned in your presentation that personal debt is decreasing. And what are all of the different factors that are considered when you're talking about personal debt? And the second piece to that question is, there are payday loans. Is that included in personal debt? And there are these new online platforms where people are taking out loans to buy simple things like tissue. Is that included in the calculations of personal debt?
Do you mean the buy now, pay later options on some websites?
Yes.
Those, I don't know if the Fed is able to track those yet. That's a fairly new. Of course, some of us also probably remember layaway plans in department stores when we were kids. but that's a fairly new phenomenon. I'm not sure if the Fed is able to track that very well yet. But loans like payday loans should be in those numbers. The two numbers I cited were figures tracked by the Federal Reserve. The debt service payments, so principal and interest payments on household debt as a percent of disposable income, and the total amount of household debt relative to GDP. So the total amount of debt in an absolute sense is not declining, but it's shrinking relative to incomes and to GDP. So you may, see some categories of debt that are actually increasing, student loan debt over recent years, for example. But relative to our incomes and to GDP, debt service burdens and the amount of debt outstanding for households has been declining. And especially since the pandemic. Like I said before, trillions of dollars were sent out to everyday people in the economy during the pandemic. And a lot of that money went to pay down credit card debt and other debts. Paying down debts is saving. You can borrow again to spend later if you want, but it is savings.
Huh? You got a minute?
Last question is Representative Buckner.
Thank you, Mr. Chairman. You mentioned that there was a
Sorry.
I'm
There
sorry,
you go.
35% increase in goods consumption and a 25% increase in services. My question is, and it's just a curiosity, because is that real increase in consumption, or is it an increase in our revenue from things like the new sales tax on internet goods?
No, it's an increase in consumption spending, but that includes the effect of inflation. Well, I think that graph might have been real personal consumption expenditures, but what happened was during the pandemic, we were all, for a while, we were all staying at home and then working at home for a long time and going on Amazon and buying things. Those are tangible goods that are all taxable. So capturing more of the online taxes contributed to the sales tax growth during the pandemic. But that shift to goods is counter to a 50+ year trend where services have grown to be a larger and larger share of consumption spending by households. Part of the increase in consumption spending, in taxable consumption spending, was goods and goods inflation. But if that 50-year, we should return to that 50-year trend of higher consumption of services and lower consumption of goods, and that will hit sales tax revenues.
All righty. Last comment, sorry. I almost called you Dr. Dorfman. I apologize, Dr. Bushman. Good to see you, and thank you again for being here. Can you go back a couple of slides to your slide? I think it started with a Fred at the top. It said it was about inflation. Back
The inflation one, or
it's the inflation one. Yeah, it's from that one right there. The one thing I want to point out, make sure I'm reading this correctly. I do see that spike in 2022, January, between about July 2022 in goods. But looking over at the far left column, that's a year-over-year change. So when we go back to zero, that 8% increase stayed on that price of goods, correct?
It did.
Until it went negative.
Yeah. Inflation overall has not turned negative. We haven't had deflation.
Right.
That doesn't very often happen. It's usually bad news. It happened in the Great Recession. We had deflation.
And that's what I want to highlight for our members is even though you're hearing inflation has calmed, please know that prices are going to hold at that higher level as we look at this budget and what's baked in. It's going to get difficult over the next few weeks. Thank you so much.
All right.
Thank you, Dr. Bushman. So I've got a couple of texts. I have allowed people that are not members of the committee to ask questions because nobody else was asking a question. So that if they're the last person blinking, then we'll let them ask a question if we have time. And all the presentations today are online. They're under the House budget office, and they're there and they will be there. So just for your information. Our next presenter is Superintendent Woods. Don't know, he's not in the room yet. Is he in the hall?
Mr. Doorkeeper, do you see the state school superintendent in halls? Representative Jackson, if you see the state school superintendent out, would you ask him to step on in? Thank you so much.
Let's get started. Hey. All right, if y'all can find a seat, please. Good morning, Superintendent Woods.
Morning. How are you doing,
Welcome.
sir?
This
Thank
is
you.
a rough cruise, so I hope you're ready.
We are always ready. It's a pleasure to be with you today and just really enjoying this South Georgia weather outside. So we'll get right to it. But it's a pleasure to be with you and just got to present an overview of our educational budget. And again, what was presented by the governor just a few days ago. As we look at, education over the past really 6 years, as we look at the budget over the past 6 years, I, as an educator, and I think I can speak for all of our districts and educators throughout the state, just want to express my gratitude to both the governor and to you as members of the General Assembly for supporting public education. Especially when you look at what has been done in the area of our salaries for our teachers, roughly $7,000 over that period. Dedicated funding in various grants for school safety. Again, we cannot be more excited about the proposal this year in that area, but also targeting transportation, school counselors, nutrition, mental health, and the things that really help make education move in a very fluid and secure way. So again, I do want to express my thanks to each of you who have been a part of that process. When we look at the upcoming budget that has been proposed by Governor Kemp, again, very pro public education, very pro child, I would say, really to start off with that, recognizing the work and the leadership of our educators throughout the state. funding of literacy, which again, I know that all of you here, have a great desire to see with continued movement forward throughout the state in that area. Again, looking at in a Governor Kemp's budget, a tiered, statewide literacy coaching model. We were prepared to move forward with that in a very aggressive manner. $205 million for, school transportation, something that has been needed over the years. There's definitely been some some deficits with that, but looking at trying to make some corrections with transportation, based on really some dated QBE funding formula, and $104 million for school safety. I think for myself, when you look at school safety, and as I've shared with my staff, that's where it starts. That before we start talking about ABCs and 1, 2, 3s, we have to be talking about protecting each and every individual that steps on a campus. And again, whether that's physical safety, nutritional safety, mental health or wellness safety, these are all vital parts of making sure that a child is actually ready to learn. As we look at budgeting as well, again, probably I would say definitely not one of the more sexier parts of education. We talk about funding and looking at the request there. Funding, is one of the things we look at. I think so in December, we were over here for a bit and just talking about or a question that was proposed, talking about assessment and again accountability. And it is really the way we look at our budget. But also when we look at the budget, trying to restore some of the cuts that have been made over the past several years to make sure that our kids have opportunity for each 10th grader to take the PSAT and also to take, I think, at least one AP test as well. And as we continue to move forward, I know we'll be covering more with that. But again, a consideration of restoring that funding would be very helpful to our budget. We've done a lot to make sure we've been very respectful and not overburdening our systems with testing. One of the things since taking office, you'll find that we've had the largest reduction of mandated testing in our state's history. Prior to coming on board, we were about to step into something we call the student learning objectives or the SLOs, in which every single course would have been tested by every single student. So again, trying to make sure that what we are measuring is appropriate. It is what we want to focus on. And again, really, as we begin to think about this, we are talking about literacy. We are talking about numeracy. Those are our two primary focal points within education. And so we look forward to having that discussion. At this time, I'm going to turn this over to Russ Grome, our Chief Financial Officer, and to go a little bit more in detail with the budget itself. Russ?
Thank you, Chairman Tillery, Chairman Hatchett, for the opportunity to speak here today. And I'd also like to echo the superintendent, and we are very thankful for this budget. It is a very pro-education budget. We know our districts are very thankful as well. Oh, wrong way. There we go. When we were back here in December, I hit these slides, these first couple slides, but I want to briefly reiterate them because this is the largest factor in the one of the largest expenditures for the state, which is QBE. This is our full-time equivalent students, which are our FTE counts that we do. These are obtained using the student counts from our March and October. They records the actual class that the students are attending in the 6 segments of the school day. There are 18 different QBE programs. Each of these QBE are weighted differently, and which in essence means they cost differently. This next slide shows the QBE FTEs from FY18 to amended fiscal year 2024. This is a very important slide because as you can see, in 2021, we lost about 36,000 FTEs due to COVID. 2022, we had about a third of those students come back. And in 2023, another third came back. However, in 2024, we actually had a relatively flat growth with about 785 FTE increase. Our next slide shows the FTE changes from our initial FY24 to the amended fiscal year 24. As I said on the previous slide, the 785 FTE growth was relatively small. However, as you'll see later in the amended 24 budget and the FY 25 budget, there is some enrollment growth. And a lot of that focus around when you look at some of these percentage changes, while we did see decreases in our kindergarten, our middle school and high school, there were increases in some of our more expensive categories such as EIP, special ed, gifted, and ESOL. All right, let's talk about our FY 24 amended budget. Overall, the QBE midterm adjustment for growth was about 124 million. This was about $40 million based on hold harmless, and then another $80 million was based on the higher costing FTEs. We had about 8 new charter schools along with growth. This is where you'll see the increase in the state charter school supplement of about $33 million. As you know, the state charter school supplement provides grant funds to state charters to fill in their lack of tax collecting ability. With each new state charter school, funds are added for this purpose. Next up on the slide, you'll notice the $9 million, which is our special needs scholarship. This is a formula based on actual expenditures. So our first 2 quarter payments have gone out, and we estimated a shortage of about $9 million. So we're very thankful that the governor put this money back in or enhanced this funds. Therefore, we can fulfill this obligation. All right, as you'll see in the budget document for the FY 24 amended, sprinkled out throughout the programs, you'll see various $1,000 supplements for state employees, $1,000 retention supplements. That they're in all the programs, but in the QBE program, you'll notice a big number of $190 million. This is $1,000 for every full-time benefit eligible employee. This is determined by, we determined this funding amount by the number of earned positions in our QBE earnings formula. It included custodians, bus drivers, nutrition employees, nurses. It also provided for formula earned positions for CTAE, RESA, GNETs, and preschool with disabilities programs. Now, since when the governor made this announcement, some of the districts had already run their payroll and some were home for the holidays. So we did ask that all eligible staff receive their supplements by 1/31/2024. All right, now the FY 25 budget. In our FY 25 budget, you'll see a $2,500 pay raise. This is effective September 1st, 2024. This is about $367 million, and this does increase our base teacher salary from $41,092 to $43,592 in FY 2025. You'll see the enrollment growth, which is about $256 million. This is primarily the FTE growth that we noted earlier on the FTE slides. You're going to see health insurance rate an increase to $1,760 per member per month, which was a cost about $242 million. We had a teacher retirement system increase of 19.98% to 20.78%. This was about $67 million. The state charter school supplement, an increase of about $50 million, which was also related to those 8 new charter schools. And our equalization formula increased about $267 million. Now, based on the digest, our FY 25 equalization is calculated to be a little bit over $1 billion. With our equalization, this calculates relative system need and the amount of the state match. Wealth is depicted by a local digest. The need is illustrated by dividing the digest by the FTEs. We then equalize school systems with low local per FTE earnings to the state average. All right, some other program changes you'll note through our budget is the 4% COLA for state employees with a $3,000 cap. This is about $2 million. We had supplements for custodians of $1,000. We got our sparsity grant, new school nutrition formula increase, preschool disabilities, school nurses, state schools, and our CTAE programs, all to reflect the $2,500 pay raise or 4.1% increase. Also in our FY25 budget are some of our literacy supports. You'll notice $1.5 million for dyslexia screeners. If you'll note, I believe it was in 23, we got about $3.5 million. So this puts it about a little over $5 million for dyslexia screening pursuant to Senate Bill 48, which was in the 2019 session. We also got universal reading screener, $5 million from the 2023 session, Senate Bill 538. And we also got funding for tiered literacy coaching of about $6.3 million. This tiered literacy coaching is regional structured literacy coaches and stipends for literacy coordinators based in the science of reading. At this next slide in here to note basically that we believe Georgia can follow a similar path to the significant literacy gains, but it's essential that its work includes a tiered and targeted statewide coaching model. In a joint op-ed by Superintendent Woods and former Superintendent Dr. Carrie Wright of Mississippi, Dr. Wright stated that Georgia can increase literacy progress by investing in tiered statewide coaching model. This next slide, we wanted to note kind of some of where we're at with the literacy professional learning in Georgia Academy. The Early Literacy Act, which is in Senate Bill 538. This bill ensures instructional materials, professional learning, and teacher preparation and programs will be aligned to the science of reading. The Georgia Literacy Academy, launched this fall by the Georgia Department of Education, the Rawlings Center, will provide virtual literacy professional learning for K-5 teachers and leaders statewide. I'd also like to note within the first month of opening this academy, we had over 2,700 teachers enroll. This next slide, as I was saying earlier with the Georgia Literacy Act, this kind of shows where we're at to date. The Georgia Department of Education to date has met all the requirements and is on track to meet all the statutory requirements within the act. As you can see, the high quality instructional materials has been completed. Universal screeners has been completed. The universal screeners approved by the state board has been completed. And the universal screeners published list has been completed. And we're on track for the free universal screeners and administrative screeners, which is slated to be done by August 1st, 2024. Also in our budget is pupil transportation, as the superintendent noted. This is an increase to reflect updated bus counts and operational costs. This is a $205 million increase to our budget. Some of the operational costs that can be funded with this are drug testing, bus insurance, driver benefits, operations. This brings the total pupil transportation funding to approximately $353 million. I wanted to note some of the current challenges that we meet with the transportation funding, which is why this $205 million is so important to our districts. One of the challenges is increased driver needs. For example, System A has been funded for about 18 drivers since the early 2000s. Due to growth, the system in 2023 has about 48 drivers. The funding has not matched the growth in our districts. Also, fluctuating and changing prices that have had a significant impact on our districts. For example, diesel jumped at one point 33% in just 5 weeks. Large and immediate price increases for steel, rebar, tubing, et cetera, have all increased. So this additional FY25 funding will allow the state's increase in transportation support to be from approximately 15% to about 40% of what districts are spending. Next up is we're very thankful for the FY25 budget to add the school security grants. It's a new program within the Department of Education budget. This establishes $104 million. These amount to approximately $45,000 per school. One of the significant things with this funding is that is line item funding, which will allow schools to better plan and stabilize security measures. The current challenges with the funding, I believe, is in amended fiscal year 23. Districts receive some funding, and this previous school grant was greatly appreciated and filled needs such as alert systems, access controls, window film, security cameras, and safety lighting, security-related training costs, stop the bleed kits. This one-time funding of allowable expenditures to security solutions with immediate or short-term payoffs. Ineligible purchases included critical items like vehicles and personal services costs. This new funding, the FY25 proposed school security funding, will allow for line item funding in the annual budget, which will support sustainable and long-term security needs. In addition, schools will have the same purchasing allowability as the previous security grants, but be able to incorporate needed security measures such as recurring costs like salaries for school source resource officers. This next slide just has some additional FY25 concerns, which I'll be talking to both the House and Senate budget offices in the near future. Our PSAT and our AP exams, based on prior years, we had utilized some ESSER funding to cover some shortages in these programs, but that funding has it's run out. We are looking at about a $280,000 deficit in PSAT and about a $521,000 deficit in our AP classes, and we'll need those funds in order to support the obligations. Thank you.
Thank you, Superintendent Woods and main man, Chairman Hickman.
Yeah, thank you, sir. I'd just more or less like to make some statements. I'd like to use a statement that the governor used us earlier last week, said, there is no next year on this literacy, as y'all will know. We're behind and y'all doing a great job helping us catch up. But, my concern, Superintendent Woods, is not the top 1/3, it's the middle 1/3 and the bottom 1/3 that we're really concentrate on. And I think that's what, if we go back to 2013, our literacy rates were higher in 2013 than they were in 2019. And then, of course, we had the pandemic. So that's why there's such a big focus on this, and I appreciate it. But a couple of things I'd like to mention to you is about the screeners. I know the screeners 538 requires them 3 times a year, K-3 to be tested and all. I think y'all have identified about 15 or 16 different possible screeners to use. I don't think that we can really measure different parts of Georgia with that many different screeners. I know that the Deal Center looked at these screeners, and I think they maybe narrowed it down to about 5 screeners to use. And I would appreciate if y'all would look a little bit further into that. The second thing I'd like to mention is about the literacy coaches. I think that is a huge impact for all of us, all of our school districts in Georgia. And I know in the article I saw up there a few minutes ago, when you and Dr. Wright, you mentioned there's about 300 literacy coaches in Georgia. I did a poll over the weekend of my first district, RESA, and out of 18 school districts, 14 of them responded back to my poll, and only one of those districts actually had a literacy coach. So my personal thing, I need to know where those other 299 coaches are in Georgia, because they're not in my district, they're not in my area. So I think that we need to look further at the universal screeners, and we need to pay more attention to the coaches. And what I'm going to suggest also is that sometime in the next week or so, I'd like for y'all to come to a joint committee meeting with Senator Dixon and myself and kind of do a more detailed overall as to where we are in 538. Thank you.
We'll be glad to. Yes, sir.
Chairman Dixon.
Thank you, Mr. Chairman. If I might ask 2 questions, if that's okay. I'm very interested in understanding if our local school systems are performing to the standards that we expect. The first question I've got, for example, under your watch, 3rd grade reading scores have been stagnant for the past 12 years, depending on what measurement you use. A majority of our students are not reading at grade level, and the focus on literacy only started with action from the General Assembly last year. Just want to know why. And then the second question is the single score CCRPE measurement that you changed to 4 different scores recently. I think that makes it harder for us to understand how our schools are doing. Just would like for you to update this committee to the changes to this and how you provide oversight on the lower performing schools.
Okay. Well, I guess, Senator, I would say that since day one, stepping on board, literacy has been something I've been very intentional about. One of the things we looked at, as I shared across the board, is that when I came on, we had adopted something called Common Core Standards. That was something that I knew it was just bad. It was bad legislation. It was bad standards. It did not achieve what we wanted to. And that has been an ongoing 9-year process in which I've had to, I guess, battle to get the current standards that we have right now. Our current standards, I'm proud to say, is based on science of reading, which again, previous standards were not. Also, it has a foundational piece, a K-5 foundational piece, which our previous standards did not. And that was something, again, I objected to, but until I was actually able to have votes in which we could move forward my proposal with the Board of Education, that is what Georgia had. So, I think that's one of the things we have to understand. This is what we expect our students to learn. And it was also, I think I would even say this is on math. So when I'm talking about school improvement and student improvement, it is just not with literacy. I think math is extremely important. And probably I would say that as I came on board, math is what I heard across the state. There was a lot of concern about that, and we, addressed those concerns. And so, I feel that we are where we need to be. We have a metric that, using the Lexile, which I think is very fair. When you look at some of the things that perhaps are saying are students where they need to be, I think everyone would agree, no, we are not where we need to be, but I do believe we have the processes in place. I think we had the team in place now, because to be honest, what I inherited was not something that was conducive to move forward. When you look at the CCRPI or College and Career Readiness Index, one of the things we look at that I think that in the past has always been just a blanket one rating. But what I've instructed the staff to do is look and see if we can do better. We always consider the CCRPI as our report card. Well, any report card I've seen, definitely has multiple measures that I can look at. It's very clear, very clean. And the new CCRPI model that we're looking at is actually more transparent than what we have had. Its design is to make sure that our districts can, look at the information and make appropriate changes to a child's performance and improve as we continue to move forward. So, I think that as we look at that, this has been kind of an ongoing issue, but I can assure you, things are in place now that I feel very confident about where we are as a state. The changes that have made, the standards, once again, are something that I'm very pleased with. And we're able to move forward both in literacy and in numeracy as well.
Thank you, Superintendent Woods. Could you send me or send this committee a list of the 25%, the lowest percent schools, the performing schools?
Sure.
Thank you very much.
We've had a list come out, so we'll be able to provide that for you.
Thank you.
All right, y'all, there's like 15 lights blinking lit up. We're not going to get everybody. So Chairman Petrie.
Thank you, Mr. Chairman. Superintendent, my understanding is our teachers are the highest paid on average in the southeastern United States. Can you speak to that, the accuracy of that, and where we stand in relation to the southeast?
Again, I know within the past, and if this budget is adopted, that'll be close to a $10,000 increase. Since Governor Kemp, pardon. 95, we're right at 9,500. So, but as far as where do we rank within the southeast, I would have to, confirm that. So I don't have that information off the top of my head.
Can y'all do that for us?
Sure, we can be glad to.
Chairman Watson.
Thank you, Mr. Chairman. Superintendent Woods, thank you for being here. We certainly do appreciate you being here and answering questions. So the governor put in $104 million for school security grant program. There have been deranged individuals around the nation that have used our schools as soft targets. How can we be sure as appropriators that this goes to the schools and are used for what I think are important, the school resource officer salary? I think it's about $45,000. That will be for each school.
across the state if you break that $104 million down?
Yes, sir.
And if you use that money for school resource officers, which I think we should, are they certified, or if they are, can you just give me some background information on that?
Well, typically, when we have school resource officers, in many cases, unless a school system has its own police force, then they typically work through the local, either, I guess, sheriff's department or local police department. So by and large, they are certified as far as being, I guess, law enforcement credentialed individuals across the state. Prior to this, if I'm not mistaken, Russ, you might could help me out. Typically what we have found, we have not had funding to enhance or give us the ability to put that into salaries. I know with some of the safety grants in the past, that has been somewhat of a limitation with that. So this will be something, that I'm very pleased with. It is something that our districts can look at. One of the things that we have worked with GMA and Homeland Security is to really credential our schools, to look at and identifying schools as far as best practices when it comes to school safety. So that is something that they, report out, and we work with GMA to receive those reports. We make sure that drills are being done and performed. So, I think that you can be assured that we are addressing as much as we possibly can to make sure that districts and schools are performing and have a high level of readiness. When you look at districts as well, and in my experience, especially during the past, there are some issues where you look at trying to retrofit older schools is definitely more problematic. A lot of them definitely have more glass, they have more access and more open access. So again, trying to make sure those areas are secure as possible. One of the things we have seen is just trying to put some shatterproof film on top of some of this glass, and that, definitely is very expensive. So with our districts, this $45 or $45,000 per school, again, does allow for the hiring of school resource officers where they may not be present, or at least not having a full-time individual, but also I think comprehensively looking at districts and schools, what is their level of readiness now? One of the things I find out is just entryways, especially in the front office area. A lot of retrofitting has gone in to create somewhat of a safe barrier. So construction costs may be part of the issue. We are working with our construction team to make sure that any new schools that are being built actually has a level of school or safety requirements, for construction. So it is ongoing, it is comprehensive. This money will allow districts to, or schools perhaps to potentially fund, a full-time school resource officer that would remain on site. Instead of in some areas, I know that for some of your schools, they actually are shared throughout various campuses. So, we appreciate the governor and again, his support and your continuing support of this effort.
Superintendent Woods, I'm beginning to think you're an elected official with the length of your responses.
I will try.
Chairman Houston. Chairman Houston.
Thank you, Mr. Chairman. Thank you, Superintendent Woods. I have had the privilege of serving on the advisory board of the Atlanta Speech School, and I want to commend you for partnering with Rollins School of Learning and Literacy. And it is my understanding y'all had a pilot program with one of the schools in Marietta or Cobb County. Is that right, Ron?
I believe so. We've done some work with Marietta City and the Rollins Center. So there's a good collaboration.
And I think the results were astonishing. And the report that I got, not only did they increase in reading, but also what they increased in was the number of children that they had behavioral problems with. So there's a lot more to it than just teaching literacy. And thank you for partnering with the Rollins School. I think people are going to be amazed at the difference we're going to see.
Yeah, we are very excited. Again, when you looked at the Literacy Academy that we mentioned, again, we're looking at training all K3 teachers. But I would say that with the Literacy Academy as well, this is being extended to K5. Reading doesn't stop at third grade. It continues on. We hope to be able to extend this even up to 6 through 8 as well, and beyond into high school. So we're very excited about the partnership there. I think with the tiered leadership or the tiered coaching model that we're looking at putting in place in conjunction with working with the Rollins Center, we're going to see some amazing growth, for our kids.
All right. Thank you so much.
Okay, thank you.
Whip Robertson.
Thank you, Mr. Chairman. Superintendent, I've heard in your presentation that a portion of the 205 will be used for benefits for bus drivers and for transportation workers. What benefits are you just are talking about in there? And has your department, have y'all created a matrix, or have y'all done a comprehensive study of bus drivers throughout the state to determine if we have some, especially down in South Georgia, as far as salaries falling beneath, where we can continue to hire bus drivers?
Yes, sir. Well, I think if I'm not mistaken, Russ, our bus drivers are not on a state scale, so it would vary from local district to district. So that continues to be an issue. I think that since I would say the pandemic, as I have traveled throughout the state, I don't care where I go, the hiring of bus drivers is a major concern throughout. We lost a lot of individuals, again, just because of age and nutrition, but that is something we hope we can adjust. And one of the recommendations that we did have is maybe trying to look at our non-certified people and trying to give them a base salary scale as well.
So would that answer, what level of control do you have over bus driver salaries throughout the state?
None as far as my
So,
agency. Yes, sir.
we're sending money down there and trusting the local school districts to hire bus drivers that are transporting our children back and forth to school every day. Would that be a good enough answer?
Yeah, well, they hire, yes.
Yeah,
Or,
thank you.
Russ?
Yeah, I was going to say, in addition to the hiring, those funds go towards operational costs. So as far as tending training. I'm sorry. In addition to the salaries, those funds go to operational costs. We're increasing the available funds that those school has for operations.
I understand the operational side, and you can have the absolute best buses in the United States of America, but if you don't have well-compensated men and women who care about the children on the bus and they can transport them safely back and forth to school, it doesn't matter what your operational budget is. Thank you.
All right, we're going to take two more questions, and then Chairman Tillery has a question. Leader Beverly.
Thank you, Mr. Chairman. My question is two parts. The first one is on the AP courses that you mentioned earlier. As an additional $800,000 that's going to go to AP courses. Is there a movement to standardize AP courses around the state of Georgia? Because in Gwinnett, they may get certain amounts, and Macon may get certain. But is there a movement to standardize AP courses that kids are getting in school?
Well, once again, I think looking at the funding, that always continues to be the issue with a large district like Gwinnett. Definitely, they have more funding, more resources they can put towards the AP because we're looking at QBE and how can we establish a course. It's not the lack or desire to, but if it has to come down to what our school districts are, able to put into place, because if they do not acquire the QBE funding, then that means any AP course would probably would have to come through local funding as resources as well. I think Russ, anything?
That's good. That's good enough.
Okay.
Thanks a lot. Because I know we're at a
Sure.
time crunch. So
Okay.
I'm gonna go to my second question, which is about kids who are in poverty in the state of Georgia. 1 in 5 kids are in poverty in the state of Georgia, and there's no money in the budget that you just presented that suggests that we're going to do additional services for those kids. There's a ton of research out there that says if you just increase 21% per pupil in the money that we fund, we could eliminate the achievement gap that we have in schools. But I hadn't seen that in your presentation, that we're not talking about opportunity weights that the state could address right now for those 1 in 5 kids who are in poverty. Is that something that you guys are considering to do?
Yes, sir. I think when we looked at my priorities list this year that was released, one of the things looking at some type of weighted formula as far as it in regards to poverty. So it is something we are aware of. Currently, right now, that most of the addressment would probably come through our federal funding with Title I schools and supports through our federal programs as well.
Representative Ballard.
Yes, thank you so much, Mr. Chairman. Thank you, Superintendent, for coming. I want to add and echo Senator Hickman's comments about the screeners. I really do think that we need to limit those to the ones that have been vetted by the Deal Center. But I do have a question about teacher salary, and I heard y'all say the base salary for teachers in Georgia, but what's the average teacher salary? Do we have those numbers?
Yeah, well, I would have to check again, depending on, I mean, right now, depending on the years of service, that
Okay.
would kind of skew it. So,
Okay, thank you.
Thank you, Superintendent. I can answer a few of those questions. I think your average teacher salary now is depending on which statistic you look at, north of 61. You're the highest in the Southeast. Georgia's statistics show it's between 65 and 69,000. My questions though are related to some of the things we've already touched, and I think I need to defend the legislature on one topic. On literacy, we asked you in November, do y'all have a plan to please bring a plan back to us before this joint meeting? I haven't seen anything besides this budget, so should I understand that this budget is the department's plan for literacy?
it is part of the comprehensive plan. Yes, sir. If you like, I can definitely forward you more information on that and the plan itself.
Yes, sir. I asked for it to be here before this joint hearing today back in November. So I would like that. Yes, sir.
Sure. I'll be glad to, sir.
The second is on testing. You made a comment. I appreciate, Russ, you're excellent on your numbers about the PSAT and the AP test. As the legislature has reduced testing funding, we have specifically stayed away from those two areas for the past since 2020. So I don't understand how we have the gap there unless there's spending that's been on other tests that we were asking to be eliminated based on the fact that you've already told us that we have eliminated, I believe, 1/3 of standardized tests now. So we've specifically excluded those in the budget.
Yes, sir. And we did not cut them. The PSAT and AP is how many students take the exam. So we've had an increased need. The base budget is still the same for PSAT and AP. These additional costs are more kids taking the test.
Okay. And so I'll highlight this number for you, just as I got that. We'll look at those figures more.
Yes,
but that $7.1 million increase in testing is roughly a 33% increase in state funds at the same time while we're reducing the total number of standardized tests. So we may need to dig into that a little bit further.
Yes, sir. Yeah, we can provide.
Wanted to defend the legislature on the PSAT and the AP line items. The last comment is, can you briefly, we've had a lot of comments lately, heard from superintendents about the $1,000 raise that the governor announced last month. There have been some comments from superintendents that the legislature shorted them or the governor shorted them. I don't think that's fair at all. Can you briefly go over how that shortfall may exist, or if you want to, I will.
Well, at this time, again, I have not seen anything as far as there was a shortfall. The money was allocated, and again, to our expectation, which I've had, I would say at least during December, there was one system that wanted to get creative, and I made a very firm stance that, what the intent of the governor was and how the money was to be allocated. Now, I think within some, as Russ said, the distribution was a little bit problematic, is that within some of the districts, they had already perhaps given both December and a January check as the staff was out. But, the expectation is what it is. It's very definitive about who is to receive that money. And we are following up on any leads and any discretion which districts are, putting forward. But I assure you, we are getting emails and we are following through with the concerns that are out there. The expectation is we are going to do what the governor expects.
Thank you.
Thank you, Superintendent Woods. There are quite a few members that did not get to ask questions. If those of you who had questions, if you want to meet with Superintendent Woods outside or Superintendent Woods, I will strongly encourage that we're here for the next about 3 months. It seems like there's a lot of people that have questions, and I'd love to see you around.
Okay, we are
Thank you.
always around, and we will be here if you need. Thank you.
Thank you. Next up is Chancellor Perdue. Sorry, we're already behind, but head this way, sir.
Andrew. Forward. Yes, sir. Okay. Forward. I'll be in the back.
All right, y'all, please, let's make this transition quick, please.
Also, it's very apparent that the room is full. So if there is a desk beside you, if you would point out to your colleagues that maybe are looking for a seat, where those are.
Are you saying you're gonna leave, Representative Williams?
Are you saying, are you calling him an empty suit? That's dangerous now. That's dangerous. Okay.
Thank you very much.
All righty. If you don't mind going ahead and please ceasing your conversations. Chancellor Perdue, thank you for being here.
Well, good morning, and Chairman Tillery, Chairman Hatchett, and all you members, Happy New Year. Good morning. Boy, it's good to see y'all. Missed you so much. Glad to have you back. We're happy and appreciate the opportunity to discuss our budget request for the university system here today. And today I really want to focus on really two issues I think that are important to you all and all Georgians. That's accountability and transparency, essentially equaling value in our university system, including the work we've been doing over the past year to improve in those critical areas that we look ahead for the next year. So I want to begin by thanking you all, Governor Kemp and others, for the investment that you make and the support you've had for higher education in Georgia and helping us to build a highly skilled workforce. You know, $300 million recommendation for FY 25, including operating capital and operating budget, $542 million recommended for the amended FY 24. That helps us provide the value to Georgia and to our students and families, supports our goals of affordability, efficiency, and degree attainment. So some questions, and we see these questions nationally, accountability, value. So here to talk about some facts and have a good conversation with you and answer your questions today. Here is a good quick reminder about our impact on Georgia, employing about 48,000 full-time staff and faculty at 26 public institutions across the state, a statewide economic impact of over $20 billion. Since 2011, what we're really interested in, a 37% increase in degree awards. That includes more than 75,200 degrees awarded this past fiscal year alone, the most in our history. And we stress completing a degree because that's really the ticket. And there's a direct link between education, economic development, and quality of life. I think like most of you, I'm kind of a facts guy. I like data, and the facts show that USG bachelor's degree holders are going to make over a career about $1 million more than a high school graduate. That's not everybody, but that's the average, and that's what the facts say over their lifetime. You may remember this slide from last year. We shared it with you as a visual statement of our principles that way. The funding this body provides to the university system helps us to provide value to Georgia, to our students, and to our families, and it supports those goals of affordability, efficiency, and degree attainment. Education, as we all know, is life-changing. We literally can change the trajectory of a family tree for the future with a higher education degree. That's the business that we're in, and I'm a firm believer that higher education changes lives. In his address last week, Governor Kemp talked about reaching even more Georgians and helping those who may be on the fence about college or who think it's out of reach. We know about 40% of our high school graduates in Georgia don't go straight to college. For 2021, that included more than 43,700 high school graduates. The launch of the Georgia Match program, hopefully you're familiar with it, was our effort to reach out to these students and indicate, sending them the data. You know, young people understand about money, career earnings, although
There's some point to instant gratification. They want that $20 an hour job right now, but over a career, it makes a difference. And that's why we're trying to reach out the largest direct college admissions program in the nation. And it's already making a difference in that way. Through the program, USG alone has received more than 13,000 requests for information, while 17,000 students have already claimed their spot, generating more than 10,000 applications and more than 7,000 students admitted through the match program. So we're going to make a difference in those lives. These may have been the students that someone back in their career in middle school maybe that said, you're not college material. This says you can go to college and you can be successful. You can get a degree and change the trajectory of your life. That's the purpose. That's why we're doing that. You know, Governor Kemp talks about Georgia for 10 years in a row. We brag on the fact that we're being the best state in the nation to do business in, which in turns makes us the best state to live in and raise your family. Well, we want to make it the best state to get higher education in as well. That's our goal. And you see that good, better, best. That's what we're serious about that. So I call it the virtuous cycle of economic development. I first learned this, I told you last year, from Governor Zell Miller, that saw the confluence of economic development and education, the talent flow, the skill flow that comes in our state makes a difference. Higher education, how businesses are looking for graduates, looking for talent flow that provide the best opportunity for Georgia to be successful in the future. So it's about providing that value and focusing on being the best is where we want to be. We know that state funding is critical in helping us provide an affordable foundation for our students and for growing programs in areas this state needs, like education, cutting edge technology, agriculture, nursing, those programs. Accountability is also important too. That's why as the public investors in this system, we owe you honest answers, transparent answers, and accountability to you as you represent your constituents, the taxpayers of this state. So I want to talk about our goals and priorities that center around our accountability, as well as transparency, quality, and affordability. And I hope you'll avail yourself of these tools that we have publicly available now. In a moment, I'm going to share some examples of how we're making much greater use of data in our decision-making, including metrics and dashboards to help track our progress and see what we're doing well and where we can do better in that regard. We've continued to expand our Georgia Degrees Pay program. It's a website to put important details for students and parents about the cost to attend college, the value of that degree program, the potential earnings in the workforce right at the fingertips of our students, families, and all Georgians. This is good information. If you had a junior or senior in high school now, you know the anxiety that creates with what their future is going to be and how they make those decisions. This is a helpful tool for them. Since last year, we've increased the amount of data available and continue to work on it even more accessible and more valuable. We've also revamped how we approach institutional budget hearings. This has been an interesting experience with our presidents, really talking less about narrative and more about the money, where it comes from, that you all appropriate, how we expend it, and how we can be more efficient in the utilization of those funds that you appropriate. So it's a different kind of budget hearing for our presidents, but they're responding and understanding more about the operational details of their institution and how they can impact its efficiency as well. By examining the data, we can see how sources change over time, as well as how funds are being used across both functional areas: instruction, research, academic student support, plan operations, all those things that are required in a university environment. Natural clarifications, salaries, utilities, supplies, maintenance, those kinds of expenditures. We're also looking at staffing areas, levels across functional areas, and how these levels have changed over time in response to changes in enrollment and efficiency. We're also doing something that makes them a little uncomfortable among the presidents. We're comparing different colleges and universities to see how they match up with their peers and to be available to them, so they can see some of their peers doing really well in some areas. Then they can find out what they're doing, and then they can tell others how they're doing in some of their areas. So why does it matter? Because we want to be good efficient users of the funds, the taxpayers' funds that you all appropriate to us. We're studying fixed costs and trends in higher education are spending their funds to address priorities and the needs of students. We're going to use this data to build more dashboards and show comparative budgets among our institutions, as I indicated. Institutions can then better learn how to operate. Another one operates, and while USG improves our ability to determine best practices in operating as efficiently as possible. Let me just show you some examples. And I know when you look at slides, it's frustrating. I just want to show you an example. You're not going to be able to read all these as we go through quickly, but I just want you to see what the kinds of things that we're doing here. And if I go too quickly, please call and we'd be happy to walk you through this, where it's available and how you can see them as well and share more in-depth information. Here's an academic metrics dashboard from Kennesaw State University. This one shows how students have been changing their major earlier, which is a good thing, getting to the best place sooner rather than later. The median hours of number of hours earned before major changes have been dropping, helping better students keep track on graduation and lowering their cost to attend college. We want them to finish sooner, which is better for them and better for the system as well. So this is just one example of some of the metrics dashboards that we have. I'll show some more, but harnessing data like this, we're providing tools to institutions so they can see which courses students are struggling in. Then you drill down to analyze those certain courses and those certain professors maybe and subject areas to determine what the issue is, if there's an issue, and where the accountability can lie in that regard. This is amazing what you can learn. Here's the next couple of slides from our strategic planning process in 2029 for the strategic plan. You can find right on our website. The plan, which we just reviewed, allowed us to continue to focus on student success here, economic competitiveness, responsible stewardship, and community impact. That's what we think you hire us for to do, is to influence and make Georgia better through those 4 pillars of higher education. Because when our students succeed, Georgia succeeds. And responsible stewardship, that's value. That's using the money you gave us efficiently. We want to be economically competitive. And then obviously we want to impact our communities where all these 26 institutions are. The first slide shows we're on our goal to increase degree completion. You can see several of these metrics show good progress and a couple show an opportunity for us to improve. We don't see those also. We just think we've got a great Chamber of Commerce day out here, but we need to find out where we're falling behind so we can work on those areas and point them out specifically. Retention rates are up. Graduation rates for students pursuing bachelor degrees looks down, but it's actually a 0% change. You'll see the median earnings tab is a lower right-hand corner, says 2018 data, which reflects the latest federal data that's available. So we'll update when new data is available. This next slide measures our progress of ensuring affordability for students and being as efficient as we can with our resources to optimize efficiency across the state system. We've kept tuition, the regions have kept tuition flat for 6 of the past 8 years and have had modest increases to mandatory fees, housing, dining rates, which, as you see here, impacts the cost of attendance. We're very cognizant of that. The cost to operate any business, including higher education, you know, in your own personal and business budgets, that continues to rise. Need to acknowledge that institutions are facing increased costs due to inflationary pressures. I talked about that last year. We know that intuitively, but we've got the data that shows exactly what's happening. Across our system, utility costs are up over 20%, while utilization actually is down. And the food costs are higher. Competition for people puts pressure on salaries and wages. For example, in the fields of IT, accounting, legal, we're competing with top private companies. That's not anything new to you. You all face the same thing as your personal lives. Our housing and dining operations are competing with local retail operations in that way as well. So to counter that impact, as you can see, we've decreased operating expenditures, increased fundraising opportunities, and importantly, as I mentioned earlier, decrease students' time to degree completion. We launched Georgia Degrees Pay last year with the goal of providing a one-stop website to help students and families make decisions on college affordability and value. Along the way, we found a way to provide a lot of data that really allows them to take a deep dive in shopping for college and the payroll they're likely to see from their degrees using real-world results. This first slide compares the cost of attendance, including tuition and fees, as well as net price, including the average amount of scholarships and grants earned by students. This slide shows our time to degree cost calculator, which we made public as a public comparison tool. You can use it to see the financial implications of how long it takes to earn a degree for undergraduates, each of the system's 26 public colleges and universities. Finally, this last slide shows the median salary for USG graduates who live and work in Georgia and earn their bachelor degree in computer science. 10 years after graduation, those graduates are making almost average $116,000 a year, helping to make Georgia's economy stronger and growing their families' prosperity, and certainly getting social mobility of many of these first-generation students out of poverty and changing their whole trajectory of their family going forward. The progress and success that I've shown you with these slides is coming as the Board of Regents continues to emphasize affordability, quality, and value. As one of the top public university systems, we offer the 7th lowest tuition and fees in the country. Thanks to the leadership of our board for many years, they've not raised tuition in 6 of the last 8 years. Thanks to you all, the appropriators of the taxpayers' money, you all have helped us to actually reduce college costs in 2022 by eliminating that special mandatory institutional fee, saving students and families anywhere from $340 to over $1,000 annually for their attendance there. We could not have done that without the funding support of Governor Kemp and this body of legislators. So as you can see, among the 16 states that make up the Southern Regional Education Board, the University System of Georgia ranks 3rd lowest in undergraduate tuition and fees. We continue to concentrate on affordability and efficiency, but those priorities do not come at the expense of quality. Georgia is only one of 4 states with at least 2 public universities. That's Georgia Tech and University of Georgia, ranked in U.S. News and World Report's top 20 public colleges and universities. Georgia College State University, the designated liberal arts public university here in Georgia, earned its highest rankings in USG among regional universities in the South. #1 in business, #1 in computer science, #1 in nursing, 1 in psychology, among all the regional public universities in the South. So it's not just our flagships of Georgia and Georgia Tech. We've got others. University of North Georgia on the U.S. News regional list, ranked #1 on the best college for veterans, #1 for least debt, measures schools with students graduated carrying the lightest debt loads. That's important. Dalton State College prioritizes access to education, was recently #1 in the nation for student experience by the Wall Street Journal and the College Pulse. Fort Valley State University, one of our HBCUs, the #1 public historically Black college and university in Georgia for the 6th consecutive year, achieved the highest ranking in the state for social mobility among public regional universities. But most of all, we have not lost sight of the fact that students, no matter where in Georgia they come from or what they want to do, are our #1 customers. That's why you appropriate the money, and that's what our mission is. We're grateful to this committee and to the body as a whole of the General Assembly for your investment in the University System of Georgia, and we look forward to working with you again this session and answering any questions that you may have. And now I'd like to go to the budget specifically, to the numbers, and look at the recommendation for amended 24 and 25, if you'll allow me. These recommendations for amended fiscal 24 can be found on pages 314 to 317 in your budget book. We're summarizing them here, but I want to talk about several of them with you. As you can see here, the budget includes governor's recommendation of $88 million to support the sourcing of a new enterprise resource management system and to begin implementation. What's a enterprise resource management system? It's a cloud-based system that helps us coordinate. There are over 22 out of 26 different student-based systems, banner systems there that makes it very difficult. We have to do a lot of intensive movement of data between us to get these kind of data reports that we're giving. This would allow us to consolidate that. It's what most modern companies have moved to, is a consolidated enterprise resource system that's needed. The goal is pretty simple: have one simple unified platform for financials, human resources, and student account management for all 26 institutions. That's when you can really use data to move the needle for productivity and quality, going forward. The current system that we're using obviously is legacy, developed more than 20 years ago. The technical foundation for these aging systems become obsolete from programming and difficulty in finding people who know the code that was originally written there. They'll also allow us to improve the standardization of information across the system and improve reporting and data availability for decision-making, which is very much in line with my vision. So this, you'll find these funds in that 314 to 317. An additional $80 million to support major repair and rehabilitation. MRR funds are used to invest in the renewal and upkeep of existing facilities, infrastructure at every institution in the system. Again, allows us to address much of the backlog of capital maintenance and to update existing facilities, HVAC, roofs, all those things. You got a home, you understand those challenges that need to be continually worked on when you have the kind of square footage USG has. 1.2 million. This is important because one of the things we focused on in our institutions is doing away with some of the buildings that are not used, getting that square footage off of the formula and not having to continue fund buildings that we're not using. So you'll see $1.2 million providing funding for two needed demolitions, a vacant building at Valdosta State and at University of West Georgia. And that's important as well. We're continuing to look for you've funded demolitions in the past, and we're moving forward with that. And we want to continue in that regard. Again, $52 million for one-time pay that you all have already aware of, and was actually, we hope you'll approve that because the money's gone. It's that'd be hard to get back. $14.25 million for the Georgia Research Alliance. And I want to make a personal case for that. We saw these eminent scholars and the amount of money we're getting, multiple fold return on investment from the things we're putting in the Georgia Research Alliance. These eminent scholars bring millions of dollars to our state and to our universities, as well as the goodness of what universities ought to be doing is research. And so this is a great investment. I hope you'll see that well. And we kind of went through a low spot over the last few years, but Georgia Research Alliance is a worthy goal, and I would commend that to you in that regard. Again, $66 million. I think we're all familiar with that. The formula funds, we're very hopeful and hopeful these funds can be restored. We sent you last year a list of what happens with the individual institutions. We tried to mitigate that as much as possible, but it's frankly, honestly, very difficult to mitigate $66 million in that regard. Those funds are a vital component of the USG's budgets as state funding reductions over the years. That 10%, you remember, in the pre-COVID money, which was a wise fiscal move, still had not been restored. So that's this just added to that pressure in that area as our institutions face those rising operational costs that I shared with you earlier. The other, and here you see, is $827 million for Fort Valley State University to support the land grant match requirements. That's a federal required match. As I learned at Secretary of USDA, Georgia is one of the few states that's been very aggressive in matching those federal land grant funds, and we're proud of that, and we want to continue to do that. I know that we don't really talk a lot about reductions, but you can see a $2.6 million give back here. And then a 2.28 million in funding and was included in that. It was disregarded by the governor. The next slides reflect cash funded capital projects recommended by the governor in the amended budget. And these projects can be found on page 389 in the book. You see $50 million toward the design and construction of the medical school at University of Georgia. We've had a partnership there with MCG for about 12 years now. This is an authorization for the University of Georgia to pursue independent accreditation through the LCME licensing board for medical education as an independent system medical college there. You understand, I think you understand the physician gap we have in Georgia. UGA would be expected to raise private dollars to support the total cost of a facility. And why is there a need for that? I think we all know. You got physicians here in this body, and Georgia ranks dead last in the number of medical students per 100,000 population. That is 41 out of 41 states with public medical schools. And that's not a ranking that we want to lead. It is something that's desperately needed. I'm a big believer that Georgia will be the 5th largest state in the not too distant future. And we're going to only survive that if we have good medical care. That's just one of those quality of life issues that is needed here. And we've got a serious need for that. I know you all as representatives probably know these numbers better than I do. 89 out of Georgia's 159 counties are designated primary care health professional shortage areas. 9 counties have no doctor at all. 18 counties have no family medicine physician. 40 counties have no internist. 65 counties have no pediatrician. 82 counties have no OBGYN. 80 counties have no general surgeon. 73 counties have no emergency medical physician. Folks, Georgia can do better than that, and we need to do better than that. So I hope you'll look at that very seriously. $178 million, here's another medical profession to provide funding for the design, construction, and equipment for a dental school. There was a consultant report that recommended this last year, and this will be a expansion of the Dental College of Georgia that we're all proud of under the accreditation of the Augusta University to be located in Savannah at the Georgia Southern University campus there. And I think, again, I could go through all the reasons of why the need for that is as well. But Georgia ranks 46 out of 50 for general and advanced practice dental providers per 100,000 in the United States. Only, listen, this is not a list we want to be on, folks. Only Mississippi, Arkansas, Alabama, and Delaware rank below us. We can do better than that as well, and we need to. So I hope you will support those kind of medical professions as we go forward. $15.89 million for renovation repair at several of our B units, specifically the Marine Institute, Marine Extension, College of Agriculture, Environmental Science, Precision Agriculture. Those are all important to our #1 industry in Georgia. And I'll highlight some major items in the FY25 budget. That's your recommendations on page 318 to 323 for FY25. There are 3 statewide spread adjustments related to the cost of living adjustment, healthcare increases, and TRS. These line items are found within all 19 programs considered in the Board of Regents budget, but I'll address these for the agency as a whole rather than individually by program. $2.2 million for credit hour growth through the funding process. And then the next item is the state support from M&O funds for new academic square footage. The increase of 107,000 square feet generates about 659,000 in state funds. That's essential for plant operations. You can't build it and they will come. You build it and you got to keep it up in that way. You know that. $23 million to support increases in health care for active employees. Folks, I need to tell you, you know what the original bill on this was? Increase in healthcare for all of our employees and staff, $77 million. Our team went to work on it with plan design changes, and the increase is down to $23 million. Don't you like that way I said that? Down to $23 million now. So that's what it is. $8.3 million to reflect the change in the employer TRS employer rate. That was no control of us. It went from 19.98% to 20.78%. You're going to see that in other agencies as well, education agencies as well. $97.3 million to support a 4% cost of living adjustment, not to exceed $3,000. I need to point out, this is for all state-funded, full-time, benefit-eligible employees, and they all appreciate it, and we appreciate it on their behalf. But as you know, we've got approximately 15,000 positions that are funded by other sources of revenue, to include federal grants, sales and services, those kind of things that are not included. It will give challenges to some of our universities to find the funds to match the state increase in salaries in that regard. In the past and previous years, our institutions will need to determine how best to fund those for employees and other non-state funded sources. This could impact tuition and student fee levels. So $66 million reflects the permanent restoration of the reduction in formula funds previously discussed. So the total recommendation for FY21 is $197 million. And if you'll allow me, next I'll move to the capital budget and try to finish up so you can get to your questions in that regard. The slide will show that the governor's recommendations for capital for FY21 includes $108.8 million in support of capital projects. In this interest of time, I won't discuss these projects individually. I'd be happy to discuss with any of you individually, any or all of these projects. We'll provide additional details on each project as we go forward. So, Mr. Chairman, I want to thank you all for, again, your time and attention here. And this concludes our operating and capital budget recommendations. I want to thank Governor Kemp and you all from a committee perspective, and all your colleague members in the General Assembly for your continued support of higher education, university system of Georgia. When I talk to my colleagues around the country, they're really jealous and envious of Georgia and the investment that you all continue to make in higher education. I'm grateful for that as well. Mr. Chairman, I'll be happy to answer any questions from the committee.
Chancellor, I could say that we won't take questions and we get caught up, but I think all these lights would probably be upset with me if we did that. Chairman Hickman.
Mr. Chancellor, thank you for being here. I'd first of all like to thank you and your staff. Y'all allowed me to meet with 21 different college university presidents in the last 2 months. And what I learned very much is every one of them is very distinct, and every one of them reaches a different group of people in a different part of the state. And I was very impressed with that, and I very much support it. One thing that really stuck out to me in the business world, you know, we're always taught in the business world to, if something is not working, do away with it and find something that is working. And I think that what you have instilled in the college presidents across the state of Georgia is, if you got programs that are not working or underutilized, students are not going to, let's do away with those programs and let's find the programs that are actually are good for that part of the state. And I thank you for doing that. Now, my question to you is, last year, Lieutenant Governor Burt Jones sent you a letter requesting you to identify and report on the DEI stuff that was going on at the various colleges and universities. You did that, a very extensive report, and we appreciate that. Can you give us an update on that now?
Yes, sir. Well, those numbers obviously continue to evolve, really downward in that regard. The Board of Regents, again, last spring, passed policies dealing with that from a diversity of work thought process, more so than identity politics in that regard. And we're continuing to see campuses evolve in that way. We put it in our human resources as well over those kind of things. Our goal is to be welcoming to all students at every campus in that regard. That's the goal. And our presidents bought into that. They are moving personnel around to integrate them into student activities and the personnel and the human resources and others to make sure that we follow any particular laws going on, but to enable them to be a welcoming, hospitable environment for all of our students and as a team going forward. So I'm very impressed. We've held our presidents accountable. I speak to them on a regular basis about the progress they're making here. That's not to say you won't find some particular website or something like that. If you do, let us know. But I think we're making great progress in that regard.
Chairman Beach.
Chairman, Chancellor, great presentation, and thank you for providing us an educated workforce. I've been told that we are lacking in bioscience infrastructure such as wet lab space to compete with Boston and Silicon Valley. My question to you is what's our game plan to compete in the bioscience arena?
Actually, I think our data would support the fact that many of our universities are making great efforts in biosciences. And anyway, the relationship that you have with Georgia Tech and Emory and the University of Georgia and Georgia Tech, as well as Kennesaw and others, are providing great opportunities. So that's one of the things Chairman Hickman was talking about, is we look at the demand for the economy's changing, degrees are changing, skill sets are changing, bioscience is a growing number. I'd love for Georgia to be at the top of the list over health-related bioscience technology and research in that regard. And anytime a program comes up as a recommendation from our campus, those have been approved by the Board of Regents.
Thank
you. Chairman Billy Mitchell.
Thank you, Mr. Chairman and Senator, Governor, Secretary, Mr. Chancellor.
Come on, Billy. Come on, Billy. Come on.
You have a great story to tell, you really do. But, you know, what we do in Georgia, as in some states, we fund colleges based on prior year enrollment. And as a result, I agree with you, attaining a degree, student success should be paramount. However, some schools don't do as good a job of retaining students. What in your shop are the efforts to retain students? And the part B of that question is, because of that way we fund schools, there are some schools in Georgia which their enrollment the previous year was down, and therefore they can't be innovative. They in fact, it has the opposite effect. They have to eliminate services and staff. How does your shop address those issues?
Both of those are good points. The good news is I think we've turned, even looking at the enrollment cliff, which is a demographic cliff for high school graduates coming, I think we turned the corner on the post-pandemic COVID response there. We saw our most 22 of our 26 institutions had enrollment growth year over year this past fall, and that helps. As you know, there's a 2-year lag. That's been the challenge, obviously, the last 2 years in helping to really putting a lot of pressure on our budgets and our campuses in that regard because of the enrollment decline. But I think, again, some of those are down to the level. As far as helping these colleges with their retention overall, we've got a great example right here with Georgia State University with their retention model and the record they had over the last 10 or 15 years in that regard. The Institute of Student Success that they created out of there, Dr. Tim Rennick still running that. We are, again, trying to metastasize those projects and those aptitudes across our system. They're working with several of our campuses right now over things that lead to student success in that regard and helping our students become more successful. Retention, as you mentioned and you know, is a vital component of enrollment. It's just like we don't want them going through the transfer portal. We want them to stay and graduate, you know, that way. So, or just leave in that regard. We want them to finish. Retention is a huge part of that. They're fundamental kind of early indicators. What we learned from Georgia State, they're early indicators of students falling behind. If you get mitigated early on, you can recover those. Also, the fact that some of the issue is financial, and Georgia State did a great job with their Panther grants that way. Sometimes it's just a few $100 to $1,000 that can keep a student in there to finish their degree.
Thank you, Chancellor. We're going to close out with that, and I will just close with a request. I've sent several requests for some information to some of your great staff while you've been presenting, but I have a request that I hope you can get with our state health benefit plan administrators and figure out how we can reduce our insurance premiums like you're doing yours. So thank you.
Not touching that, Mr. Chairman. Thank you all very much. Thank
All right, next up is Commissioner Greg Dozier with Technical College System of Georgia.
As senators, I see a lot of you slipping out. After this meeting, I'm going to need to talk with each of you. And if you don't talk to me, please just grab Angela before you slide out the door.
I'm ready. Whenever you.
Commissioner, you're lucky not everybody left. I mean, that's good. You still have a good audience here. All right.
The only thing between them and lunch.
All right. Well, let's get started. Commissioner Dozier, the floor is yours.
Mr. Chairman, thank you so much, and pleasure to be here and good to see everybody this morning. We obviously know at TCSG, our mission is workforce. So as you look at this, growing a workforce for Georgia is what we're going to talk about. And when you look at our mission, it's very clear. We did a little slight change, and I always like to brag on the staff. We added that we want to recruit and grow a globally competitive workforce. I think in the past, we've often looked at when somebody showed up at one of our 22 colleges, it was our job to make sure they had the skill. But our college presidents, and you'll see that in enrollment, and our staff out there have really gone into recruiting, growing enrollment, making sure our workforce pipeline is there. And obviously our vision, we couldn't be more proud as you look at many times the governor talks about the mission of state government is to grow the prosperity of our citizens. And I couldn't have been more proud that our vision statement has that in that. It had it in it prior to hearing the governor state that, so that even makes it even more special. But the Technical College System of Georgia will enhance the economic opportunity and prosperity of Georgia's citizens. How do we do that? We obviously do that through skill set. We do that through our 5 pillars for growing the future pipeline. We do that through technical education, adult education, economic development, which is also customized training. A lot of times economic development's misheard from our standpoint, but that's where we do customized training for specific industries. We do it through our work source and our career services. That's the Wagner, Pizer, and the WIOA funding that we talk about. And we do it through our Quick Start program, our 5 pillars. When you look at that on a map, we have 22 colleges, 88 campuses, 35 career centers, and 3 Quick Start training facilities across this state. Breaking that up into how we serve, very, very proud. We touched 550,314 lives last year. When you look at that makeup, in adult education, we were able to serve 37,000 individuals. In economic development, we were able to serve 117. Quick Start, 62,000. Our technical education, over 136,000 individuals. And through WIOA and Employment Services, 196,000 customers. The real exciting story there is the growth. Last year when I met with you, we talked about we were coming out of the pandemic and we were seeing the numbers start coming back to our school system, our college system. Those numbers have become real. You'll hear this year's budget based on the technical education side of things, the funding based on a 3% growth in our funding formula. That's part of the story, but our current fall numbers that I'll show you in a minute tell the rest of the story of how it's growing. But for last year, when you look at this pie chart, adult education grew by 10%. Our customized training or economic development by 21%. Our quick start services by 18%. And our technical education, that credit side of the house, at 3.8%. What do those numbers look like? And we'll spend a lot of the rest of these slides on that specific tech ed because so much of our budget, the state appropriations, is tied to the technical education formula funding. Of our nearly $500 million budget, over $400 million is specifically tied to the funding formula related to serving students in tech ed. And so when you look at those numbers in tech ed, you see that we had that push up in 2020 right before the pandemic. We shared about the drop at the pandemic in 21, 22, and in 23, that's what we're here talking about is those enrollment numbers at 3%. But we're almost 10% growth in fall over fall this year. And our projected number for this coming year, that's why you see that dotted line, it's just projected at this point, is at 144,000. So we truly are out of that pandemic. At the end of this fiscal year, next year when we come back before you, we'll be looking at the numbers for the formula as it is with USG. It's a year behind on that funding formula, but we'll be back here talking about numbers that are higher than pre-pandemic. Very, very excited about that. Really, a lot of that success goes to our 22 college presidents, our faculty out there, going back to what is our mission is to recruit and grow and make sure that essential training is there. I also have to thank this body and the governor. Last year, we had an incredible budget. We appreciate that. We were very, very pleased, and you'll see that the monies that this body gave us for high demand areas went toward high demand areas, and the results are phenomenal. We had 35,000 graduates last year, over 60,000 awards, a 76% graduation rate, and our highest ever in-field placement rate of 91%, meaning if someone got something in welding, somebody got something in nursing, that's the actual occupation they went to work for. We also issued 8,149 associate degrees last year. When you look at the credit enrollment, it was up to 136,114, up 3.8% in head count. The formula is based on credit hours. Credit hours are right at 3%. So when I get to the budget in a minute, you may go, well, wait a minute, he said 3.8. This is head count. The actual number of credit hours was 3% up, and that's what we'll talk about on funding. In the high demand areas, though, the students are coming in and they're looking for that value certificate, that value career. 8.7% of our increase was in high demand. And for the first time in a long, long time since the Great Recession, we had 4 consecutive semesters of growth. Specifically, nursing went up 6.7%. CDL went up 24%. Automotive, 6.3%. Manufacturing, 3%. Cyber, 12.8%. And our law enforcement academies, 28.8% growth. Very phenomenal. So where are we today? That was your 3% growth for last year that ended. This is our fall over fall. So looking at just partial current year, fall over fall, which is our largest numbers, 9% enrollment growth, 9% in credit hours. Of that growth, 6% is in traditional students, 18% in dual enrollment. And in those numbers, just like last year where we saw 3% growth, but 8% was in high demand, we got 9% growth, but we're seeing 13% growth in the high demand areas. Matching some of those numbers we mentioned earlier, cyber's up 15% in this, manufacturing 13%, law enforcement 13%, nursing 11%, aviation 5%, and CDL another 4%. CDL is a funny one. That won't grow because as we add the students, that number continues to grow. So we're 4% over last year already at this point. So when you look at it year over year, it's an incredible story. And once again, we thank you for your support, both in what you do in your communities, but also in the appropriations process. Some of the statewide initiatives, you heard about Georgia Match. The governor launched that. We have high hopes and high expectations. Give you a feel for it. So far in the early stages of Georgia Match, we have gotten over 5,253 future students asking for information. Of that, we've had 3,600 save a spot. Just to remind you, a student can save a spot at 3 institutions. It can be one of ours, one of USG's. So they can save a spot at 3 of those. And we've seen applications come in for over 800 students. We're early into that, but we're seeing results on the Georgia Match and excited where it's going to lead. A couple of years ago, this body passed dual achievement. Thank you to former Chairman Lindsay. We've already enrolled that as 5 pilot high schools across our system. We've already had 76 graduates, folks that were not going to get a high school diploma that transferred to one of the 5 pilot high schools we have inside TCSG. We have had 76 graduates and over 625 enrolled in those 5 pilot high schools. Very excited about it. Micro-credentials. That's going to connect all of our pathways. I talked about those 5 pillars to begin with. A micro-credential is a non-credit little certificate. It doesn't count in any of our numbers for formula. It doesn't count in our numbers for awards. It doesn't count in our numbers for graduates. But it gives somebody come to us a sliver of something to put in their profile, LinkedIn, their resume, and they get a micro-credential saying they're good at a small part of the welding certificate. So it shows that they have learned a skill, but they haven't finished a program. We have issued over 25,000 of those at this point. It's early on. They'll continue to grow, but that'll connect across whether it's customized training, credit training in our technical edge, adult learners who are looking to further themselves economically and have greater prosperity in their career. It'll cut across all 5 of those pillars and really join us together. Very excited about it. We did something new this year. We did 3 regional business roundtables. We focused that on based on a lot of comments, but we could have done it in a multitude of areas. We did it in aviation, e-mobility, and nursing. As you know, all of our colleges have advisory boards to make sure that we're teaching what the skill is needed by the industry. But we wanted to have a global approach this summer, and we went across this state and we met in those 3 areas in 3 different regions for each area and heard from the industries to make sure we were matching the needs and really had a really good turnout on that. We're continuing to grow articulation. As you already know, we have 18 courses articulated with the Department of Education. So somebody's going through CTAE, they get a welding certificate while they're in high school through the CTAE program, they get college credit at TCSG. We had not done this before the pandemic. Those 18 have grown and they'll continue to grow. We continue to make sure that's a seamless pathway between us, K-12 and USG, and our privates. As you look at it, we have over 28, as you know, statewide articulation agreements, but we have many, many more local articulation agreements between the USG, our private colleges, and our colleges. Diving real quickly into the budget, Mr. Chairman, we very, very blessed this year and thankful for the governor's recommendation. Make sure I'm on the right page. I am. The AFY 2024 budget recommendation, which is on the governor's document at page 362. As we look at this, I thought we'd go through it through the columns. The first column, you see our base. That just gives you where our current funding is based on last year when we ended the appropriations process. The next column is simply the spread of the one-time $1,000 bonus that the governor gave us and we gave out in December for a total cost of $6.7 million across all of the programs that we have. The third column is our workload adjustments. The first item in there that you'll see in the amended budget is $10.25 million. That's the final cost of the completion of the Rivian training facility. Last year, this body and the governor signed the initial $46 million for design and construction. The $10 million is what was not included in that final number. $4.7 million is to go to our Quick Start program. As you look at Quick Start, we've been very blessed, and this money will go primarily toward renting of space to train our partners as well as trainers and developers. So as you look at that, some of the ones that we don't talk about that have been huge is SK On, Hanwha Q-Cells, all the suppliers that you're hearing that are coming for Hyundai and others. And so as you look at Quick Start's budget, this $4.7 million will go toward primarily providing training space, but also the trainers and developers to provide that training. The next item is a removal of 1.1 million. That's one of the items that was deferred in the governor's budget at the end of the year, and that's the tools for success that was put in for this body, and it's been being taken out of the budget. The next column is workforce expansion initiatives. Very, very excited about the first item. It's 19.5 million. That 19.5 million will be to renovate existing lab space and provide equipment for e-mobility and advanced manufacturing. Those locations are Chat Tech in the Ackworth campus, West Georgia Tech in the LaGrange campus, Central Georgia Tech in the Milledgeville campus. Breaking down that 19.5, it is 6.5 million per facility, 3 million for the renovation, and 3.5 million for the equipment. The next item is startup funds and equipment for what was put in the budget last year and deferred or vetoed, I believe, or deferred. It was the statewide regional healthcare project at $10,000. It's a quick start light process to actually focus in on healthcare across this state. You'll see in the big budget in a minute the funding for the 2 positions. So this is the startup and equipment. In the big budget, we'll talk about the funding for 2 positions that came from this body last year for a total of 19.5 million. Our budget item in the amended for capital outlay, which is on the next page, is 2 items. Augusta Technical College. We are, the governor recommended, and we hope to see in the budget, 5.5 million for a 12,500 square foot facility in McDuffie County. At the McDuffie County facility, we have a transportation, aviation, and supply chains logistics area, but we do not have CDL. So this 5.5 million will actually pay for the pad that we need to provide CDL training at that location, along with some other construction. The next item is 1 college and career academy at $3 million. And so that will kick off 1 more. Last year, just to remind you, we ended up with just 1 in the budget. This will add a second one in the amended budget this year. Looking at the big budget, FY25, the first column is our statewide changes. Just rattling those off, it's spread by program, but the COLA is 11.3 million for the 4% COLA, which is capped at $3,000. Just as the chancellor mentioned, just a reminder to this body, and it's always about 47% of our staff are non-state funded positions. So as we look at the 11.3, our colleges will be attempting to adjust and fund the 47% that are not included in this 11.3. TRS adjustments, 233,000, DOAS adjustments, 422,000, Georgia Technology Authority, 326,000, and merit system assessments of 151,000. The total amount of statewide adjustments, as you see at the bottom of that second column, is 12.4 million. Our workload adjustments, you'll see the first item is a removal of that one-time money for the Rivian training facility at 46 million. You'll see the continuation of the Quick Start money of 4.7 million that I mentioned in the amended. You'll see the continuation of the removal of the 1.1 million that was in the amended for the tools for success. And then you'll see the final part of the customized recruitment for the Hyundai project of 643,000. Last year, a little over 200,000 was put in based on the commitment of over 800,000. This is a remaining commitment by the state to provide customized recruitment for the Hyundai project. The next column I have mentioned, it is the 3% increase in credit hours based on our formula at 9.4 million. There's 2 components of that. So the first one is of the 9.4, 8.9 million is related to 53,000 additional credit hours in our formula. And the remaining amount of that is related to a square foot increase that you see there for 444,000. The last column has the first item of $5,000 related to Senate Bill 112. That's the accelerator pilot. That piece of legislation allows for third-party providers to train adult learners working on a high school diploma. So that's a piece of legislation this body is taking up, and assuming it passes this session, we'll have a $5 million implementation cost. The next item is our 3% request. We asked for additional campus police officers. Today, just to give you an idea, we have, once again, 22 college campuses, 22 colleges, 88 college campuses. We only have 97 officers. So if you think about that, we have 2 at system office. We have 20 police chiefs. When you subtract the leadership out of it, you only have 63 patrol officers. And so very, very thankful to the governor for adding this $1.8 million to hire 22 new campus police officers. In the budget document, you'll see that we are asked to use existing funds to equip these officers. The next item is a transfer to DOL. You'll see this $409,000 come out of our budget and go to the Department of Labor. And the last item on here is $322,000 for the 2 positions related to that quick start approach to healthcare that we worked with this body last year on. The last page of the presentation today and last item in our budget recommendation by the governor is the capital outlay recommendations. You'll see these in GISFIC's budget. I didn't mention that earlier, but they're cash funded, just as the governor mentioned in his presentation to you today. These items include equipment refresh of $5.4 million, the furniture, fixtures, and equipment for the Ogeechis Industrial Robotics Training Center at $3.5 million, a renovation, which is a phase 1 of Athens Technical College in the Walton campus. It's an old high school there. That's where Piedmont has actually partnered with us to increase our nursing. It's where we also have a lot of CNC, but we're also needing to increase that area for advanced manufacturing. This would renovate the field house, the welding lab, industrial systems, replace all the HVAC and many other things at $9.8 million. The next item is Southern Crescent Technical College. This is a renovation. It's $2.6 million, but just to follow the budget, there'll be a redirection of $4.5 million that was not used for a project at Southern Crescent for a total project here at $7.1 million. The next item is Wiregrass Technical College. It is a transportation logistics training center. This is a replacement of a 22-year-old modular building that's really out the CDL pad. And so we will be getting rid of that old modular facility, building a standalone facility there next to it for $8.9 million. So you can see it's not that big of a facility. Central Georgia Tech is a renovation in the Bibb County area for the trades and industry building. That basically is our welding, HVAC, manufacturing, robotics. There's many safety, ADA, and lighting issues for $17.5 million. Georgia Northwestern is a renovation for the Industrial Technologies facility. It hosts welding, precision manufacturing, advanced manufacturing at $16.9 million. And the final one is Lanier Tech, Building B Advanced Technology Renovation Center. It's also an advanced manufacturing facility, really focused on SK and Kubota at $6.7 million. The one thing I would like to point out is all of these projects you see before you are not a 3-year phase in as you've seen in the past. A lot of our big projects come in and we want to get the design money. We then ask for the construction money, and then we ask for the equipment money. Most of these, all 3 are in one. Several of them, we will have to come back and ask for equipment next year, which is a small item, but none of these have construction costs in the future. So I'm very excited about these costs, and for the most part, they're primarily one-time expenditures. Mr. Chairman, that concludes my presentation, and if we have time, I'll take some questions.
No, it's very nice of you, Commissioner.
I didn't mean it that way.
Several other questions have come up. We had 3 for a long time, but I do have one quick one. What's the status of the quick start construction for the Rivian and Hyundai facility?
The status of the training facility or their, yeah.
Where are we?
So we have, on both of those, we have actually identified the design team, and we are through the renderings, but we have not started the actual construction. The Rivian ones, near on my mind. We should start construction on it in March, and I'll be honest, I'm blank on what the date on Hyundai's is, but they're very similar on that timing.
Okay. Chairman Kirkpatrick.
Thank you, Mr. Chair. And thank you for a compelling story that you're telling. You may or may not know that today's Aviation Day at the Capitol. There are a lot of people from the aviation industry roaming around here. And I may have missed this, but we know that aviation and aerospace are evolving industries in Georgia that are big ticket industries. And I just wondered if there's anything new that you guys are working on moving into the future for that.
Yeah, we have been working very, very hard. I give Chairman Knight a lot of credit for keeping the focus on aviation in his committee, but very, very proud of our aviation program. We do have this body funded a new facility in Paulding County. That facility will be open up fall semester, which will be the largest one that TCSG has. And if memory serves me right, serve over about 300 to 350 students. That's off memory. But very, very excited about how that's moving in that direction. But we're seeing expansion in all of them. Yes.
Chairman Jaspers.
There we go. Thank you, Chairman Hatchett. Commissioner Dozier, of course, thank you for all that educators do for us across the state. It's got a question, I know we've been having issues hiring qualified teachers, especially in our high demand technical positions, and which just limits course offerings, especially from some of the satellite campuses. What have we done to address this the past year?
Yeah, great question and a real problem, Mr. Chairman. So thank you for asking. And that's been a one-off basis at each college, trying to make sure we manage. As you guys know, we have 6,000 full-time staff, but we have another 6,000 adjunct instructors. And so as you adjust one field, the other fields have to stay in balance to some degree. But we've been doing it one-off at each college to make sure we address it. Nursing's been one of those that we've had to increase salaries. We've done it in aviation, thanks to some money that was provided in aviation for those instructors. But we are having to address it at each college in different areas across that college.
Mr. Chairman, if I may, I thought you had talked about last year trying to use your foundation to try to supplement the salaries of some of these. How's that going?
Yes, sir. We're just not there yet, but great question. And you're exactly right. Yes, sir.
Chairman Newton.
Thank you, Mr. Chairman, and thank you for that presentation. The work you guys do is amazing across the state and all your coworkers. I did have a question because you mentioned it, I think in reference to Southern Crescent Technical College, that there was some money in this year's budget, but there was some carryover from funds that were approved last year. I know we had a similar project possibly in Columbia County that was like that was signed and approved or signed by the governor, but then no bond issued. Do those stay higher priority projects since they were through the system last year, or is everything off the table since there are no bonds? Or
Chairman Newton, thank you for the question, and I'll differentiate between the one in Southern Crescent and the one in Augusta, as well as the one in Columbus, because yours and the one in Columbus kind of in that same situation. The one in Southern Crescent, we had received funding by this body to renovate a facility in Henry County on that campus. Unfortunately, that facility could not be renovated, so it left money there that had been sold already for a bond. And so we're asking for that money to be redirected toward this project. The project for the advanced manufacturing facility in Columbia, as well as the advanced manufacturing facility in Columbus last year, was approved by this body, signed by the governor, but the bond was not sold. And so we're still waiting to see if there will be another bond sale. If that bond is sold, I'm still not real clear on where that project will land.
thank you very much. And just one last question, if you don't mind, Chairman. The USG had a slide that's maybe it's a requirement federally now, where you could put in your degree. It'll kind of tell you how many years, what your tuition will be, what your lost income is for that time, but it'll also tell you your 1, 5, and 10 year. I know you have a lot of programs. I don't know if we've funded that yet for you to be able to offer that, but I know a CDL facility coming, the ability for somebody to put that in would be, have we funded something where you're able to do that yet?
We have not. We are internally looking at exactly that. We all agree that we need that. We think
welding and things like that are so remunerative that could be great, but so let us know how to help. Thank you, sir.
Yes, absolutely.
Chairman Hubstetler.
Thank you, Commissioner Dozier, and I appreciate you knowing your numbers and presenting them yourself. And I know you've been a number of guys over the year. Matter of fact, in all your roles over the years, I think in 2013, we spent a lot of time in Hays State Prison together. I'll leave that story at that. But my question is, the growth and the Quick Start program is great. Bartow County is getting about 1 out of every 7 of those $74 billion. And I know the Quick Start's doing it, but do you guys, an example, Georgia Highlands enrollment is way up there.
Right.
Do you guys look at those areas long-term for not just Quick Start, but for additional training, education degrees?
Absolutely. As you look at it, we've been very blessed. I didn't put up the college by college comparison, and the chancellor mentioned it and I did not. But to give you an idea, we've been very blessed to have pretty robust growth across the complete system. 20 of our 22 colleges in fall showed pretty good growth. 2 of them, one was flat and one was slightly under. And so as we look at how to grow, we take in population growth. We also take in the numbers that are coming in, and we also look at how it shifts. If you look, it's really interesting. Chat Tech for a long time was our largest college system. The last couple of years, we've seen Central Georgia Tech and the Macon area really have a surgence and take over that top spot, and they kind of give and take. But recently, we've seen Gwinnett Tech really take off this fall. And so to your point, we track that by every college and really try to map what we're offering and how we offer it to match the needs of the industry and the community. But absolutely.
Representative Gamble.
Thank you, Commissioner. Back here on the back row. Appreciate your service and all that you guys do. Dr. Newcomb there at Chat Tech is great to work with. I did have a question. Several years ago, we invested, the state provided funding for mobile welding labs. And I was curious to know, I think there was a shared agreement between the technical college and the Department of Corrections maybe on those units. But most importantly, do you feel like we're getting the return on investment for those units? Are they being utilized? And what success have we seen with those units helping to provide training for welding in that particular field?
Yeah, great question. I can't give you the specific numbers on the return on investment, but I can tell you they are maximized. We do partner with many folks. It's not a 100% partnership with corrections, but we do use mobile welding lab with corrections quite often, but we'll use it with an industry that needs to train some of their staff on the customized recruitment side. We'll partner with DJJ some on their efforts to actually get skills inside of the DJJ facilities. We will go to Boy Scouts of America and help them with some of their badge earnings to really get the foot going, especially in that welding area. So they've truly been used, and we've actually used some grant monies and federal dollars and local monies to actually expand that concept into manufacturing. We have one that goes around, does a lot of manufacturing using the Amitral systems and actually teaching and learning in that area. So yes, absolutely. They have been vital to our success.
Leader Beverly.
Thank you, Mr. Chairman. I have a question regarding transportation. 60% of technical colleges that are, 2 years or less, 60% of them don't have public transportation that come within 4.5 miles of the campus. And I'm wondering if y'all have any idea about allocating money to last mile funding so you could get buses, maybe partner with local school systems, childcare, that kind of thing. So the last mile is extremely important, especially as a kid is trying to figure out, how do I walk an hour to get to class when the bus stops 4.5 miles away? Do y'all have anything afoot to deal with that?
Yeah, great question. And I'm answering, and I realize it's not, the answer I'm giving you is not directly tied to what you just asked, but it is. We do have last mile funding. I just want to clarify that. It's not really the last mile as you mentioned, what I'm trying to tie to, but just as the chancellor mentioned, our entire system raises money through the foundation for last mile to help with tuition and other expenses, i.e. some of it's daycare, some of it's actually transportation. We have not looked at specifically looking at that pure last mile as you just mentioned it, but it's something we'll definitely take into consideration.
Last question is Senator Parent.
Thank you, Mr. Chairman. Thank you so much, Commissioner, for all of your great work. I've recently become aware of work that some states are doing around what they call reverse transfer. Is that something that you're familiar with, or that we've done any looking at between USG and TCSG?
Did you say reverse transfer?
Reverse transfer, meaning Or did you want to?
No, no, go ahead.
Meaning if someone enrolled in a four-year university and does not manage to complete their bachelor's, they can receive a two-year degree or a credential for whatever they were able to complete, even though but it would probably have to be through, for example, TCSG, if the system isn't set up at
Yeah.
USG.
So probably not in the way you're presenting. I'm gonna have to educate myself on that. Obviously a student who leaves USG and comes to us gets transfer credits, but I think what I'm hearing you say is somebody who maybe already earned a two-year credential.
Yes.
While they're at, I'll have to look at that. I'm not as familiar as I need to be to answer that. I don't think we do that though.
Okay, I'd love to talk to you further and Chancellor, thank you.
Yes,
Thank you, Commissioner.
thank you.
Thanks for all y'all do, and we will be in recess. We will start back at 1 p.m. sharp to hear from the head of the Lottery Corporation, Gretchen.
Senators, if you could just meet me over here at the right side of the podium, left to you, before you walk out.
I'm gonna blank the screen out real quick. Because there's actually. All right.
All right. Whoa, hello. A voice from above. Please be seated. Okay, Mac and Mitchell, we're waiting on y'all. We're waiting on y'all. Y'all were just easy. Y'all were just standing right in front of me. So. Billy was just trying to hope for the attention. Billy wants it, you know. All right, y'all ready? We would like to welcome our president of the Georgia Lottery Corporation, Gretchen Corbin. Gretchen, the floor is yours. Are you on the, there you are now.
Thank you, Chairman Hatchett and Tillery. It's always great to be with you. Thank you very much for this opportunity. Good afternoon, everybody. My name is Gretchen Corbin. I'm President and CEO of the Georgia Lottery Corporation. And to most of you, old, wonderful friends, and it is great to be with you today. I have to, Mr. Chairman, if I can, I'm going to take a quick personal privilege. I've met Andrew today, one of your great interns. Not only was he a Hope Scholar, but his grandfather did our prize valuation for a very long time. And so from the great area of Lawrenceville and a Southwest Georgia student, Hope Scholar, his grandfather gave out the big prizes that we'll talk about today. I thought that was a great coincidence. So honored to be with all of you today, and Andrew, and the legacy that your grandfather provides us today. Thank you. Well, again, thank you to all members of this committee for your service to the state of Georgia and for the support you provide to the Georgia Lottery Corporation. On behalf of Governor Kemp, the Georgia Lottery Board of Directors, our employees, and especially all of the Andrews in the world, our Hope and our pre-K students, and families who have benefited from your Georgia Lottery in the past 30 years, it's my privilege to provide you with the Georgia Lottery update. As you all know, the Georgia Lottery does not receive state appropriations, but it is our job to provide revenues back to the state for the governor and you to allocate for pre-K and our Hope Scholarship. This is Georgia Lottery's record to date. With the inclusion of Q1 of fiscal year 24, the Georgia Lottery has now transferred more than $27.2 billion to education since inception. And those dollars have resulted in more than 2.1 million Hope Scholars and more than 2 million pre-K students. This is our continued line of education proceeds from the Georgia Lottery Corporation. This is our annual transfer since 1994. In fiscal year 94, our first year of returns were $362 million. And as you know, returns have continued to grow. In fiscal year 23, our results were $1.516 billion. This was an increase of 42 million or 2.9% from the previous year. Fiscal year 23 was our 8th consecutive year to provide over $1 billion to the state. When we speak about profits to education, it's important that we discuss our product and how we generate those revenues. According to the numbers, your Georgia Lottery is one of the most successful lotteries in the nation and throughout the world. And understanding that our mission is to responsibly grow revenues, we innovate daily through our product. As you know, Scratchers, Draw, and our iLottery platform. And we also innovate in all ways that we can with our retailers, through our sales locations, and our technology. We continue to be innovative with our instant product, including adding price points and launching 4 to 6 games every month. In Q1, we launched Quick Win, which if you have not seen it, it's a fresh new concept of instant play, instant win that is available both at retail and online. And we continue to implement enhancements to our iLottery platform. Our interactive platform grew from $445 million in fiscal year 22 in sales to $782 million in fiscal year 23, which returned approximately $177 million in profit last year. As you can imagine, and as you see, we support our product launches and maintain our awareness of existing games through creative marketing initiatives. We had a great year this past year, celebrating the Georgia Lottery's 30th anniversary last year. We offered 3 theme promotions to drive play and product sales. And of course, in addition to our product, we have regulatory authority for COAM, coin-operated amusement machines. And these responsibilities include licensing, permitting, collections, and compliance. We license over 35,000 machines statewide, which are all connected to a centralized accounting system. We receive a revenue share of 10% of net revenue from Class B machines, which equated to approximately $133 million to the bottom line last year. Well, these are our recent returns. As you can see, this slide shows a breakdown of the returns in the last 10 years since the Georgia Lottery Corporation assumed regulatory responsibilities for COAM from the Department of Revenue in 2013. The first 5 years share increased every year by 10%, and that ended in fiscal year 20. And so you can see those numbers, how they have continued to grow for all years, but also between 20 and 23. Within your budget book, because I know that's where the most of you are spending your time today, lottery funds can be found on page 37 and within the estimated state revenues, which can also be found on page 15. Each quarter, the lottery transfers funds to the Georgia Lottery for Education account inside the Office of the State Treasurer, where it is then sent to OPB for allocation to Hope and Pre-K. You have heard that we have had a strong fiscal year 23, and I want to provide you with a quick update as to how we are doing in fiscal year 24. Most importantly, we're off to a solid start. Our year-to-date profit as of Q1 is $388 million, and this was our second largest Q1 transfer in lottery history. Our year-to-date interactive sales are $209.5 million, which is 21% higher than prior year. I will say our Q1 sales and profits were boosted by 3 large jackpot rolls, which you probably saw. But the most important number you will want to leave with today is our current projected year-end profit for fiscal year 24, and that is $1.535 billion. And with our Q1 transfer, that will bring the total raised since inception for Hope and Pre-K after Q1 to $27.2 billion. So as legislators, I always want to be transparent with you. And today I'm in the great position of stating to you that the Georgia Lottery is continuing our success and that we feel very comfortable with our budget number for this year. Our commitment is to always follow the guidance of Governor Kemp and the legislature to transfer the greatest amount of revenues to the state possible and to be a transparent resource to any legislative member and committee. As I wrap up, I want to make sure that I say that it's Tuesday. So tonight's Mega Million jackpot is at $208 million. So please make sure to get your tickets. Chairman Hatchett and Chairman Tillery, this concludes my presentation, and I'm absolutely always happy to answer any question you or the members may have.
Thank you, Ms. Corbin. Chairman Hickman.
Thank you, ma'am. Thank you for being here. Give us an update on the cash card for the COAM machines. Where we at on that? How successful it is, and so forth and so on.
Thank you. That's a very good question. So our pilot that we've had with our COAM gift card has been pretty popular throughout the COAM industry as well as our COAM players. And so I will have to bring those exact numbers to you of where the numbers that the cards are in. We'll definitely get those numbers to you, but I would say that a lot of our COAM operators have enjoyed it as well as our players.
So how far are we as far as implementation on all the machines or all the stores?
Everyone has the ability at this point, the COAM locations, if they wanted to participate in the program, to be able to participate.
Well, I've actually had a couple of convenience store people tell me that they've been on the list for 6 months and still have not received any kind of authorization on it. So,
I'm more than happy to touch base with those. Thank you, Mr. Chairman.
Chairman Hufstetler.
Absolutely.
Thank you, and it's great to have a fellow Roman here today, and knowing you in your 20-something years. That
My 29, did you say?
29, is that what it was? I said 20-something. I wasn't going to say 29. Makes me look old. Anyway, I've got a question I know you mentioned the COAMs pay 10%, and that's correct, but it's 10% of the adjusted gross, whereas the Hope is the gross number. So if you look at the gross number, they pay 3% of sales to us, and Hope ticket sales are about 28 cents on the dollar they're paying. So roughly, 1/9 as much money. We've got other potential things out there that we're looking at. Do you guys look at these and evaluate them? It seems like while sales are up, they're not really keeping up with inflation, and I'm worried about lower paying things cannibalizing the stuff that funds our universities. Do you have guys do any data or any studying of that kind of thing?
We do not, we regulate COAM, so we don't operate them and we don't set kind of that prize evaluation. And so therefore, and so for the money out that is then distributed between those pieces, and then of course the 10% of net that comes to the Georgia Lottery. I will say that, of course, within our games that we are responsible for, as you know, and as I've mentioned before, draw brings in a larger percentage than scratch does. And so we are constantly balancing those. We see our responsibility as getting that greatest return to you possible, but always the largest dollar first to you.
Leader Beverly, are you going to ask a question to everybody today?
Pretty much.
Okay, just wanted to make sure I had that right.
Thank you, Mr. Chairman. To my dear friend,
Mr. Leader.
How you doing, Chris? I have a couple of serious questions about COAM and as it relates to sports betting as well. And so if you can help me work through that, it'd be helpful. I know that you guys are responsible for the regulatory oversight of COAM. And recently, Lucky Bucks just had this big thing, the RICO, that happened with Lucky Bucks, and they're restructuring the company. Obviously, it's not your fault. But the question I have for you around that is, how did we miss that? And then if we were, and maybe it's not a part of what you do, but if we were to have oversight over that and we missed this sort of RICO thing that's going on right now, are we really ready for the lottery to take over sports betting if that were to come online?
Well, I'll answer the second question first, if you don't mind. And that is that, of course, I see that as a public policy decision, and whatever you determine, whatever you and the governor determine, we will follow state statute just as we have for the last 30 years. In regards to the Lucky Bucks case, anytime that we hear that there are, if we receive a tip from the industry, we go out, we have investigators within our staff, and we go and we look at that. It's very important for COAM's credibility, because we think even though we regulate, that's our credibility as well. And so we'll wait to see, where that goes. But I can assure you, we are always making sure that we're being business friendly to COAM operators, even though we regulate them, but we take our regulation responsibilities very strongly as well. And so when we receive a tip, we always send our investigators out.
Last one, Chairman Houston.
Anyway, I don't play COAM. What are your COAM gift cards? What is that?
Yes, ma'am. Hi, Madam Chair. Nice to see you. Thank you. So COAM, as you know, again, we regulate our coin-operated amusement machines. And in
How do you get them?
ma'am?
How do you get them?
So it's a form of redemption. In the past, you could only redeem, you could play COAM, and if you won COAM, you could redeem it for a lottery ticket or for credit in the store. Now, when you win on COAM, you have the ability to go to the clerk and they hand you a gift card with those winnings on it.
But on those winnings on COAM, don't we just get 3% of those winnings? How much do we get back on the lottery? Is that good business?
The lottery receives per statute 10% of COAM.
But we get 10% of COAM, but we pay COAM dealers some money.
So 10% of the net, yes.
The net, and then how much do we pay the COAM dealer?
So when there's 100% of the profit, once the profit, obviously you pay the prize, the player is paid out. And then of the 100% profit, 45% goes to the location, 45 cents goes to the master license, who's putting the machines in the locations. 10% goes to the lottery. So I'm sorry, that is after prizes are paid and our vendor is paid. Then 45% goes to the location, 45% goes to the master licensee, and 10% goes to the Georgia Lottery.
Okay, how much do we make on a lottery ticket?
They're different based on whether it's a draw ticket, but on average, anywhere from 17 to 20 cents.
Okay, so if we're making 17 to 20%, we're not making as much given in that pro-am ticket if they took a lottery ticket, right?
At this point, per statute, we receive 10% of the
Well,
profit.
at this point, it would be better to give them another lottery ticket because we'd make more money.
The state of Georgia would probably receive a greater percentage.
Senator Lucas.
Isn't it true that if you do the gift cards, that if the gift card is given wherever they take it, sales tax is taken out of it, isn't it?
I'm sorry, Senator.
I say if you give a gift card, which is outside redemption in the store, when they take it and use it, they have to pay sales tax on it.
That is correct.
Now, is that a mandatory tax that we put on the folks, or it's a tax that they have to pay because they got a gift card to get something, so they had to pay the sales tax on that particular item? Am I correct?
Correct.
So if you take what you're doing with COAM, which is 10% off the top, 10% off the top, then you got the 45 with the master license holder and 45 with the store. Who pays the maintenance costs on those COAM machines?
I believe the master license do.
The master license. So therefore, the master license holder doesn't get the 10%, but after he get his 45, out of that 45, he has to pay his employees and everybody, or what we call technicians, to work on the machines.
Yes, sir.
All right.
That's all the questions. Thank you. Gretchen.
Thank you, Mr.
Thank
Chairman.
very much. Next up is Lynn Riley, the president of the Georgia Student Finance Commission.
Have a good evening. Very nice to meet you. And then here's your clicker amount. How do I get it?
It sure has. All of my children benefited as well. So a wonderful thing, and wonderful to be able to paying it forward a little bit.
Sorry,
Yeah, that's fine. Yeah.
President.
Okay, I'll stand.
Okay, we're going to get going again. President Riley, I don't know if it was by skill or by chance that you were next, but if you want to go ahead and go, you're up.
Good afternoon, Chairman Tillery, Chairman Hatchett. Thank you so much. I think it was by skill that I'm lucky enough to follow President Corbin and talk a little bit more about what we do at Student Finance Commission with all the proceeds that she sends our way. I'll start off with some facts and some data that many of you know about, but some new and great news. 2.1 million students have benefited from the Hope Scholarship since 1993 when the program was initiated, and it continues to receive national recognition for what it has done for our state's public and private post-secondary institutions and our economy as a whole. To date, we have given out over $14.6 billion in awards, and we are likely to pass the $15 billion mark before we hit June 30 this year. That's a lot of investment that's been made over time for a lot of great young minds. And I'm delighted as well to meet Andrew today and know of another beneficiary who is advanced into the workforce with some distinction. I know you've heard from the Chancellor and from the Commissioner about our Georgia Match program, and the Student Finance Commission is honored to be the administrators of this program. To date, 132,000 letters have gone out to Georgia high school seniors. Tens of thousands have visited their Georgia Match dashboard to determine the choices that they might have to learn in Georgia. And thousands of spots have already been claimed, as you heard earlier today. Applications that have been submitted to post-secondary institutions have gone up this year as a result. And we are very proud to be delivering on Governor Kemp's vision of this program and the partnership that has been forged with the education agencies for this success. But this year, we're not done yet. Next month, postcards will be mailed to all the high school seniors who have not taken advantage of claiming their spot or taken action to apply to one of the institutions in the state. And we'll be reminding them that application fee waivers will be available for them in March. We want to multiply the numbers that you've already heard today of students that take advantage of direct admission to Georgia's colleges and universities. As you know, Georgia Match provides a roadmap for every Georgia high school student to find their best spot to learn in Georgia and then to earn in Georgia. Student Finance assists them all with financial aid programs to minimize their out-of-pocket costs and reduce their student debt. The next slide is some statistics on the dual enrollment program. We've heard about the growth in enrollment at our post-secondary institutions, and that has been evidenced to us by the growth in the awards that we are providing for our students. This slide and the next ones coming are comparative year over year for the first 6 months of each year. And as you can see, the dual enrollment program through December 31st is rebounding significantly. We already have more dual enrollment students participating this current academic year than in prior full years, and we're just starting the spring semester. For the last 5 years, we've been putting money out, and in the current fiscal year, we have already dispersed 10 million more than we did in the comparable period last year. And that is 63% of our fiscal FY24 program appropriation. The growth in award dollars is not attributable to any changes in tuition or award amounts. It's rather due to the increased enrollment and credit hours that are being taken utilizing the dual enrollment dollars. And this is consistent with what we've been hearing from our post-secondary partners about overall enrollment growth. The Hope Grant programs are on a similar trajectory. As you recall, the Hope Grant award rate was raised from 90 to 100% for FY24, and through December, total grant program awards were 31% more than comparable period in the prior year. Enrollment rates and the number of credit hours earned have risen across all of the grant types, the Hope, the Zell Miller, and the Hope Career Grant. The Hope Scholarship Program for private post-secondary institution is showing cost increases consistent with the increased award amount for FY24. We've seen a small increase in credit hours invoiced as well. The cost for the Zellmiller Scholarship Program for private institutions is flat compared to FY '23 so far this year. As you can see in this slide, the Hope and Zellmiller Scholarship Awards at public colleges and universities are higher year-to-date in FY '24 over all prior years, mostly due to the increase in the award rate to 100% of tuition for our Hope scholars. Enrollment growth is also a factor, as well as an increase in credit hours invoiced through December 31st. Moving to the details of our amended '24 and FY '25 governor's budget recommendations, I'll start with commission administration. An increase of $120,000 in the amended budget is to provide the one-time salary supplement to employees for recruitment and retention. The FY '25 increases total $300,000 and it comprised of the statewide COLA, an increase to retirement funding, insurance and merit system costs. The governor's recommendation of an increase of $12.3 million for dual enrollment in FY 2024 and $15.1 million for FY '25 are indicative of the growth that we have seen in the enrollment in this program. The Hope High School Equivalency Program appropriation is flat for FY '24 and is reduced in FY '25 by $845,000 based on program utilization projections. Similarly, the Hope Grant Program is recommended flat for FY '24 and has been reduced in FY '25 by $20.7 million, which, Mr. Chairman and members, quite frankly, will likely need to be revisited based on what we have seen as a remarkable growth in Hope Grant, as Commissioner Dozier has spoken about the remarkable increase in enrollment at the technical colleges. The Hope Scholarship
Can I
Private
interrupt?
Program, Mr. Chairman?
Would you like to elaborate on that a little more, since there is a reduction and how the demand seems to be increasing, and maybe reflect on how those numbers might have come about? Or do you not, or do you not want to do that?
Thank you, Mr. Chairman. The original projections that we looked at were based on FY '23, which was just a little over $51 million that were actually spent in FY '23. Student Finance recommended a base amount of $80 million that was originally provided in the original FY '24 budget, not being real sure where we might shake out, but hearing anecdotally and then seeing the invoices arrive that was significantly more than that $51 million in FY '23. The adjustment made in FY '25 could potentially be based on that FY '23 amount, but it's clear that that won't be sufficient to provide for the demand that we're seeing in '25. For the Hope Scholarship private program, the appropriation reflects a reduction of $16.8 million in the amended budget. That aligns with the governor's disregard language in the original FY '24 bill. The FY '25 recommendation reflects a reduction of $16.4 million in alignment with the FY '24 disregard language as well, but a little bit less for the award rates that were set in the FY '24 final budget of $2,496 for Hope Private and $2,985 an award for Zellmiller Private Scholarships. The Hope Scholarship Public Program recommendation is flat in the amended budget and reduced by $9.1 million in FY '25 based on program utilization projections. The low interest loan program is flat for the amended '24 budget. And as this is the final year of the program, the appropriation is zeroed out in the FY '25 recommendation. The service cancelable loan program appropriation is reduced by $3.2 million in the amended budget. This is removing the appropriation for the Peace Officer Loan Repayment Program. That legislation was not adopted last year. However, the $3.2 million is restored in the FY '25 budget recommendation to align with the governor's legislative agenda for this current year. The College Completion Grant Program recommendation for the amended budget shows a reduction of $2 million, reflecting disregard language in the original '24 budget bill. And this reduction is included also in the FY '25 recommendation. Our tax agency, the Georgia Non-Public Post-Secondary Education Commission, shows an increase of 30,000 in the amended budget, 10,000 of that for the one-time $1,000 salary supplement, and 20,000 for an upgrade to the online database management system for the attached agency. The FY25 budget includes an increase of 46,000 for the proposed statewide COLA and retirement cost increases. In total, the amended 24 budget for the agency proposes a reduction of 9.5 million, and for the FY25 budget recommendation is 53.7 million less than FY 2024 at $1.172 billion. Mr. Chairman, the exceptional professionals of the Georgia Student Finance Commission work every day to provide Georgia students with guidance on their best choices for a successful, cost-effective post-secondary education right here in Georgia as they navigate their journey into adulthood and our robust workforce that continues to receive international recognition. I thank you for the opportunity to bring some great news to you today, and I'm ready to very happy to answer any questions.
Thank you. Can you back up one slide? So of those, no, that one. What percent of those funds for each year are composed of lottery funds? Are you funded totally by lottery funds, or is it just portion?
No, sir.
Okay.
No, sir. Our total,
And you don't have to give me exactly. but-
well, for FY25, lottery funds are $1,022 million. State general funds, 135 million, and other funds, which are primarily composed of reserve funds that we carry over year to year, about 14 million.
So with the balances in the lottery fund, I would think it would there possibly be money there to fund any shortfall that you might see coming in 25 or the future.
Certainly, I would not be surprised that there'd be consideration of additional lottery dollars available to fund the growing demand for HOPE programs that we provide.
Any questions? Wow, that's a first for today. Nobody has any questions. Thank you.
Awesome. Thank you so very much.
Next up is Commissioner Amy Jacobs with the Department of Early Care and Learning.
Hello, how you doing? Good afternoon, Mr. Chairman and members of the committee. It's good to be with you this afternoon. I wanted to first provide you, before I get into the governor's budget recommendations, just a brief overview of what DECAL does and the programs that we operate. I'm sure you probably know us best for Georgia's pre-K program, which is our pre-K program in Georgia that's in its 31st year. It's in every county in Georgia, and we're currently serving about 71,000 4-year-olds. But we do a lot more than that at DECAL to support early learning in Georgia. We license and regulate about 4,500 childcare programs throughout the state. We also have a quality rated program, which allows these childcare programs to go above and beyond basic minimum licensing requirements to really bring in that quality early learning component, which we know is so important for early brain development. And about 63% of our licensed programs are quality rated. We also administer our CAPS program, which is our Child Care and Parent Services program, which is the state's subsidy program, which helps pay the child care costs for families with low income so they can go to work or go to school and their children can attend high quality early learning. Nutrition services, we operate 2 USDA funded programs. One is CACFP, which is Child and Adult Care Food Program, where we work with child care programs and adult care programs throughout the state for them to provide free meals to their clients. And last year we were able to reimburse for about 65 million meals throughout the state. We also operate a summer food program, which we call Happy Helpings. We know during the summer, school-age students don't have access to meals since they're not in school. And so we work with nonprofits throughout the state to reimburse them for meals. And last summer, they were able to serve 2.8 million meals to these school-age students. We also offer inclusion services to childcare programs. We have a team of inclusion and behavior support specialists that work directly with childcare programs and teachers as they work to include children with all ability levels and even challenging behaviors in their classrooms. For infant and toddler supports, we have a group of infant and toddler specialists that provide direct coaching to infant and toddler teachers. And then, of course, we have several quality initiatives and professional development programs that support childcare teachers. One of those being what we call Decal Scholars, that provides incentives and scholarships directly to childcare teachers as they go back and get additional credentials and degrees. So I will move on to the governor's budget recommendation for decal. We are on page 169. I'll start with the amended 24 budget. This first one is in childcare services, and this is the $1,000 salary supplement for full-time benefit eligible employees. I'll move quickly to the next slide, which is nutrition services, which is also on page 169. That first one is the $1,000 supplement. The second one is to provide startup grants to providers throughout the state to help us expand our summer meal service. As I mentioned, we administer Happy Helpings, which serve 2.8 million meals to school-age students during the summer when they don't have access to those school cafeterias. We've had success in this in the past by providing startup grants. We heard from one barrier from some of these nonprofits is they just can't get it started up. They can't buy a refrigerator or coolers or hire staff. And so we did have some success with some one-time funding we received the last few years, and we're able to provide 22 grants and serve an additional 112,000 meals. And so we're excited and pleased to see this additional 100,000 to help us recruit more sponsors this summer by providing them with some startup grants to get those summer programs up and running. In our pre-kindergarten program, the first is the $1,000 salary supplement. Number two is to provide funds for a computer refresh for our pre-K team. We have not had a computer refresh in about 4 years. This is about 2/3 of that cost. You'll see the other part in the FY25 budget. Number three is to increase funds to reflect the correct employer contribution rate for SHPP. Obviously, the public school teachers that teach in Georgia pre-K classes receive SHPP. There was an increase in that percentage last year, and this just trues that up. So this is the amount of money that we will send directly to local school systems so they can pay their SHPP bill. And number four is an increase in funds to expand our summer transition program. So our summer transition program is part of Georgia's pre-K program. It is a much smaller program. But it is a 5-week program in the summer for 2 sets of students, one for rising kindergarten. So students that need extra support before they enter kindergarten, they could have attended pre-K and have been identified by their teachers as needing a little extra support, maybe didn't attend a full year, maybe moved into the area and they need that boost before they begin pre-K. And we also have a rising pre-K program, which is for Spanish speaking students primarily, who need an extra 5 weeks before they enter Georgia pre-K. This is a smaller program, as I mentioned, but the $6 million would allow us to expand from 222 classes, which is what we served in FY19 pre-pandemic, to 288 classes. And I can't say enough about this program. Just with a 5-week program, we actually have results and a study and research that shows that they make gains across all domains of learning. So it's a really important program, even though it is small for a very specific set of students. Also on page 169 is the $1,000 salary supplement. Now I will move to FY25, which is also on page 169. The Child Care Services Program. 1, 2, and 3 are all the statewide adjustments that I'm sure you have seen all day. And number 4 is an increase of funds to raise our CAPS reimbursement rates to the 50th percentile. As I mentioned, our CAPS program is the state subsidy program, which pays for childcare for families with low incomes as they work or go to school and the children attend high quality early learning. Our CAPS rates are very, very low and don't come close to meeting the cost of high quality childcare. So this will increase that to the 50th percentile of market rates. Now on page 170, which is where the pre-kindergarten program starts. This page, all 4 of these are the statewide changes for the cost of living, TRS, GBA, and then GTA. So also on page 170 these are the remainder of the pre-K program recommendations. One is the remainder to put in the base money for a computer refresh. As you know, we need to do that every several years, and that money has not been in our base previously, so we can support our staff that support pre-K teachers all throughout the state. Number 6 is the expansion of their summer transition program. You saw this in the amended budget. This would allow us to continue to expand even next summer and put it in our base so we can serve the additional students in those 2 summer transition programs. Number 7 is the increase of a $2,500 for both lead and assistant teachers for Georgia Pre-K, which we are grateful that that matches the K-12 teacher increase that Governor Kemp has proposed. Number 8 is an increase in formula funds for teacher training and experience, just like K-12 has their T&E schedule that provides increases for training and experience. Pre-K has the same, and this recognizes 1.2 million. Number 9 is increased funds to phase in a classroom reduction. And I am very, very excited about this. Pre-K has been at 22 students since about 2011. Before that, it was at 20. When we went through Hope reform and the Hope cuts back in 2010, that was one of the adjustments that had to be made to cut funding. So we were at 22 students. We know that smaller class sizes are really important, especially for small children. This will come in line with the national standards, with even our Georgia kindergarten standards. We know it's better for students and teachers, and it allows those teachers really to provide that individualized instruction that these 4-year-olds need and will benefit from. What we plan to do, this would be an increase of about 400 classrooms throughout the state. So we'll have to phase this in. So this would be the first year of a 4-year phase in for about $10.9 million, where we would add about 96 classrooms around the state to do that. So we're excited about the opportunity to reduce our class size. Number 10 is an increase of funds to upgrade our provider management system. Of course, we collect lots and lots of data. We send out lots and lots of money to pre-K providers and pre-K classrooms. Our system is about 20 years old, so it is old. We have a lot of manual processes, and this will automate a lot of processes, which will be better for our staff, but also for pre-K program providers. And then the last change in our budget is an increase in formula funds to recognize the increase in the per member per month rate for certified teachers for SHBP of about $2.4 million. And Mr. Chairman, those are all of our changes. Of course, I'm happy to take any questions.
You have a few.
Okay.
Chairman Hickman.
How to start gates the fastest. Thank you for being here. 2 quick questions. First of all, you and I've talked about this, that of the lottery funded pre-K programs of a school, there's 92% of those classes are filled. Of the available classrooms, 92% of them are filled with kids. What concerns me, we got probably 150,000 pre-K kids in Georgia, and of the total population, only 61% of those children are in a lottery funded pre-K program. So we got probably 55 to 60,000 kids every day that are pre-K ages that are not in a lottery funded program. So we need to look at expanding that, obviously. The second statement is, when we reduce this class size from 22 to 20, and we've only got 1 classroom at a particular school, where are those 2 kids going to, and how are they going to be taught?
That's going to be a puzzle. Our guarantee is that we will continue to serve more children, and we will make sure that we increase the number of classes. We may have to move. We don't know. We'll have to move kids from a certain school to a certain school, because we have to get as close as we can to 20, because we're funded at the class level, not at the student level. But it will be a puzzle when we see the applications come in every year, it's a puzzle every year for us to make sure that students are in the right place, in the right class with the right teacher.
So it's not that we all of a sudden going to take those 2 kids and make them stay at home.
We are not going to do that. You have my word on that. That is not our intent at all. Our intent is actually to help us serve more kids, because lower class size is also important to parents.
Thank you.
Chairman Houston.
Yes, Speaker Burns had appointed a committee to look into the pre-K funding and different aspects of pre-K. Did you take in effect the recommendations that they had made when you made this budget?
I did not, because they just announced it about 30 minutes ago,
Oh,
all the
okay, I didn't know.
recommendations.
Okay. All right, thank
And
you.
we
I
worked
had
with
heard some talk about it. I knew you worked with.
about 30 minutes ago.
Okay, all right.
Of
Well,
course,
I just
Speaker
wanted
Pro
to
Tem
make sure
Jones
that
kept
we
us,
can,
she kept us in the loop, and
Yeah.
we support her recommendations, and we're happy to work with you all as you
Yeah,
consider
and
those
it
as
would
well.
really make a big difference
Agree.
in pre-K according to Georgia,
Agree.
because some of the funding had been changed in lots and lots of years.
You're right. Yes.
Thank you.
Chairman Hubstetler.
My question is really pretty similar to Chairman Hickman. The same thing is my concern is we've got, and I'll tell you, I believe this is the most important education for our children. If we get them behind here, they never catch up. But we've got all those children that can't get in the program, and yet we're reducing the class size. It seems like we would use the fund to get some of those children that can't get in pre-K into the classroom before we start reducing class size instead of leaving all them.
Well, I think
thousands
we've got to do
stranded.
it at the same time. I think some of Speaker Pro Tem Jones's recommendations will help us with that capacity, because what we're seeing is where the kids are, where we have the highest wait list, we don't have the physical classrooms, and we need to provide some type of financial incentive to public schools or providers to open additional classrooms. So I think they kind of work hand in hand.
Leader Beverly.
Thank you, Mr. Chairman. I have a question around regarding informal in-home childcare. So the number on the caps is 4.6 million. That seems awfully low just to get us to 50 percentile. What is the actual number that would get us into the 90th percentile, 100th percentile?
I cannot give you that off the top of my head. I will say that the additional state funds will be combined with about $60 million in federal funds to get us to the 50th percentile. So that's about $65 million to get us to the 50th percentile. We can get you that number. We can do that calculation for you, but I don't have that off the top of my head.
That'd be great. Just a quick follow-up. So the designation, so in-home, informal in-home provider, would they be allowed to take advantage of the CAPS money if they were designated as?
Yes, we
informal?
do have informal providers that do accept CAPS, and we do pay them our CAPS rate. Yes, we do. Yes.
Senator Parent.
Thank you, Mr. Chairman. Thank you so much, Commissioner Jacobs. I wanted to ask just a little bit more about CAPS. Curious how many kids we are currently serving, and for an update on some of the funding status. I recall that the governor made what I thought was a wise decision to put 100 million or something of that nature from pandemic funds into CAPS. Can you give us an update on where we are? Is that money just going away? What are the numbers we're talking about now that we can serve?
So there've been a couple adjustments to CAPS with the pandemic funding, which will continue through September of this year. We increased the number of children we serve from 50,000 to 70,000. We will have to reduce that slowly through natural attrition. You know, of course, children enter and leave the program on a daily basis for whatever reason. So we will slowly attrition that back to 50,000. Right now, we are also paying the full cost of childcare with some of our pandemic funding. So our CAPS budget right now is about $450 million. When we don't do that, it's $280 million. But that money will end and it expires September of 2024, which means that families will have more out-of-pocket expenses for childcare at that time.
So that's a fairly dramatic rollback of that program.
Yes.
Well, that's a shame.
Representative Oliver.
Thank you. In the last budget cycle or so, we appropriated money to assist you to have folks do crisis calls on behavioral issues. There's still thousands of children who are expelled from pre-K. Are those positions filled? And what are you learning about the mental health needs of the 4-year-olds coming into your program?
So we
that
did
we should
receive, received funding in our pre-K budget several years ago to increase our inclusion staff. And then we also have the state's mental health director that we received state funding from a few years ago. We're definitely seeing, yes, those positions are filled. In addition to more positions that are filled with our federal dollars. We have a whole unit of inclusion and behavior support specialists that work directly with teachers and with children with challenging behavior, because we're absolutely seeing more of that as everyone comes out of the pandemic and gets back into a routine in childcare. We've also started what we call a SEEDS helpline, which a childcare provider, a teacher, a parent can call if they need access to additional services for their children. We can either go in the classroom and work with the teacher, which is our primary responsibility. That's what we have the staff capacity to do and the knowledge base to do, is work directly with the teacher. But we can also refer out to other services. We're also piloting what we call a mental health consultation pilot, where we'll do even more, provide even more services directly to teachers and even to families. That's a pilot at this point with some of our federal COVID dollars. But we recognize that as a need because we are seeing an increase in challenging behaviors and calls from teachers needing our support.
Do you think your expulsion rate is the same, going up or going down?
I don't have a read on our expulsion rate. We don't usually allow expulsion in Georgia's pre-K program. It is discouraged. They have to go through a very lengthy process with us. Now, if a childcare program expels a student, we wouldn't have any say-so over that. But in Georgia pre-K, we highly discourage it, and we do not have a high number of those because it's quite a process. We try to provide the supports before that even comes to our desk for any type of consideration.
Last question, Representative Evans, is that you? Okay.
Thank you, Mr. Chairman. Yes, thank you. So I wanted to just go back to the pre-K, and so you said there are 400 classrooms across the state, and this is a phased approach. So this $10 million or $10,970,000, that will go to open up 96 classrooms this year.
This year, well, next school year, yes.
Great. Okay, thank you. And then just to confirm what Senator Parent was asking about, so there is no increase in caps slots.
There is no increase in cap slots, no. And I know I get that question a lot, and we've really got to focus on what we pay providers right now, because you've all heard the news. Childcare is expensive, as it should be. We want high quality teachers who deserve to be paid, more than a living wage. So childcare is expensive. So I'm really focusing right now on increasing the rates we pay to providers to provide quality childcare.
Thank you.
Commissioner, I've got a question. As we're talking about caps, I understand that the formula prior to the pandemic, or the funding prior to the pandemic, was around 260 to 280 million a year. Now we're up around 450. Make sure I understand caps correctly. We basically allocate a certain amount of money per child to each provider, right? Like, so it's on a per head basis, right?
That is correct. That is,
And
so
they
the
can-
child receives the family receives a scholarship based on their eligibility, income, and work requirement. And then they can take that scholarship to any provider, and we pay our rate. Right now, we pay the full provider rate. So what the provider is fully charging.
Right.
When we go back, it will be what we can pay, which is, we'll be at the 50th percentile if this recommendation stands.
Can you help us know the difference in what the rate we were paying and the rate we're paying now?
Yes.
Sorry.
It's on a different sheet. I can tell you annually, and this is an average because we're talking about infants and toddlers, and we're talking about school age, which are a lot less expensive than an infant toddler. So before the pandemic dollars, we pay about $5,600 a year per child.
Per child.
Right now, we're paying $8,400 a year per child.
Gotcha. And the parent can pick whatever.
Has to be quality rated and licensed, of course, but yes, they can choose as long as they're registered in CAPS and a CAPS provider. Yes, they can choose.
Gotcha. Thank you.
That's all the questions.
Thank you very much.
Next up is Commissioner Tyler Harper, Department of Agriculture. And we're back on time. So Commissioner, let's keep it that way, okay?
I'll do my best, Mr. Chairman. It's all dependent on the number of questions I get.
The floor is yours.
Well, thank you, Mr. Chairman. It's good to see you, all of you. It's good to be back. When we were together in December, I gave you a pretty good overview of where we are and where we're going as an agency and what we've been spending the money on that you have appropriated to us last session. So obviously, we're going to focus on the future in this presentation and where we are going forward, and just have a conversation about our FY24 amended and as well as our 25 budget Just kind of really quick, I always like to do this because I think most people don't really realize all the things that we do at the Department of Agriculture and the role that we play in lives every single day. I argue that we're one of the only, if not one of the only state agencies, if not the only state agency that impacts every Georgian every day. Every single day, a Georgian is impacted by the work that we do at the Department of Agriculture, from farms, fuel pumps, gas pumps, grocery stores, and everything in between. And our employees, about 500 strong, go to work every single day to execute that mission with our over 70 licenses that we issue and 20 different divisions that we have as an agency. We're about 81% funded with state dollars, 19% funded with federal dollars. Most of those federal dollars obviously go to pay those joint programs that we operate with the federal government, such as meat inspection and other food safety related programs, among things like pesticides as well, with the EPA money and the agreements we have there. We also get funding in our budget that goes to attached agencies. And so that money just flows through the Department of Agriculture, like the Ag Exposition Authority in Perry. We have the vet labs that go through us. The Poultry Diagnostic Lab is attached to us. All the commodity commissions operate under us. The Soil and Water Conservation Commission operates under our administrative authority. So all of that money that is appropriated to those entities just flows through us. So that's kind of a quick overview. I know Commissioner Jacobs mentioned mental health, and I know that's been a big thing that has been a lot of conversation. And I don't think I talked about this in December, but at the agency, and has been a priority of mine, we have stepped up our efforts in relation to mental health related to rural Georgia, related to farmers, related to farm families. What we have found over the last few years, especially in the recent study, that is troubling. 40% of farmers in the last 12 months, when the study was done this past year, have thought about suicide. And those are troubling numbers. And when you think about where we are in the agricultural industry today, it kind of, you understand where that comes from. But so at the department, we're focusing on working with DBHDD and Commissioner Tanner, and appreciate the partnership we have with him and the University of Georgia, and really ramping up our efforts in relation to mental health when it's focused specifically in the ag sector and helping those families. So we look forward to continuing that work as well. So diving off into the budget, and the governor's budget and AFY 24, they included increase of funds for the EV charging program, which many of you know passed in Senate Bill 146 last year, which is now law. It goes into effect of January 1st this next year. This specific funding is a little over $3.3 million for equipment for us to purchase. Obviously, with it being in the amended budget and it being cash, that means we would have to spend this before June 30. So $3.3 million to buy the equipment needed by June 30. I will say, that might be a little bit of a tough thing to do, but we will do what we're asked to do as an agency. We're obviously know this is an emerging market. We're going to handle the tasks that we're asked to handle, but this is obviously needed for us because the program January 1st is the start date, and we want to make sure we're up and running to do that. And we appreciate the governor's recognition of the need we have for that equipment. As Chancellor Perdue already said, we have the governor put the money in for the one-time $1,000 supplement. That money's out the door, so I hope y'all do fund that, as he mentioned earlier, because we've already spent that as well. We appreciate that for our employees. That goes a long way for recruitment and retention, and we look forward to our continued work together to work on those efforts. In the FY25 budget, as with all state employees, we also received the 4% pay raise at the department. We're very appreciative of that because that will go a long ways in helping us continue our recruitment efforts. The other thing that is really important to point out is the additional $2,000 that the governor included in their budget for specific pay raises for those in our consumer protection division, specifically our inspector level positions. As I've mentioned to many of you, whenever I was before you many times, I have mentioned the number of vacancies we have at the Department of Agriculture. The great majority of those vacancies are in our inspector level positions, which makes it difficult for us to do our job. Over 80 vacancies department wide. And so these targeted investments in our people will help us address that issue. And so we're very appreciative of this additional investment and our folks at the department. And it's something that I've been asking for, and I would hope that you would continue to support. And we continue to look for ways to help our folks at the department out and continue to bring them up. Currently, I think I've mentioned this before, our base salary for a 4-year college degree currently today, right now, is $39,500. So if you graduate with a bachelor's degree from college, our base salary for that person coming to work for the department is $39,500. So this 4% plus the $2,000 will get us above $43,000, which is heading in the right direction for us. And we're very appreciative of that and those efforts, and appreciate the governor's recognition of that help. And we just want to continue those conversations. We also received the enhancements for post-certified law enforcement officers. For those in our department, we also received, as many state agencies did, the increased funds to address the adjustments that we will be having to make regarding our payments to DOAS, GBA, and the Technology Authority as well. Getting the more specific things in our budget related specifically to the department. The governor included funds for 10 inspector positions to implement the EV charging program, the electric vehicle charging program, which again, as I mentioned a minute ago, will start on January 1st under current law. And so this will help give us the needed people and vehicles needed to ensure that they can hit the ground running. When you combine that with the other funding for EVs, that ensures that we're able to head in the right direction. I will say though, regarding the electric vehicle program, when I was before you last year, the chargers or the testing equipment that we were looking at as an agency they were cost around $50,000. Today, that same testing equipment is over $150,000. So just in a year's time, we have seen the equipment that we would be required to purchase as an agency triple in cost, which is a concern of ours, obviously. And so when you start putting pencil to paper and figuring out exactly where we need to be, that's something I think we need to have a real in-depth conversation about. My staff and our team, we've pegged the cost of the electric vehicle program to the agency cost of vehicles, equipment, personnel, and everything. Obviously, some of this is one-time cost to around $7.5 million. So we are very appreciative of the governor and his staff and the work that we've done together to get some resources that we need. But we need to have an honest conversation about ensuring that we're funding the program to give us the resources we need to be successful. We don't want to work to implement a program and not have the tools and resources we need to ensure that it is implemented correctly. And that's what we just want to hope to have that conversation as we continue to move forward. As many of you know, and I've mentioned this in December, in partnership with the Department of Natural Resources, as well as USDA and our conservation districts and friends there, we have stood up the Feral Hog Task Force, specifically working to address issues related to feral hogs in our state and crop depredation. For those of you from rural Georgia, you will understand the issues that our farmers and farm families face every single day related to damage that feral hogs cause on land, they cause on crops. And so we're very pleased that the governor's, in his recommendation, they put $150,000 in our budget specifically for the Feral Hog Task Force and our work in partnership with DNR, USDA, and the conservation districts. That work is moving in the right direction. Matter of fact, we are getting ready to kick off the first pilot program that the task force is in charge of in the Middle District, in the Middle Conservation District, that will start in a couple of months. They're going to do the kickoff meeting here in a couple of weeks. for those farmers and who may be interested in partnering with us in that pilot program. So we're really excited about what we can do together as a team in addressing these issues related to crop depredation. I know deer has been a big issue as well when it comes to crop depredation. That's something that we are continuing conversations on with members of the General Assembly, with Commissioner Rabin and the Department of Natural Resources and others. That's definitely, just cause this is called the Feral Hog Task Force. Obviously feral hogs are the focus, but we're definitely have issues related to crop depredation and deer damage across the state in mind as well. And we look forward to continuing those conversations of how we can work together to address that. We have some ideas, especially working with our Hunters for the Hungry program and others. But it's definitely an issue that we need to continue to keep on the forefront. In relation to the Agricultural Trust Fund, every year there's a true up to that in the budget. So the funds were put in for the true up to the Ag Trust Fund. The Ag Trust Fund is used for funding issues at the farmers markets, as well as marketing and communication for our agency. You should have received a report from us on those trust fund dollars. It is required that we submit that to the General Assembly every year. We submitted that at the end of this past year, at the end of December. And we're really proud of the work that we've done at the farmers markets and addressing the issues and using that funding directly and in a way that is targeted in those areas where it needs to be addressed, to address the issues we have at our farmers markets across the state. Talking about the farmers markets and the bond package that the governor in the governor's budget, his recommendations, there is funds for the Atlanta State Farmers Market specifically to the tune of $50 million. We are very appreciative of that investment. And obviously this will allow us to shift our focus at the department when it relates to our farmers markets from merely just renovating our current facilities to finding ways that we can have a long-term plan in addressing the issues that we have at the Atlanta State Farmers Market, which are many. Obviously we would put this in a multi-phase project in a strategic plan and how we would move forward. But we do have a lot of that already laid out. Matter of fact, at the agency, we've been working on maintenance plans and what farmers market, what it would take to upgrade our farmers market network, specifically the Atlanta farmers market. And if you look at it, if we did a complete renovation, top to bottom, everything at the Atlanta farmers market, we're looking at a little over 1.3 billion total in costs. So 50 million goes a long way. But in the grand, when you think about the grand scheme of a real state-of-the-art facility, it's a lot of money. And so we appreciate this investment and look forward to continuing this conversation and how we can continue to invest in the produce capital of the Southeast and ensuring that we have those markets available for our farm families. And at the same time, ensuring that those on the market are buying and selling Georgia-grown products from Georgia-grown farmers and Georgia-grown producers. I think that's important too, that we ensure that our Georgia farmers have access through that market to market their goods and their products around the state. And we look forward to that conversation as well, but we're very appreciative. We also received a little over $1.7 million for vehicle replacement. Currently in the department, we have a number of our inspectors that actually are not in a state vehicle, which is a liability for us. And so not only that, we give them mileage reimbursements, which gets very expensive. So our first priority will be ensuring that all of our team that deserve to be in a state vehicle for the position that they hold earn that slot. And that's what we'll be using this funding for. And the reason we requested it, in addition to our high mileage vehicles, we have over 65 vehicles that meet the state standard for replacement. So this is for 42 vehicles. And I'll talk about it in just a second, but that gives you an idea of where we are as an agency. We have a lot of vehicles and we just need to continue to push in replacing those. In the FY25 bond package, the governor included our request of $1 million for equipment at the lab in Tifton, specifically to address the needs we have as an agency to continue to move our mission forward and the equipment upgrades that we need to ensure that our equipment's top tier and working like it should. So we're very appreciative for that them agreeing with that request, as well as $3 million for a new chiller and a new generator, $1.5 million a piece about. So that's going to go a long ways in ensuring that our lab in Tifton can continue to operate as effectively and efficiently as possible. And we are very appreciative of that funding request and them agreeing with that funding request and putting it in the governor's budget. I will speak real quick since I'm on the lab. I know that the governor included in his budget of some funding for design of the ag building in which we're in for renovation. On the 6th floor of our building is a lab. I just want to put it on your radar. I think we need to have a conversation about that lab. So whenever we go to renovating that building, if the General Assembly sees fit and moves forward with that funding request that's in the governor's budget, that lab, we will have to move that lab. We've been working with our other sister agencies across state government to try to find a place we could possibly put that either temporarily or permanently. So far, we haven't found any place for that to go. So there may be some honest conversation about possibly needing some facility funding to maybe build a lab in the future for us to put our lab. It's mainly our food safety lab. It's very important to what we do. And we believe it does belong in the more metro region. I know we have our lab space in Tifton, but and it's full as well. But I just wanted to put that on your radar as we continue these conversations about possible renovation. That's something that is top of mind for us, and we're already trying to find a place to put it. And so far, no pun intended, but we've been striking out. So we're working to help everybody, help us find a place to ensure that we're able to do it. In request, first off, I want to say we're very appreciative of Governor Kemp and his team, and Rick Dunn at OPB and our partnership, and appreciate the funding that they put in the governor's budget for our agency. It will help us. It will help us a lot, and it's going to help us move in the right direction as an agency. And we look forward to our continued work together. We do have some additional requests, obviously. As I mentioned earlier, the bond package covers about 42 vehicles for us. We have about 70 that currently need replacing. So that's obviously a continued need. I think a lot of state agencies deal with that every year, but continuing to ensure that we're addressing those vehicle needs. Federal reimbursements, as I mentioned earlier, about 19% of our funding comes from the feds. So anytime we give a state pay raise to our employees, we have to go to the federal government to get that reimbursement from them and hopefully get that added to our contract with them. Sometimes that takes up to 18 months for that to happen, if not longer. But on average, about 18 months for us to get any response out of our federal partners. So whenever I have an employee that is 50% funded by the feds and 50% funded by the state, we only get 50% of their salary when we do a pay raise. So I have to find the funding in our budget internally to ensure that they get whole. So I just want to put that on your radar. Those are things we struggle with internally on those federal reimbursements because those cycles lag. And ensuring that we're able to cover those funds for our folks. I will say the $1,000 pay raise or the supplement that the governor put in the budget, they fully funded that even for our federal funded employees. So we are very appreciative that that is fully funded for both state and federal. So we're good on that. As y'all know, we passed the Farmland Conservation Program last year, the Conservation Fund Program last year. This was a big initiative to ensure that we're protecting farmland in our state and creating that conservation easement program. I think this is one of those things that requires funding, obviously. So we look forward to the conversation on what that will look like and how we can ensure that we're funding that program to ensure we're protecting ag land in our state moving forward. As I mentioned in December, our emergency response programs and what we do there this year, we've responded to a lot. Hurricanes, 7 truck incidents where livestock or animals were involved on the interstate or highways across the state of Georgia. The different events across the state. We've dealt with the freeze to our peach crop, other responses that our agency is responsible for, the yellow-legged hornet in Savannah, all of those, the HPI event in Sumter County, the avian influenza event, all of those things are costly to our agency. And we just appreciate the opportunity to have a conversation about emergency response funding for us at the department. And obviously last, there's a lot of things we can talk about, but as we continue working through the hemp program and what we have going on across the state related to the hemp industry and where we are, we've been doing a lot of work internally on how we can best ensure that that program operates as efficiently, effectively as possible, but at the same time that the folks that are doing it right are doing it right, and those that aren't are addressed. And I think you know, we see some opportunity as an agency to address that issue. We're obviously, we get calls constantly from our local partners, sheriffs and chiefs across the state, wanting to partner with us on how we can work together. But we need to ensure we have the appropriate resources to be able to address that issue going forward. And we look forward to that conversation. I know I said last, one other thing that I didn't mention is in regards to the agency, we submitted this, I believe, to both budget offices, but we've had some conversation internally about things that would make more sense as far as reorganization and where we are as a department, how certain entities operate within our agency. As you know, we have 3 buckets. We have administration, we have marketing, and we have consumer protection at the Department of Agriculture. And that we believe that some of those programs that are in one sub-program may belong better in another sub-program. So we definitely look forward to having that conversation to ensure that those budget line items line up with what is operationally appropriate for us at the agency and at the department. So with that, Mr. Chairman, I appreciate the opportunity to fill you in on where we are. And I believe I left us a little bit of time for questions. So
I wondered if you were ever going to stop.
Well,
Chairman Perkle.
Thank you, Mr. Chairman. And thank you, Commissioner, for that wonderful briefing you just gave us. So one of the things I want to make sure that we do not do in being good stewards, and that's the thing that we practice we practice what we preach here is being good stewards. Regarding the $50,000 to $150,000 EV charging testing stations. If it was in code that you had to buy a loaf of bread the 5th and the 10th of every month, and it happened to be during a hurricane and bread prices had gone from $3 a loaf to $15 a loaf, I would hope that we would have the foresight. I'm assuming that this is a temporary anomaly based on supply and demand, because Ohm's law has not changed in the time that I've been in school. And there has got to be a cheaper way to do it. Are we going to, as you know, through the mandate that we have with the Senate bill that was passed, is your feet to the fire to overpay for a service that we need?
So, Mr. Chairman, I appreciate the question. I will say this, I think, to your point, you are right. I think it is a concern. Right now, currently, we are only aware, I'm looking to my team to make sure I'm saying this correct, of one company that actually manufactures testing equipment. So they're the only game in town, right? Which gives them that flexibility that we're aware of as an agency. So if there's somebody out there that we're not aware of, we welcome that opportunity to have a conversation with them about what this looks like going forward. We've been having a lot of conversation internally about how we could partner with some other entities where we could figure out how we could maybe design some testing equipment that might not cost us as much. Obviously, if we do that, that would require some funding from the legislature as well to give us that opportunity to have those conversations with other entities, whether it's with our higher education institutions or otherwise, to where we could utilize their expertise. But currently, we are only aware of one entity that manufactures that equipment. And, you know, the law says we're to begin this program on January 1st of next year. That's what we're going to do. But to your point, I think, you know, as always, as being fiscally conservative and ensuring that we're addressing it in the best way possible, it might be worth us exploring that a little bit further as we continue this conversation.
Chairman Dolezal.
Thank you, Commissioner. It's my understanding that we're one of the few states that are mandating this implementation starting in 2025. As you talk to your colleagues, I think a date that I've heard is that most other states are not doing this until 2028. Is that what you're hearing?
So
amongst your-
to my understanding, and again, I don't want to speak without making sure I'm right. I believe we are the only state that is implementing this in 2025. Most states are having that conversation around the 2028 timeframe, as you mentioned. And actually 2028 is when the NIST standards will be rolled out as well. So our other counterparts around the country, we're having conversations with them, obviously, and we're going to continue those conversations because we're trying to figure out what they may have been faced with. Have they found other avenues to address this? So we're committed to doing what we're asked to do. But to your point, the 2028 timeline has been thrown around by some of our partners around the nation.
Commissioner, the more you talk, the more lights light up.
I was hoping
So
the longer I talk,
you get
the more
you get
time I
some-
need up,
you-
Mr.
You
Chairman.
understand? Chairman Tokus.
Thank you, Mr. Chairman. Commissioner Harper, thank you very much for the great job you do, and I appreciate you personally coming down to Sumter County and addressing some of the issues. You mentioned briefly about the feral hog program and how deer has become an issue. Would you please elaborate a little bit on the deer problem, maybe to educate us and tell us what you're doing in that area?
As
briefly as I can. Obviously crop depredation is an issue. Yeah, you can talk to any of your counterparts, Chairman Perkle, Chairman Watson, Chairman Meeks, Chairman Dickey. There are a lot of folks that can basically educate all of you a little bit deeper and in depth, but deer crop depredation has been an issue, and we're working with DNR and Commissioner Raven. We've already had meetings. We're going to continue those conversations with the General Assembly and them on the best ways forward on how we can ensure that we're addressing that issue. One, so our hunters and our hunting community can continue to enjoy the sport, but at the same time, our farmers and farm families can rest assured that they're not losing millions of dollars overnight by crop depredation from deer damage to agricultural crops.
Chairman Beach.
When he was in the Senate, he talked a lot also, so just want to let you know that. I just got one quick question. We passed Senate Bill 132 prohibiting the communist China government from buying our farmland here in Georgia. And one of the things, and I want to thank Chairman Perkle for your work on that also. One of the things we learned when we did the research, they're not buying small 20, 25 acre tracts. They're buying 1,000-acre tracts in California, North Dakota, Texas. We have an inventory or a database of who the farmers are that own 1,000-acre tracts here in our state of Georgia?
I'm not aware that we have an inventory of those that own 1,000-acre tracts. But to your point, it is a concern. Foreign owned, especially foreign owned land by our adversaries should be a concern. It's a national security issue. And I appreciate your work and Chairman Perkle's work on that issue, and look forward to our continued work together to ensure that we protect Georgia farmland from those that want to do us harm.
Well, we want to do everything we can to save the family farms.
Yes, sir.
Chairman Dickey.
Thank you, Mr. Chairman, and to keep us on time, I won't ask a question, but just make a comment. Thank you for the great job you do in promoting Georgia agriculture, Georgia's largest industry, and protecting our consumers. It's a big job. And just to the members of this committee, I think you recognize the big job and our Department of Ag has, and I just want to commend the commissioner for tackling so many different areas that really need attention, and I appreciate the good funding to governor, and hopefully this committee will afford you to keep Georgia's agriculture and our consumers safe in this state. So thank you.
Thank you, Mr. Chairman.
Chair Lady Houston.
2 quick questions.
Yes, ma'am.
What is the mileage that you have when you require a new car? And
My understanding is 175,000 is the DOAS. Around that number is when it's supposed to be state surplus.
okay, how many cars do you have over 200?
I can add it up real quick.
No, that's okay. You
I
have
can
a
get
lo-
it back to you.
You have a lot of them over 200.
I do have a number of them. I'm looking at the
Okay.
list now. It goes almost the entire list is over
200,
200,000
All
miles.
right,
Yes, ma'am.
another quick another comment. Thank you for the job you're doing. And I know farmers and everybody's suffering from the deer population. And I think it would be interesting to see how much insurance premiums have gone up to take care of all the deer damage that is done on Georgia highways. If you'll count the dead deer when you're riding up from around the state,
Yes,
you'd
ma'am.
be shocked. And so everybody's suffering too.
Yes, ma'am.
But farmers are suffering the most, but we're all paying for it.
Yes, ma'am.
Senator Lucas. You got a question?
Commissioner, when you said just make the deer season a little bit longer so you can pack more meat into your freezer.
Hey, to my good friend from Macon, I believe you know of which you speak.
We're gonna close it out with the man from Liberty County, Representative Williams.
Thank you, Mr. Chairman. When you were calling the roll up there, I thought that only Republicans had a problem with hogs and deer. Now, I don't have a lot of corn, but I got some flowers. Representative Chokers asked a question that answered part of my question, but there's an ongoing fight with the feral hog. Is it measurable? Are you making any progress? Or are the hogs winning?
Well, so my good friend Reverend Williams, right now the hogs are winning. And
I was afraid of you.
and I know y'all being a strong Georgia Bulldog like I am, and many of you, we don't like it when the Razorbacks try to come to Georgia and win. So we want to make sure we get them feral hogs taken care of, but we're working on it. I really appreciate USDA coming to the table, because them coming to the table is really going to help us put a dent in this. So it is really a true partnership between the department, DNR, Commissioner Rabin and his team, as well as USDA and their wildlife services, and our conservation districts. We really believe we can put a dent in it. But not doing anything is not the answer. And so we're working it as hard as we can. So thank you, Reverend.
sir.
Yes, sir.
Commissioner, you got one more question if you got time for it.
Yes, sir. I do.
Chairman Anderson.
Thank you, Commissioner, for bringing that presentation. Could you give us an update on the inspectors that we put in the budget for the soil amendment?
Yes, sir. I sure can. So the soil amendment program that y'all funded last year to the tune of about $550,000. Some of that was equipment, some of that was personnel. All the personnel that was put in the budget have been filled except for one position, and that's in the South Georgia inspector position. We're still trying to find somebody to fill that role. As I mentioned earlier, recruitment has been difficult at the agency across the board. This would be one of those examples. So we have had, we're working day in and day out to get that position filled, but the position in North Georgia has been filled. And so all the other positions that were funded have been filled as well.
Have we had any cases yet?
I know our team continue to inspect complaints as they come in. And I know in the last couple of weeks, we've had a few of those trickle in, and they've went out and inspected those. And so we're continuing to work the ones that are brought to our attention. And those specific positions are specific to those regions. They're the ones investigating those particular complaints. And we'll continue to do that.
Thank you.
Yes, sir.
Thank you, Commissioner Harper. You survived.
Well, thank you, Mr. Chairman. Thank you to the committee. Thank y'all very much. I look forward to our work together. And good to see y'all. Y'all have a wonderful day. Keep plowing.
Next up. Well, I'm glad. Get out of here. Next up is report from Chairman Jason Shaw, the Public Service Commission.
How you doing?
Chairman Shaw, if you can get Commissioner Harper out, maybe we can get started. You know, I've waited for this opportunity for a long time.
I bet you have.
All right. Chairman, the floor is yours.
Thank you, Chairman Hatchett and Chairman Tillery and members of the committee. Good to be with y'all today. I stepped out. We began the hearings this morning on the Integrated Resource Plan update to try to meet the growing needs of our state that are attributed to the leadership of this General Assembly. But as always, I thank you all for allowing us input into this budget process. The work that you all do ensuring Georgia remains physically sound as we perform the work of the people is a difficult, although essential, part of good governance. We're grateful to the governor for his proposed budget that includes much needed raises for PSC staff, as well as funds for new positions, equipment, and upgrades. These extra dollars will help keep the PSC competitive in the job market and accessible to Georgians. We've been busy at the PSC, as you may have read in the press. As of July 31, Plant Vogtle Unit 3 is in commercial operation. It is providing carbon-free electricity to an estimated 500,000 Georgia homes and businesses and will work day and night over the next 80 years or so. Later this quarter, Unit 4 is expected to go into operation as well. After many years of hard work, the importance of these accomplishments cannot be understated. These are the first U.S.-built nuclear reactors in over 30 years, and as always, Georgia is leading the way. The PSC expected long and contentious hearings to determine which construction cost would go to the ratepayers and which Georgia Power would absorb. Instead, through tough negotiation, concessions were made by Georgia Power. We came to a stipulation that saves Georgia ratepayers more than $3 billion in construction cost. And since the project began, the PSC has saved ratepayers $5.049 billion. And over the next 60 to 80 years, that will add up to savings of nearly $13 billion for Georgia's ratepayers. In a rare move, several consumer advocacy groups signed on to the stipulation as well. It was just a fair and reasonable outcome to a very long and complex process. Over the past few budget cycles, the PSC has asked for additional personnel to replace employees lost in funding cuts. The new employees have significantly improved customer service and utility analysis. A full, well-trained staff at the commission correlates directly to lower energy costs for Georgians. The most recent ratepayer savings on Vogtle are a testament to PSC staff positions funded by you all here. In this budget cycle, the PSC was asked to consider strategic enhancements that could move the needle on customer service. We asked for 4 new employees, 2 in our Call Before You Dig program and 2 in our pipeline safety program. We also requested 3 new database updates, an update to our antiquated phone system. The governor's proposed budget funded 3 of the new PSC employees and 1 of the database upgrades. These additions from the governor will help us to run more efficiently as we offer top-of-the-line service to Georgia residents and businesses, and they're very much appreciated. Respectfully, the PSC is asking the House and Senate to consider our other requests as well. PSC requested 2 pipeline safety inspectors, and the governor funded 1 of those. So the additional pipeline safety inspector comes at a cost of $53,011 annual salary and a one-time $22,400 amount for required equipment. Pipeline safety inspectors are responsible for ensuring natural gas pipeline operators in Georgia follow minimum federal safety regulations. Over the past 10 years, the turnover rate for our inspectors has been approximately 50%. Pipeline safety inspectors are state employees working under a grant from the U.S. Department of Transportation. Federal government partially reimburses Georgia for those program costs. Over the past several years, the DOT has increased requirements for our pipeline inspectors and has reduced reimbursements for states not complying with these added requirements. So the PSC has worked diligently to comply, utilizing its current inspectors. Without new inspectors, Georgia's federal reimbursement rate is at risk. We also asked for the 3 database upgrades. The governor did fund our Call Before You Dig update. We're also asking for our new consumer response system at a one-time $250,000 cost. One way that we serve the public is by helping resolve billing and service issues. When Georgians contact our consumer affairs unit, which happened 68 times last year, a case file is created in a database. None of the utilities have access to that database currently. Any response from a utility must be emailed to a PSC representative and then manually entered into the information into the database. So a modern database would allow our representatives and utility representatives access to the same shared database, and that would create an instant accounting of a case's progress from the minute a complaint is read by a utility representative through the resolution of the case. Georgia consumers would be notified by email each time a representative from the commission or a utility company updates the case file with new information. The other database is a pipeline safety database, also at a one-time $250,000 cost. As stated, we receive a federal grant to partially reimburse cost of the pipeline safety program. The current pipeline safety database is approximately 25 years old. It makes it difficult for our staff to comply with newer and more stringent federal reporting guidelines. That's also putting Georgia's reimbursement rate at risk. So a new database would contain information on all the gas operators in Georgia, currently standing at 190. The new database containing these inspections would be complex, searchable, and would contain multiple field capabilities. The governor's proposed budget did not address our antiquated phone system I mentioned. That could be updated at a one-time cost of $100,000. PSC is long overdue for a modern phone system. The current phones were last upgraded more than 20 years ago. These antiquated phones do not allow for voice over internet protocol, the current industry standard. New phones would allow employees more efficiently in forwarding calls for remote use, would maintain call logs and have caller ID to provide a higher level of security. The current phones significantly hamper efficiency and adversely affect consumer service for Georgians. Finally, Public Service Commission has a few housekeeping requests. We request a COLA shortfall for the FY24 budget cycle at a cost of $41,094 annualized. So the 24 budget included a $2,000 COLA for all full-time benefit eligible employees. The PSC has pipeline safety inspectors that perform federal work but are classified as full-time benefit eligible state employees. These employees were approved in the previous budgets to receive fully funded COLAs, but were only partially funded in 24. So we're currently paying for these employees the full amount of the COLA, and we request $41,094 to fully fund those increases that were not included in the budget. Also requesting an audit of we need to perform an audit of our Universal Access Fund contributors, and we can do that. We would need to hire some outside help at a cost of $25,000. Georgia Code requires all telecommunications companies holding a certificate of authority issued by us to contribute to the Universal Access Fund that supplements funding for independent telephone companies across the state. An annual audit will ensure revenues in the fund are accurate and contribution factors are applied correctly. Also, we're requesting funding to ensure business continuity in the amount of $61,046. We have 4 units under our Utilities Regulation Division. Each unit has a director. To ensure continuity and to cross-train leadership duties, the PSC is asking for funds to promote 4 employees into a deputy director position. So we've got our telecom, our gas, our electric, and our renewables and energy efficiency are our 4 units. The total request of these before the governor's recommendations for amended fiscal year 24 and fiscal year 25 comes to $802,551. This concludes our request. Happy to answer any questions, Mr. Chairman.
You think you can teach Commissioner Harper how to talk that fast?
He usually talks faster than me. I'm just trying to get back to work over there.
Chairman Hubstetler.
Thank you for being here, Commissioner.
Yes, sir.
And I know you guys are talking capacity hearings, and I was looking at the Vogel on the EIA, the federal website that shows all those things, and you've got about a 7.5% increase in capacity for Georgia Power from that. But I saw it was a 47% increase in capital basis, which is what people pay it on. But also on there, I noticed that in 2007 and 8, Georgia Power sold more power than they did in 22. And looked like they had double the excess capacity of the national average. So with the staff, I'm not going to ask you something that you got to say ex parte on. With the staffing that has been given to you, do you think you've got adequate staff to review this capacity request, and do you plan on following their recommendations?
That's a great question. The answer is yes, I do, but we do have to seek the source from outside consultants to help us dig into these cases. Particularly the Vogel case, you all helped us with additional staff there. We brought in, and I think some of these experts that we brought in and the work that they did on the beginning stages of the negotiations really helped us in those negotiations to reach that stipulation. But at the end of the day, you're exactly right. But what we're dealing with now currently is truly unprecedented, just like the generational growth that our state has seen over the last, really starting in 22. We had an IRP in 22 that we voted on. We started hearings in January and we voted on that in July. But since then, the load forecast and the growth that we're seeing is truly unprecedented. So that's the challenge that we've got, as well as all of the other, the EMCs, Oglethorpe and the munis. Everybody's faced with this same challenge. Georgia's the place to be, the place to want to work and move your companies and your families. But we're having to keep up with that demand. Vogel has played a key role in where we are today, and one of the reasons why Georgia is and has that kind of level of capacity that many other states don't have. And we're still have competitive rates. We've gone through very tough challenges with increases, just like everybody has, but our level of increases is very modest in comparison to what other states are seeing. And that's why I think we're still probably just as competitive, if not more competitive today than we have been.
Chairman Dickey.
Thank you, Mr. Chairman. Chairman Shaw, we got some of the coldest weather coming later this week. Can you assure this committee that we have the capacity and grid network to handle that?
Well, that's the question we've been asking, Mr. Chairman. That is the question of the day for sure. This is a significant weather event. I don't know that it's going to reach the severity, hopefully not, of Winter Storm Elliott, the Christmas storm year before last. I'm going to just tip my hat to our utilities in this state. All of the utilities around us in Winter Storm Elliott had rolling back blackouts. That's TVA, Duke Carolinas, Florida Power and Light, and we didn't. But I will be the first to tell you that one of the reasons we had less industrial load on the day of that storm because it was Christmas Eve and Christmas Day, but so did they. But we performed well. I think that's why it's important what we're doing over there across the street today is making sure we can meet these needs. I think the biggest thing that you may hear about is starting last Friday, our gas operators did send memos out to all of their commercial interruptible customers, letting them know ahead of time that we do have a significant event coming and that there would be a chance to have to curtail those customers. But they understand that they pay a lower rate as a result. But that is a very strong possibility. But I feel very, very strongly that we're going to be able to meet the needs of our state through this weather event, and it's going to last several days.
Chairman Shaw, I have a question or more of a statement. One of the things I know we talked a little bit offline about this that I'm hearing more and more from members is about gas capacity. It used to be broadband. Mm-hmm. And honestly, the members of this room and the governor have done such a good job of tackling the broadband issue that we don't really hear as much about it anymore. Gas has quickly become that hot top burner issue, no pun intended. The thing I'd ask the commission to do, if you have ideas on ways we can do that, we tried to be creative last year and set up a fund potentially in GFA. Our understanding is the cost per linear foot is a lot higher from one of the utilities than it has been from the others. It's because the cost involved. We understand they're set up differently. But if that different setup means we should structure the way we fund things differently, we're open to hear those conversations. Without additional gas capacity, I'm afraid that we're going to be our own worst enemy as far as industrial development and even commercial development go.
Yeah, Chairman Tillery, that's a great question. And obviously that's something that you and I have had extensive conversations about, many of you in the room. It's a concern that I share, particularly as a rural Georgian that's passionate about the economic development that's going on because of y'all's leadership. But yeah, we're running into capacity constraints. We're faced with federal regulations that are making it more expensive and more difficult to install that infrastructure. But the biggest drawback is just the cost. It's a money thing. As a regulator, we have to be careful, and we're not going to allow our gas operators to go out there and build pipelines to nowhere, so to speak. It's not fair to the other ratepayers to spend a lot of money for one customer or two customers. So that's where these programs like our Universal Service Fund comes into play. And I know y'all we had worked on this audit for y'all. I've got a copy of that, but I know that y'all have seen that, but it really goes into detail on how that fund works. It's capped at 25 million now. We also have our Econ One tariff, which if a project meets a certain threshold in terms of economic impact, then we can allow, in this case, Atlanta Gas Light, the investor-owned operator that we regulate, to seek recovery. But those funds are just not near enough to meet the demand that's really out there that we see. I'd say at any given point, just the amount of projects that we know of out there in the state that need gas infrastructure that don't have the funds to get it. I'm going to use Brantley County as an example. Y'all have heard me talk about Brantley County. That's down in southeast Georgia, real close to the ports, right in the heart of this wood pellet territory where those pellets are going out of the Brunswick port. I mean, it's 30 miles away from that port. They have zero natural gas in that entire county. When I took office on the PSC, January the 3rd of 2019, we started working on Brantley. And at that point, it was roughly $25 million to bring gas to that site that we were looking at there. Well, now that cost has probably doubled, more than doubled. Just that we've seen that kind of cost increases in that period of time. But that doesn't mean we're not committed to try to do something. We're going to need y'all's help. I don't know whether that's a state appropriation or what. The Universal Service Fund is another tool, but we're going to have to figure out how to beef that up some as well. But I'm here and ready to help and work with y'all. We would love to have a seat at the table. It is a challenge, and it's just going to get bigger, particularly that area of the state where you're in, the growth in the Savannah area. That's one of the areas where we're seeing the biggest need.
All right, last question is from Chair Lady Houston.
Thank you. Did I understand that your phones don't have caller ID?
No, ma'am. Our phones are, if I would brought one to you, you'd laugh at it. It's like
Okay.
the ones we replaced at our office about 20 years ago.
All right, then I really think you need call ID so you'll know who you need to talk to. But anyway,
Well,
the next thing is on your Universal Access Fund, you said it was to fund independent phone companies.
the Universal Access Fund is a very dwindling source of revenue because it's funded off landline telephones.
Well, and I would think there'd be fewer independent telephone
Yes.
companies to fund.
That fund is actually phasing out over time. I don't remember
good.
exactly. There was two parts to the fund, and one part of that just phased out in the last couple of years, and the other part will be
When you say
phasing out.
phased out, I haven't noticed it's gone out for my phone bill on my landline
But
phone.
the part of the funding that was allocated to certain resources has been phased out. The part now is the part that's left where all of the independent telephone companies come in and put their proposals together, and based on a formula of customer served and so forth, that's where that money. And I'll be honest, that money has benefited rural Georgians in a big way over the time, because when we started looking at broadband, if you looked at those maps, many of those counties that were served by an independent telephone operator that had access to those UAF funds for years already had internet. Brantley County is a prime example. Brantley County had good internet service, but they just don't have gas.
Plant Telephone in Tifton did too, I think.
That's
I
right.
don't think it's called that anymore.
They did
Thank you.
change names. That's right. Thank you, ma'am.
Thank you, Chairman Shaw, and we'll let you go back to work.
Thank you. I appreciate
you.
y'all.
Next up is Director Tim Larimore from the Georgia Forestry Commission.
Thank you, Mr. Chairman.
Yes, sir. You got the floor.
All right, great. I did not put together slides for this group, and it reminded me a long time ago when I heard a presentation be given that said that folks that put slides up sometimes may need help on what they need to talk about. So maybe I shouldn't have said that, but I did say it. No, good afternoon,
You just brought
Mr.
printed
Chairman,
copies, right?
Tillery, Chairman, Chairman, Hatchett. Thank you guys for the opportunity to be here today. And, it is a wonderful opportunity to get to share with you and to talk about, the positive impact that our agency is having on our state. And then also to talk about the governor's proposed budget, his items in that budget, and then how we believe those will build on our successes. So what a great honor it is to be here. I do have Michelle Gray with me in the back of the room, our CFO. I also have someone I'd like to introduce to this body, Johnny Sabo, in the back of the room. He's our deputy director at the Georgia Forestry Commission, and we were able to recruit him away from Florida Forestry Service. He had 20 years of experience there. Johnny is a forester by trade. He has the highest qualifications when it comes to a complex incident manager that's available in the wildfire fighting community. And I am excited to have him on my team and on our team here in Georgia. And he's hit the ground running and has the great respect of our state and our agency, and he's doing great things. Thank you for the work that both of those individuals do. And matter of fact, for all of our employees that work hard for our agency every day. Our mission here at the Forestry Commission is to protect Georgia's forests, to promote them to be healthy, sustainable forests, and then also to promote the goods and services that come from those. I've been in this role now for a short, quick 3 years, and I was reminded this past summer of really what our mission is. And I wish everyone in this room had that opportunity, the same opportunity that I did. I was out on a property in Harris County, Georgia with Mr. Hal Avery. And Mr. Hal toured me around his tree farm, and he talked about the effort, the energy, the resources, the time that he puts into his tree farm, planting trees, managing those trees, growing those trees. He talked about the risk about wildfire and insects and disease and how impactful those types of disasters could be to his farm and to his family. And it just reminded me, as I was putting together these remarks for today, I thought back to that experience, and it just reminded me that there's tens of thousands of Hal Averys in this state. Tens of thousands, hundreds of thousands of forest landowners in this state that some know they depend on us and some may not know they depend on us as a state agency as their frontline defense against wildfire and forest health issues. And I was really just taken back. And again, I wish that everyone in this room could have that opportunity and just really see how important the work that our agency does for forest landowners all across our state, like Mr. Avery. Our top threat as an agency to our success continues to be recruiting and retaining skilled workforce at the ground level to be able to fulfill that mission. Fortunately, we're making success in that way, and largely in part because of what this body and what the governor, the investments that you have made into our agency. And we'll talk about some of those as we go forward. And I believe we're heading in the right direction to continue on those successes. I said I've been here for about 3 years now. I came in from the private sector. I've getting my feet underneath me in government, in the government arena, in the government sector. In those 3 years, I've had the opportunity to visit with some of my peers just to get some best management practices and learn from my peers in other states. And what I walked away from some of those learnings is that I truly believe that we have one of the best forestry agencies in the nation. And I am committed to continuing to ensure that we remain that way. I do want to update you on two ideas or two things that we've talked about in the past. And one of those is stabilizing our workforce. That's been a top priority for me since I've been here and a top priority for many of you. And thank you for the support. How do we know we're getting it? How do we know it's working? Turnover and recruitment and retention is one measure. Fiscal year 22, our turnover rate was 27% with our wildland firefighters, and it was 18% with our foresters. Respectively, the first 6 months of FY24, our turnover rate is in the single digits. For wildland firefighters, we're at 8%, and for foresters, we're at 3%. Again, I believe we're making some progress. What have we done to accomplish that? We've expanded and created a more robust career ladder for our employees. We, with this group, when your support for COLA raises over the last couple of years, we've moved the starting salary from when I got here for wildland firefighters and foresters respectively from $30,000 for a wildland firefighter and $38,000 for a forester to $41,000 and $50,000 respectively. We think that's making a big difference. We've managed our cash flow in a way that's allowed us to pay our employees when they go on Western assignments in a more efficient way. When I joined the agency, it sometimes was taking 12 months to pay an employee that went on a Western assignment. 95% of our employees are being paid in the next paycheck currently. We've used technology to automate reports for our employees. And then lastly, we've got a present and responsive leadership team. I think that's key to employee retention and recruitment. We made a strategic decision about 12 months ago, and we onboarded a new HR director as well, Connie Spruill, who had been with the Department of Corrections. She has come on board and just been a really welcome boost of energy to all of our HR efforts. You know, and I talk about recruitment. I regularly get phone calls now from some of you in this room, from private landowners, asking about vacancies that we have and giving recommendations for young men and young women in their communities that want to come to work for us. That was unheard of just 36 months ago. I want to update you on a couple big departments our agency has, the work that they do, and then we'll walk right into the budget proposals that the governor had put forth for on behalf of our agency. Unfortunately and sadly, our Forest Protection Department, which is the largest in our agency, unfortunately and very sadly this year, we had to deal with a fatality of an employee, Mr. Luke Daniels in Washington County. He was on the job. He was out doing what we call mop-up work after and measuring the fire the next day. It was about a 10-acre wildfire in Washington County. Had a cardiac episode and never was able to be revived, even though our employees rendered CPR there on the site. Really just a reminder of the work that our employees do and the risk and the fact that they are in dangerous conditions, and it is a hazardous job. So I know many of you and some of you in this room reached out to me directly. Those reach outs were greatly appreciated, and they were heartfelt, and our entire agency appreciated that. And thank you for supporting our agency during that really terrible time. And then in fiscal year 23, I would just say our Forest Protection Department serviced over right at 6,000 landowners with prescribed burning services, with pre-suppression fire breaks, and then many other services that we provide. And I'm really proud of the work that our employees are doing on a day-to-day basis. And considering that that happens in a very narrow window of time, it's usually November to right after leaf fall to early spring. So we do a lot of work in a very short period of time. We had over 2,500 wildfires that burned about 11,000 acres in our state that we responded to as well. I talked a minute ago about Western fire assignments. One thing that we do is support our wildland firefighters. When we're down and have slow periods here, usually in the summer periods, we promote and encourage our firefighters to go out west and help our states across the country when they need support and help. It allows them to earn some extra income. The real advantage for us as a state is that they go get experience. They bring that experience back to us and use it in their local communities when it comes to wildfire response and wildfire control. We sent over 208 firefighters out last year. 77 of those went to Louisiana. Oftentimes I get asked, how come we don't have fires here in the U.S. South? Let me tell you, Louisiana back in late summer was burning up. I had the opportunity to go visit those fires to get take a learning experience to see what it was like. 30,000 acres on one private landowner burned up. That landowner was very dependent on that forestry commission and forestry service in Louisiana. It looked just like, I heard PSC commissioner talking about Brantley County. It looked just like Brantley County, but it was on fire. We do, and we are susceptible to wildfires here in our state. Want to talk about our forest management department. Those are our professional foresters that give forest health and forest management advice. They visited over 8,300 landowners last year and looked at over 550,000 acres on the ground, providing written management advice, forest health advice, cost share incentives, payments, and management plans to landowners. Really, really proud of the work our professional foresters do. We have an excellent group of professional foresters across our state ready to serve. And I know from experience, many of you and several of you in this room have dealt with our foresters. And I know that you share your appreciation for the work that they do on a daily basis for our state. I'll turn to our budget. I'll just say right out of the gate, the AFY 24 and FY 25 proposal that the governor has put forth to our agency and for our agency is a historic investment. And that's not lost upon us as an agency. We are extremely appreciative of the investment that the governor and his team are proposing for the Georgia Forestry Commission. We believe that as an agency, we are strong fiscal stewards. We'll continue to be strong fiscal stewards and use these resources wisely and so that we can fulfill the mission of our agency and really continue to focus on protecting private forest lands all across our state. His recommendations include investing in our employees, safety by improving our communications, fiscal responsibility by reducing future liabilities, modernizing our fleet, our tractors, and our equipment, and then recapitalizing our state nursery that supplies seedlings to landowners all around our state. AFY 24, I heard Commissioner Harper say this about the $1,000 bonus or supplement, excuse me, that's a reversion back to my private sector days. It's a supplement, not a bonus. That was dispersed in $1,000 to all state employees in December. Greatly appreciated. That is included. That money's already been spent. It is included in AFY 24. We are thankful for that and appreciative of that and thankful for your support. Under the protection department, there is an $8.6 million proposal for equipment and installation for equipment associated with a new statewide public safety radio network to achieve statewide interoperability. We are a first responding agency. We are there right beside GEMA, DNR, Georgia State Patrol, DOT, when there are natural disasters, and this radio communication would align us with what they already have in place so we can communicate with them efficiently when we're responding. It will also modernize our communication systems and remove us off of the VHF to a VHF and LTE technology, which is a simpler, more forward-looking communication platform that we're excited about. It reduces our future liability, and how it does that is VHF requires towers. We own and manage about 77 towers. This will allow us to not have to replace all of those towers once they need to be replaced going forward at the tune of about $275,000 each. Under tree seedling nursery, there's a $621,000 ask there for a proposal there to recapitalize our nursery operation. And that really is to transition our nursery from a bare root nursery into a containerized nursery operation, which is what the marketplace, for those of you that buy tree seedlings, that's where the marketplace is at. That's where the marketplace is going. That will supplement a federal grant that we're receiving $160,000 a year for 5 years. So really look forward and ask for your support for that. A one-time item underneath, I guess that would be what we would always in the past call bond funds, but it's cash funds that's moved over to GSFIC. And that's for additional funding for our Bacon-Pierce County unit there on the Bacon-Pierce County line. And those are with additional costs associated with rising construction prices and construction costs. I'll shift to FY25. We certainly, the governor's proposing a 4% COLA for employees. And then he's also including a $3,000 enhancement for our law enforcement officers that we have on staff. We are greatly appreciative of that. That's a $1.6 million across all departments to our agency. Under protection in FY25, there's 2.3 million for funds for equipment in the protection operating budget. For me, that's a big deal, and I ask for your support for that. That allows us to be able to start getting in a tune to where we can build a replacement schedule, because we'll have those funds in our operating budget versus having to ask for bond money and having bond allocations on an annual basis. Will put us in a better seat for planning purposes for environmental cabs, which we still have 100 open cab tractors. And we need to replace those hundreds and put our workforce in cabs where they're protected from smoke, dust, inhalation, and allow them to be able to do their job and be fresh on their job. And there's also under protection a $300,000 ask for ongoing services contracts for the new statewide public safety network that is funded or asked for in the AF 424. Cash funds or bond funds for fiscal year 25, a new office construction in our McDuffie office. I have visited that office. It is in much need of repair or replacement. $1 million, a little over $1 million for MMR funds that will allow us to do some high priority maintenance across our offices around the state. And then $1.1 million for vehicle funding for light vehicles. I would just close up with saying that, the past 3 years have moved extremely quickly. I know they probably have for you, but I know they have for me. I am extremely proud of the agency that I get to go to work for every day. I'm thankful for the work that our people get up and go to work for and do every day. It's honorable work. It's good work. They do a good job. I'm proud of the support that you've given us as a body here. I'm proud of the support that the governor continues to give us and to demonstrate through this proposed budget. I think that it will help us build on our success for where we're at. And I look forward to how this historic investment will continue to make the Georgia Forestry Commission and keep the Georgia Forestry Commission one of the premier forestry agencies in the nation. And that's my commitment. And I'm convinced that we can do that and do that through this wise investment that has been sent our way. So thank you for the opportunity to present. I'll be glad to take any questions.
Thank you, Director Lamore. You have a couple. Representative Williams.
Thank you, Mr. Chairman. Thank you, sir. I was listening. Your turnover rate certainly speaks well for your department. Excellent, and certainly the pay raises were well needed. I want to ask, you implemented a program where you moved some personnel, and I'm specifically talking about a location in Midway, which happens to be very dear to me. You took the personnel, but you left the equipment where I think I understand that you will send people in. And that the personnel in that location, I'm a very young man, but it's been there all of my life. And I was wondering, with the intended results, were you able to attain them? Has it been successful? Or are you going to send my people back?
No, that's a very good question. That hasn't been done yet. That's proposed. That's our Liberty Long office combination. We are in the beginning, not beginning. We've already got the plan and the property acquired, but we haven't developed the construction yet. But the idea there is to get more individuals and more equipment under one roof for the supervisors to be able to supervise his team in a more efficient and a more allocate resources in a little bit more efficient way. So the equipment has not been moved, the personnel have not been moved, but the plan is to do that, Representative Williams. I'm convinced that there will, during higher fire danger days, we do this already because some of our counties are large. So when there's high fire danger days in our state, we will pre-position equipment around counties at fire stations or at different locations that we may own or have access to. We'll do that in that particular situation. I think having our individuals under one roof and having them underneath the supervisor and having all the equipment there in one location, a modern location, is an appropriate way to go. Great question.
Senator Sims, do you have a question? Did you? Okay. Seemed like your light was up earlier, I think. That's it. Thank you.
Thank you.
Next up is Executive Director Shanzia Thomas of the Georgia Technology Authority. They have a lot of money going through the Technology Authority, so see what, huh? All right. The floor is yours.
Okay. Good afternoon. Good afternoon, Chairman and members of the committee. My name is Shanzia Thomas. I am honored to serve as your state CIO and the Executive Director for the Georgia Technology Authority. I want to thank you for allowing me and my team members to come here and tell you about all the great work that we're doing at GTA. At GTA, we provide IT and cybersecurity leadership and services for efficient government to best serve Georgians. Is it up? It's not working. Yeah. Battery died. Okay, I'll do it here. Okay. That includes establishing IT policy, standards, and guidelines, which we call PSGs, security consulting, security plan review, security operations and monitoring, and security incident response support. We also deliver IT infrastructure services for approximately 89 executive branch agencies and manage network services for more than 1,200 state and local government entities. We also manage the state's official website, georgia.gov, which hosts about 70 agencies' websites, and the leading Georgia broadband program along with DCA to promote broadband services deployment in unserved areas of the state. Additionally, GTA published an initial policies and standards to guide the use of artificial intelligence in state government. Throughout the governor's budget document, you'll see FY25 an adjustment in telecommunications and infrastructure rates for the Georgia Technology Authority. Adjustments to FY25 budget programs are reflective of the rates adjustment for telecommunication and infrastructure services provided through GTA. It has been 8 years since the state made a rate adjustment for these services. In 2020, GTA lowered the administration fee to help reduce the cost to state and its customers. The FY25 service rates for telecommunication and infrastructure services accounts for the increase and changes of costs for technology services provided currently. On page 93 of the governor's budget report for FY24, amended FY24, you will see a payment to GTA's Technology Empowerment Fund, which we refer to as TEF, for 5 projects totaling over $158 million. Oversight provided through the Technology Empowerment Fund helps to ensure that critical IT projects are completed on time and on budget. GTA provides agencies with technical oversight and expertise to help ensure the success of these projects. This fund has a steering committee that meets quarterly to go over the funds in this project, and it is comprised of myself, Chairman Hatchett and Chairman Tillery, the House and Senate Budget Directors, Christine Murdoch and Brent Churchwell, OPB's Director, Rick Dunn, and the State Auditor, Greg Griffin. I'd like to give you a quick overview of the 5 projects that I know the agencies will offer more details in their presentations later. The projects covered in this $158 million, the first project is the State Accounting Office modernization for the next-gen ERP system. This is additional funding for an ongoing TEF project. It provides funding for a cloud-based software solution to replace the PeopleSoft Teamwork system that was installed in Georgia over 20 years ago. The ERP project, the implementation will probably take between 4 to 5 years. The second project, the Department of Labor Unemployment Insurance System, DOL is seeking to modernize their unemployment insurance system, a system that has been put in place and used since 1986. DOL will also receive federal funding to go along with this funding. And this project's timeline is about 27 months. The third project is the Georgia Professional Standards Commission's Education Certification Case Management System. This is additional funding for an ongoing TEF project. PSC is replacing their 25-year-old legacy system. It includes 2 applications used for managing credentials and ethic requirements. The fourth project is the Board of Regents ERP system. The current legacy ERP system for the University System of Georgia was developed more than 20 years ago. That system is older than some of the students there. This is an effort to make appropriate investments in the technical infrastructure required for their students, faculty, and staff to function effectively during a modern mobile user environment. And that last project, that's in that $158 million, Department of Human Services STARS Case Management System, and that's their child support system. And this project is a 5-year project, also with federal funding, and it is to replace a 29-year-old system. So this funding is needed because these systems are old systems. On this slide, you'll see the General Assembly provided funding for 3 of these projects, 2 that I had already mentioned, and here's a brief update on those. The next-gen ERP system has over 330 state staff involved in a Workday ERP implementation with Deloitte. GTA participated in the RFP development and provides oversight in all aspects of this implementation. The All Pairs Claim Database, APCD, it provides its APCD data provides to OCI for surprise billing. There's 10 use cases expected to be that will come up in the next 60 days. And again, GTA provides oversight and subject matter expertise in this project. The teacher certification RFP is expected to be released within the next 60 days, and GTA is leading the efforts in developing that RFP. So we're heavily involved in all of these projects that we're overseeing. So now in the next slide, I want to bring up my CISO to talk about our cybersecurity efforts. Steve Hodges.
Thank you, Sean. Good afternoon. I want to begin with some sobering statistics. We're seeing an increased frequency and severity of cyber attacks worldwide. There's been a 42% global increase in cyber attacks in 2022 as compared with 2021. The numbers are not in for 2023 yet, but we should expect increasing frequency and severity of attacks. We're seeing the total cost of a breach also increase worldwide. The total financial loss worldwide from cybercrime in 2022 was $10.2 billion, up from $6.9 billion in 2021. The average cost of a data breach has reached an all-time high this year of $4.45 million per incident, according to IBM's 2023 cost of a data breach report. The same report stated that 51% of organizations are planning to increase security efforts and security spending in response to these breaches. It's not getting better. It's getting worse. So what are we doing? Well, at GTA, we've stood up a security operations center for the state. We're logging and acting on security events that are coming in from agencies. We're helping agencies with vulnerability management and scanning of their systems. And we've rolled out an endpoint detection and response system to a variety of agencies that have elected to participate with us in that effort. As Sean has already mentioned, we have PSGs, policy standards and guidelines that we write for information security that help direct agencies in how to keep their systems and data secure. We're performing security program assessments where we're bringing in third parties that we've pre-qualified to review agency security programs. We're assisting agencies with audit preparation and with security programs, helping them write their security programs and their own policies. On page 95 of the governor's budget report, you'll see a $15 million expenditure or request in fiscal 25 to enhance and standardize cybersecurity services for executive branch agencies. State wants to continue to invest in the security of state assets. What do we want to do? These programs that I've just spoken about are rolled out to a subset of agencies. Some of those items are present in more executive branch agencies than others. This budget request will allow us to extend these services to all of the executive branch agencies. That's what we want to try to do, is bring all the executive branch agencies up to the same level of security, give them the same tools, give them the same support. Thank you.
Thank you, Steve. And now for our last slide, I'm going to bring up Jessica Simmons, and she's our broadband director, and she's going to talk about all the great things that GTA and DCA has been doing on broadband.
Thank you very much. Just wanted to quickly have the opportunity to give you an update of where we stand with the broadband program that the Georgia Technology Authority is assisting OPB with. Obviously, back in 2022, Governor Kemp allocated $414 million in state fiscal recovery funds for broadband expansion throughout the state. Last year, he awarded an additional $246 million in capital projects funding, which was also a subset of funding for connectivity within ARPA. And so combined with those two programs, we currently have roughly about $660 million in flight. Coupled with the matching funds associated with those programs, currently it's roughly about $1.2 billion that's currently being built because of these programs. And all of those locations have to be built by the end of 2026. I think the really important thing that we wanted to highlight today, though, is based on our update from last year, one of the things that we worked very hard on was to get Treasury to update some of their procurement guidance so that it was much easier for the companies that were actually building with these programs. And so we're very pleased that the money is flowing out of OPB much faster now because Treasury did make those adjustments. And so now, as of last week, roughly $163 million has been dispersed by OPB out of that $660 million for broadband. The other thing that we wanted to highlight as well is back in 2021, we had roughly, based on our state mapping effort, about 482,000 unserved locations. Fast forward to the end of 2023 with the grant programs that we have implemented, and we're currently standing at roughly about 120,000 remaining unserved locations in the state of Georgia that don't have a funding commitment for better service. And that's where obviously our next program comes in, where it was announced in June of last year that the state is going to be receiving an additional $1.3 billion in broadband equity access and deployment funding within the Infrastructure Investment and Jobs Act. And so with that program, we will work this year to allocate that funding to get to all of the remaining unserved, unfunded locations throughout the state. And then also additionally to that, we'll be receiving additional funding that we will deploy a grant program for later next year for a digital equity capacity grant to help facilitate digital literacy and subscription, and that will be through local governments and nonprofits. But with that, I'll turn it back over to Executive Director Thomas.
Thank you, Jessica. So that includes our presentation of GTA's overview, our cybersecurity program, our broadband program. So we open the floor for questions.
Just a little bit of money, right?
Just a little bit, just a little bit.
Representative Hughley.
Carl Lucas's. Go ahead. We'll repeat it for you. So go ahead and ask it and we'll repeat it.
And the slide that talk about 30-year-old things that need to be upgraded. My concern is, number one, are you confident that you can manage all these projects at one time, and going forward, what are we going to do to ensure that you won't make 30 years behind before we do this upgrade? Okay, to answer your first part of your question, it's not just GTA. We have the state agencies and their IT teams and their procurement teams and their staff. We also have the vendors. So with the vendors, the state agencies and GTA, I am very confident that we can manage all of these projects. And as far as, making sure we don't talk about these systems 30 years from now, we just need to make sure that we're constantly upgrading as we go along.
Representative Stoner. You did too?
Just talk. I wanted to ask a question specifically dealt with print and circle numbering down. So what is the definition of serve? Measurement changing that definition. So I know that we have to just understand.
Before you answer, I'm going to repeat his question just so the folks who are listening. Representative Stoner asked basically, could you give us the definition of served? He saw your 420, 480 go down to 120. Could you tell us what served means now by the federal rules?
Yes, sir, absolutely. So the definition of served at this point based on these federal programs is going to be locations that are at 100 by 20. So 100 megabits in the download and 20 in the upload. At this point though, we do still have a remaining 120,000 locations within the state that are below 25 by 3. So at this point, as we're looking forward to our next program, we really are looking at 3 categories of locations. The unserved locations, which are truly unserved locations that don't even have 25 by 3. Then we're looking at the delta of the locations that can hit 25 by 3 but can't do 100 by 20 as the underserved category. And then anything above 100 by 20 will be served. Sure. So again, 25 megabits in the download and 3 in the upload is kind of the base standard at this point. That's still in state law is the definition of served, but all of the federal programs have really kind of moved the de facto line of service up to 100 by 20, really to have the kind of capacity that you would need to, run multiple devices in a home, multiple people working, students working along with, someone teleworking, again, lots of devices pulling on that connectivity. The 100 by 20 threshold is obviously, a much better point to get locations to in Georgia so that, again, multiple devices can be running and not experience any issues within a home. So we are seeing that, we've made a really big jump based on the number of locations that still don't have funding commitments. But obviously we still do have a lot of locations that are in flight that are still being built. But then obviously we feel like the BEAD funding that we're receiving this year will be sufficient to get to the remaining locations.
I guess I get the last comment. First of all, Director Thomas, Jessica and Steve, I want to praise you for y'all have done an immaculate job with a lot of different projects from various scopes and from whether it be the all payer claims database to give us a better idea of where state funds are going and the impact that we're making. We increase a fee. We don't know if it's really making the impact we think. You guys have helped us there. The deployment of broadband, I think, will be the legacy of this legislature. What you have, because of you, we've been able to accomplish. You and Jen Wade, I think, single-handedly did it. Jessica, for those of you who don't know, literally Jessica and Jen Wade were helping make recommendations that the feds took on. Due to broadband. So it was incredibly impressive. And Sean Zia to head it all up. Now what we're trying to do with Workday, moving USG into a formula or a form rather where we can see what's going on. It's extremely impressive, and we really do appreciate all the work you've put into this.
Well, thank you, and we appreciate it as well.
On that, I have a question and comment though.
Okay.
The monies that you have, the only one I didn't hear you talk about is it looks like it's in the budget from Department of Insurance. What is y'all's was talking about this right? Wasn't there a Department of Insurance money that went to you guys at GTA for this year? Or am I speaking before? I'll flip back to the budget. Based on your look, I must be talking about something else.
Yeah.
I'll look at it later.
We're
Thanks.
just looking for the 158 right now.
I gotcha.
Thank y'all.
Thank you.
Thank you. But come on up, technology guys.
Hello.
Oh yeah, this thing turned on. You want me to test a couple? Yeah, maybe sure.
Do you think somebody like kicked it?
Maybe. Or hit the power button.
Huh? Interesting.
I meant labor, not insurance. Right. Sorry. I was like, I meant labor, not insurance, but I'll grab her offline.
All right. All right, y'all. Next up is State Property Officer Marty Smith and State Properties Commission Director Diana Pope, Georgia State Financing Investment Commission. Diana, the floor is yours.
All right. Chairman Hatchett, Chairman Tillery, members of the Joint Appropriations Committee, good afternoon, and thank you on behalf of the Georgia State Financing and Investment Commission, the Georgia Building Authority, and the State Properties Commission. We thank you for your time today. So any discussion of debt management needs to start with expressing our thanks for all that you do to support the state's AAA credit rating. As you all know, we are very proud of our AAA rating. This highest rating is assigned to those states that have demonstrated a high degree of creditworthiness to meet financial commitments. We like this map because it gives a great visual of how Georgia compares to the rest of the nation. The states shaded in green reflect those states that are rated AAA by all three of the major credit rating agencies, and has significant implications to help keep our borrowing costs at the lowest possible rates. And as often stated by Governor Kemp, Georgia's status as a AAA rated government is also an important economic development tool that signals to investors that Georgia is efficient, fiscally conservative, and a safe bet for investment. The governor's budget proposal for amended fiscal year 24 and fiscal year 25 is very intentional to invest in our capital infrastructure while using tax dollars as efficiently as possible. This slide highlights the reasons we have maintained our AAA credit ratings for over a quarter of a century. We have been able to navigate through various challenges over the years while proving we are worthy of the highest creditworthiness distinction. To get us through those tough times, Georgia demonstrated strong conservative fiscal governance. When needed, really tough decisions were made to maintain structural balance, which included painful budget cuts and reducing debt issuance. And then as the economy and revenue strengthened, Georgia demonstrated a strong commitment to build reserves and strengthen the state's liquidity position. I've been with the state since 1994 and during some really tough economic cycles, and experienced how during each downturn we learned, we were very intentional to respond well and make our state better prepared for future downturns. So the purpose of this slide is to highlight that we cannot afford to ever take our AAA for granted. And it is one reason we make it a priority each year to present our case to each of the rating agencies. Maintenance of our prime grade ratings requires continued attention to debt and liability management and commitment to strong fiscal governance to support structural balance. In addressing the amended fiscal year 24 and fiscal year 25 budgets, our presentation will focus on general obligation or GO debt because the General Assembly appropriates funding to the GO debt sinking fund each year to pay annual debt service. And that appropriation is a significant part of the overall budget. In addition, while funding debt service, the state has to also budget for essential programs such as education and healthcare, public safety, transportation. And we all acknowledge that our budget needs to be structurally balanced to address those costs. Although today's presentation will focus on GO debt, we thought it might be helpful to also talk about some of the other major debt categories. The General Assembly also provides authorization for new guaranteed revenue bonds that can be issued by state authorities. The last authorization was in fiscal year 2022, of which there is approximately $200 million remaining of that authorization that can be issued. The state's debt management plan, which will be released soon, combines debt service for both GO and guaranteed revenue debt to show that the state is in compliance with the state's 10% constitutional debt limit, which restricts how much debt can be issued by comparing all existing and unissued authorized debt service to the prior year state's treasury receipts. This 10% restriction is further limited to 7% by the board of the Georgia State Financing Investment Commission. The rating agencies generally look at all tax-supported debt to assess how well a state is managing its debt. And comparing the debt to revenue, and instead of comparing debt to revenues, the rating agencies compare debt to expenditures. As shown here, tax-supported debt includes additional long-term obligations that are supported by state general funds, even if there is not an official pledge referencing the state revenue supporting the debt. Conservatively managing the state's debt and other long-term obligations, such as pensions, is critical to support the state's AAA ratings. This slide shows one way the state has responded to various market and economic environments. A major contributor to the state's AAA ratings is the state's proven willingness and ability to maintain fiscal balance and adjust expenditures to respond to revenue collections. When times are lean, Georgia hunkers down and makes painful adjustments to maintain structural balance and keep from having to use one-time maneuvers to address budget gaps. And when times are good, Georgia is very intentional to take lessons learned to build back its reserves and strategically plan for the future. Maintaining fiscal balance is a priority, and we're so grateful for your actions that support a much-deserved AAA rating. As shown here, when state revenues tanked in response to the Great Recession and caused the debt service ratio to hit a maximum rate of 8.1%, the state's fiscal leaders were very intentional to reduce new debt authorizations. As the revenue environment improved, new authorizations approached more historical levels, and we are now experiencing the lowest debt service ratios in our state's history. To date, over $33.7 billion has been authorized to fund capital projects with state general obligation bonds or guaranteed revenue bonds. Approximately $9.87 billion in principal is currently outstanding. And as previously stated, over $1 billion of the state's overhaul budget goes towards annual debt service payments. Georgia's debt balances are often cited as moderate, and part of that is because our state funds a large portion each year for local school systems for K-12 capital projects. The pie chart shows outstanding amounts by program as of the end of calendar year 23. 60% of outstanding debt, as you see here, is for education projects. Bonds are also outstanding for important economic development and transportation investments, along with public safety and other vital capital projects. You are uniquely positioned to be able to make unprecedented capital investments in our state. The governor's amended fiscal year 24 and 25 budgets propose larger than normal capital investments, which will help extend the useful life of existing facilities and also meet future growth needs. And even more significantly, as the governor stated this morning, the 25 budget proposes using surplus cash balances to fund capital projects without adding a single dollar in additional GO debt, saving taxpayers millions in future debt service costs over the next 2 decades. This slide shows the impact of not adding any GO bond authorizations in fiscal year 25. Assuming a total investment of $900 million, with 20% or $180 million funding 5-year projects and 80% or $720 million funding 20-year projects, annual debt service over the next 20 years totals approximately $1.4 billion. This total represents estimated future debt service savings needs from the GO Debt Sinking Fund. And we're not the only state responding to having additional revenues and looking at other ways to fund capital projects. The rating agencies have noted that recent declines in total state tax supported debt levels reflects that states have been dedicating pay-go resources in lieu of borrowing in response to higher increased borrowing costs and also record reserves. As with managing our personal budgets, it makes sense to take advantage of excess cash balances to not only increase our debt, but also to look at ways to reduce the debt portfolio. The governor's amended 24 and 25 budgets propose allocating approximately $137 million for the purpose of providing debt service savings, which further reduces the state's fiscal burden for future generations. As shared earlier, there's over $9.5 billion of principal outstanding in GO debt. Our bonds trade very well, and there are plenty opportunities for brokers to find us good deals to purchase bonds traded in the secondary market. This slide shows purchases that have been made since July 1 of 2000 and the associated savings to the GO Debt Sinking Fund. Thank you again for your diligence, your hard work, your commitment to appropriate funds to support our AAA credit rating. We can't say that enough. And with that, I'll turn it over to Marty. Okay.
Thank you and good afternoon, Chairman Hatchett and Chairman Tillery. Well, we appreciate, and committee members appreciate the opportunity to come tell our story. I'm Marty Smith. I serve as the state property officer for the great state of Georgia, and it is a privilege to serve. Under my purview, there are 3 agencies that I serve. The first one being the Georgia State Finance and Investment, better known as GSFIC. We handle, it is divided, as you got to hear, the finance side, and I'll take this time to say, Diana and what she does, if you've never seen where y'all, the General Assembly commits to the projects and it goes into the bonding all the way to the sales until we get the money to actually spend on these projects. It's absolutely amazing. And Diane and her team are simply amazing to work with, and we couldn't do it. Obviously, the money has to flow first before the projects, and we thank you for that. But the other half of the GISFIC division is the construction that falls under my purview, and where we oversee the capital outlay projects and the construction management services for all agencies across the state of Georgia. The other divisions is the State Properties Commission. It's better known as SPC. We serve all the real estate and handle the portfolio for the state of Georgia. We manage it for properties for the state of Georgia as well. We're responsible for all the acquisitions and the dispositions for Georgia, basically buying and selling for all agencies we help there for state-owned property, excluding the Board of Regents as well as the Department of Transportation. Third and not least is the Georgia Building Authority, better known as GBA. It's the one that most people are, because it handles everything here, primarily on Capitol Hill. It owns and operates buildings right here in various facilities located around the state, but primarily here on Capitol Hill. Some 32 buildings, over 5 million square feet that we manage here on Capitol Hill and the state capitol, as well as the governor's mansion. We have numerous buildings, parking facilities, parks and plazas, warehouse complexes. We even manage and oversee 7 Confederate cemeteries. Services that are provided by GBA and their staff include maintenance, renovations, landscaping, housekeeping, event scheduling, food service, parking, and everybody knows as well, building access to everything here on Capitol Hill for security. With that, I hope that as you returned for your special called session, and especially now that we're in regular session, I hope that you've been able to notice a lot of the major improvements that's been made here on Capitol Hill, especially here with the transition of the Capitol and the work we've done. The Capitol's a very, very old building, and she's very delicate and takes a lot of work. And we hope we've played a lot of catch up and been able to make a lot of changes that y'all been able to notice. And with that, we couldn't have done it without the governors and the General Assembly's backing and support. So I thank you for that. When I came into office in 2019, we actually reported to then was Commissioner Greg Dozier. Mr. Dozier challenged us and said for 10 years, they've been trying to get the 3 agencies located in one place and utilizing the services of all those agencies. With that, we took that challenge on. COVID is a very, very tough situation in 2019. However, some good things did come out. We were able to do an intergovernmental agreement with some of the people that were going to be laid off at the Georgia World Congress Center. We were able to pick up about 55 members. We were able to do some internal stuff because the Capitol never shut down. We stayed open for business the whole time. But we took those employees. We were able to do some quick remodeling. And for once on Capitol Hill, all 3 agencies are together now at Trinity and Washington. And for that, we're very pleased because we do have the shared services of human resources, the legal, and IT. But with that, we put all agencies together simply because of the forethought many, many years ago of making these agencies and putting them together to utilize the strengths and weaknesses of each to combine to make a good, forceful team. I say that because some days we're known as SPC. Some days we're known as GISFIC, but almost every day we're known as GBA. And I want to make sure that is well known because we're utilizing the services, our expertise in all 3 of those divisions to where we are in our culture, working as one. And with that, we're going to jump into the slides real quick. I'll let Gerald Pilgrim take over right here to explain a few.
Chairman, thank y'all. We want to talk a little bit about GISFIC and their project management. And this is just through there. Currently, we have 128 active construction projects, either through CM at risk, and I'll talk a little bit about that in a second, and our hard bid projects. Since 2019, we've had 152 hard bid projects and 55 CM at risk. CM at risk are going to be the larger projects, really $10 million and above. So those are quite substantial projects that we have, and that's what a majority of those were. before 2021, the average CM fee, when we were going through it, it was selected by the using agency and GISFIC staff members, and they selected the contractor through an interview process. Basically, the winner was whoever got the most votes out of the committee. 2021, we had, well, in our average fee during that time was 12.29% when everything was said and done. We had some input from some members actually in this room, Chairman Hatchett being one of them, but where we looked at that, and in 2021, we actually changed the process. We actually added a couple of different factors that scoring not only was the interview, but we also was the proximity of the the contractor to the project, and also the suitability of the contractor on the project. And then we also included fee as a factor. Fee was 50% of the factor. They narrowed it down to a group of 5 contractors. Basically, what we look at is any of the 5 should be able to build it, or they shouldn't have been selected as the interview process. Once we did that change, our average fee is 8.5%. That's tens of millions of dollars that have gone back since 21 back into the projects to keep those projects moving. So we're very excited about that. 31% reduction in fee. And like I said, 100% of those projects go in there. One thing that we haven't been able to discuss, and we appreciate the opportunity to discuss it with there, was in 2022 and in 2023, GISFIC was given MMR money to do renovations, basically to apply for agencies to apply for grants. It was basically looking for agencies that don't typically get bond funds. And we went out and did it. The 2022 was 25 million, 2023 was 10 million. Of those projects, they're 80% complete at this time. 90% of the contractors are new vendors to the state of Georgia. They're a majority are local to the communities in which these projects are held. So we are creating jobs, and they're helping create jobs in this community through the efforts that y'all have given us. We've had over 1,500 individuals employed on these projects for a total of 76,000 man hours. So that project has been very successful. Last year, we were awarded $20 million to do demo projects to demolish some of the older buildings throughout the state. We looked at those projects, and we had to kind of narrow it down. Basically, we chose the ones that had the highest return on investment so that we could get paid back. How long would it take for the state to lose the operating costs of those buildings to get their investment back? 100% of the buildings chosen that were the state buildings are currently occupied, and they were all deemed non-salvageable and should not be occupied at this time. And then all the Board of Regents projects that were submitted were able to be funded. Due to that, the project is progressing on that one, but due to the age of the buildings, we have to do a lot of historical going back because of the time on it to document everything historically on those to prove that they're not of a historical value. Also, we have to do some remediation, lead, asbestos, all those type of things. That is going on, and so the project is moving forward. We have the state properties that were selected, the return on investment. So when the state will start seeing a dividends pay back is 6.4 years back on the projects that are state owned, and 11.4 for the Board of Regents. Board of Regents a little bit more because they were more on campuses and centrally located, and the state was a little bit different on there, that some of those were not, some of those were unoccupied. The states were all occupied. And we're going to use the same local participation methodology that we did for District 1 and 2. Additionally, there are over 300 agency managed projects that total $1.1 billion. Why is that important? Well, GISFIC manages the process of payments. We review all these projects for bond compliance and also the legislative intent. So that's where our office and Diana's office work well together to make sure that goes into it. So to make sure that the projects are moving forward. Additionally, we're responsible through our design review group for all the code compliance, life safety, constructability, and ADA for all state-owned projects. And then additionally, this year, we've seen a lot of money in the governor's recommendation where campuses had a lot of money on MMR for Department of Corrections, juvenile justice, I think behavioral health. all of that through some of the efforts that our staff was able to help these agencies in doing assessments for their projects. I know that's a hard slide to see, so I apologize for that one. But that is basically a history of the rents. We're going to talk about GBA. The GBA is not appropriated funds directly. We're appropriated funds through rental or intergovernmental agreements through agencies. Agencies have federal funds, state funds, and other enterprise funds that they may be paying their rents from. But what this slide will show you is that our rents since 2018 have not gone up any since 2018, fiscal year 2018. So, and at that time, in 2018, GBA had 3 million square feet of rentable office space that we had. Compare that to the Atlanta market rates, even with some of the stuff about everyone saying that the market is turned in Atlanta and everything is going in there. The average office rates right now through all the real estate professionals we ever get to is $33 a foot for full service support. 5% of that $33 a foot goes towards security, and the average employee pays $110 a month for parking. GBA, in our rent structure, 30% of our rents go towards security with the Department of Public Safety and the great work that they do here and funding Capitol Police. Our employees have a parking rate of $20 a month, and then 19% of our rents goes towards, we fully fund the State Properties Commission, where the state doesn't appropriate that. We also fund all the operations at the Capitol and other non-revenue producing properties. So the non-revenue producing properties, Mr. Smith's already mentioned, the Capitol, we have 360,000 square feet of office space that is non-rentable, that we don't generate any income off, like the Capitol, Post 50 and others. We also run the mansion, as he's mentioned. GBA also has the 7 cemeteries. And so when you look at the total cost, $7.1 million of our budget go toward these, maintaining these properties and toward the Properties Commission. Additionally, we have some major impacts to our budget that are coming in the next year, and we've actually experienced some already. Our cleaning contract that we have that does our night janitorial services, it's at the end of a 5-year plan. Right now, we're expecting July, we're anticipating at least a $250,000 increase in that annual contract. Our food service operations, 2 years ago, the day before the legislature was convening, our food service vendor quit. They walked out on us. GBA scrambled. We were fortunate enough to be able to hire a lot of the people that were currently at the food service areas. We took them on as direct employees. And then we also looked at trying to go out to outside vendors. Every outside vendor, it looked for us to go bring into, wanted us to guarantee them at least $2.5 million in profit to be able to do it, and that they would control all the costs and all the services. We did not feel that was very good. We want to make sure we have a very limited hours that we can be open for the public, for the citizens here. We're in a food desert. So we feel like that is actually a benefit for our employees and the legislature and the people to come get us to operate. So we do operate that as a loss. We also, last July, we were notified from DOAS that we had a $1.1 million increase in our property insurance premiums that we had not budgeted for. So we had to absorb that. We also anticipate this coming year, DPS was able to be, or our budget with them is about $8.4 million. A lot of the raises over the last few years have been fully funded by the Department of Public Safety. So they have actually been absorbing a lot of their costs. So with this year, with the raises and everything else, we feel like we need to absorb all the costs for public safety, and that'll be an additional $1 million a year. And then also, a lot of y'all have seen the Mullis, the gym. It is a service that we had that we were open last year, and we offer that as an employee benefit and the spousal benefit, and it cost us $350,000 to operate. Additionally, We've been able to pass on the pay raises that the state has passed on to the employees. We have made that a focus to pass that on. Since 28-19, that it's been $1.9 million in pay raises. We also had a 7% increase across the board on benefits costs that everyone had absorbed. So quite substantial amount. I think y'all can probably figure where I'm about to go on that too. So, but let's talk about 2 Peachtree. One of the big things 2 years ago was us to liquidate 2 Peachtree and get everyone on Capitol Hill. 2 Peachtree, although it was an old building and had a lot of problems, generated a lot of revenue for the Georgia Building Authority. We had $10.3 million of our revenue that we generate each year came from that building. We were able to reduce our expenses when we sold 2 Peachtree and moved everyone out of there by $3.9 million. This slide, again, it's a hard slide to see. But this portion to the left are all the contracts that we were able to eliminate, which was just over $3 million of contracts. And then we had 10 positions of GBA positions that we eliminated. So we really did cut. We didn't just pass it on to anything else. We were fortunate that a lot of these jobs were able to be just not filled and through attrition, but we completely eliminated those from our budget. Two Peachtree, we did sell 2 Peachtree for just under $39 million when all the fees were paid. But where did the money go? What have we done with the funds? Well, we had the consolidation project on the Capitol. That was the $50 million that we had to bring everyone back onto the Hill. That project was about $6 million short when everything was said and done by the time we got there. We also fully funded out of those funds the painting project that was just completed at $5.8 million. We also, in the towers, we had 20 of our floors that had not been touched. So we had 20 floors that looked great and were nice for the employees that had all these major renovations. And we had 20 floors that still had carpet on the walls and old parquet flooring. So we put $7 million to that project and are redoing the bathrooms over there. That project is pretty much complete now. There's a few little touch-ups that they're doing now. And also the GBA law, the 195, which is the law building renovation, the General Assembly fully funded the amount requested. However, there are some other infrastructure items that attach to the CLOB 254 and 244 that would benefit from having major upgrades. So we're not looking at some repairs or having stuff blow up in the middle of session and shut down buildings. So we're putting an additional $6.5 million into that project. Like I mentioned before, our 2024 numbers, we lost quite a bit of revenue. We lost $6.5 million roughly. So our budget was using some of the revenue from 2 Peachtree to fill that gap. We also have money set aside for Mitchell Street. If we ever get the law building done, is to redo Mitchell Street to make it a nicer looking, walkable, accessible walkway for that. And then we have $2 million in additional security upgrades that are going on Capitol Hill. And then we also have chiller upgrades that are happening in the towers. So $39 million is a lot of money, but it goes fast when you start spending millions and millions of dollars at a time. This is what our rents go to. Like I said, 30% of it go to maintaining these old buildings. 30% goes to public safety, 10% goes to utilities, 7% goes to housekeeping. And go back to security again, we mentioned that that's a lot higher than average, but again, we've got a different population here. Utilities, we're about average for commercial buildings throughout the state, is having 10% there. We're slightly above average on our housekeeping costs at 7, but we have extra, that's counting all the extra people we bring in during session to be able to handle the major crowds changing. Also landscaping, 5% of our budget goes to landscaping, which is higher than the state average for commercial buildings. But I think it's one of those things I'm very proud of the way the Capitol grounds are looking and the work that they do. Our administration costs, which is finance, purchasing, all those areas. It's 10% IT and parking. In the budget request, you're going to see that the governor's budget request has that there's going to be $10.5 million in additional rents that they've budgeted for agencies to pay GBA to help cover some of the shortfalls. But if we were to take into consideration the salary increases that we didn't do, the benefits that we had, and all the other things, we would be just over $13 million. So, we've lost a third of our rental space. So we feel like we've kind of attacked that and trying to go forward with those areas. Marty mentioned the other agency that we have is the Properties Commission, and just kind of hit a few highlights. And a lot of y'all deal with that. And Chairman Green's in the room, and I think he can speak wonders to what Frank Smith does and the Property Commission does. But one of the things that, you know, as Marty Smith just mentioned, there's 9,383 state-owned buildings. That excludes the Board of Regents, DOT, and DOT. We have almost 2,000 leases, just under 1 million square feet of, 1 million acres of state-owned properties. SPC's budget is fully funded by the rents on Capitol Hill by GBA. Last year, SPC was able to bring in $17 million from sales and leases of properties throughout the state. And what's really more remarkable is since 2013, when they were authorized to do multi-year leases, there's been $400 million in cost avoidance by being able to get buildings below market rate for longer terms. With that, we'll take questions.
Gerald, thank you. All of y'all, thank y'all for what you do. You do a great job, and you're very receptive to any request I have, and I know quite a few people have requests of y'all, so thank you for what you do. Got a couple of people, y'all, we're way behind already. I have had 2 people that have had their button pressed the whole time. They've been presenting. Chairman Beach.
Yes, sir. Yes, sir. 100%, and through your efforts, Senator Beach, we're able to get that. Yours and Commissioner McMurray's, we're able to do some stuff. The city has signed that completely over to us last year. We have $4 million for that. Yes, sir. As soon as we have the construction from the law building, which will be done next summer, we anticipate that construction to start next summer. So for the bollards and the safety and having real bollards that'll keep cars from coming in.
Chairman Lynn Smith. They're not working again. They're not working again. So sorry.
I think that Diane was and I think that's part of the
Diana Povin served 30 years. Thank you. And with that, we're going to move on. Thank y'all very much.
Sure.
Y'all, sorry, the mics are not working again, so I don't know what's going on.
Yeah.
Yeah, I'm on.
All right. Next up, Commissioner Christopher Nunn, Department of Community Affairs.
Go forward, it's this right one.
Okay.
Oh, wow.
Thank you. You're welcome.
Great. Thank you, Mr. Chairman. Good to be with y'all. Appreciate the opportunity, and I'll start off by saying thank you. A, thanks for the opportunity to present today. B, I know that the hour is late, so thank you for your commitment to this important work. And C, thank you for your support for DCA, including this process and participating in many of our activities around the state, and also the advice that many of you share with me from time to time. So let me, before I address the governor's budget recommendations, let me start by offering a brief update on the agency and the work that we've done since last session. As all of you know, DCA is responsible for a myriad of community development programs and activities, and each of these programs has unique funding sources. I don't have time to cover everything we do, but I thought it would be helpful to contextualize that our funding is derived primarily from federal sources, followed by state appropriations and other funds. DCA's mission is to help build strong, vibrant communities. I'm going to briefly talk a little bit about many of the different programs, but I know that I'm going to try to talk fast and help you make up a little bit of time. Our community development division is responsible for comprehensive planning for downtown development, construction codes, and the state's AmeriCorps program. Many of you, particularly in rural parts of the state, are probably familiar with the Main Street program, 91 Main Street communities across the state. And while the annual reporting for 23 is due today, if we look at the reporting for last year, 2022, these local programs fostered more than 1,000 new businesses in smaller communities around the state. I think that's a big deal and demonstrative of the impact of much of this work. The Historic Preservation Division, which moved to DCA in 2020, supports preservation through various designations and small grants, the Historic Tax Credit Program, as well as the federally mandated environmental review process. As you can see here in the upper right, over the last 10 years, those historic tax credits have helped preserve 771 significant properties in 56 counties across the state. Now, I know housing is a big concern, but it is not a new focus of DCA. Our Housing Finance Division has a portfolio of impactful programs. Actually, for 20 years, in partnership with the Georgia Municipal Association and UGA, we've led a community housing initiative that is as important today as it's ever been. What I appreciate about the Georgia Initiative for Community Housing is its approach to assessing local needs and developing local housing strategies. Now, to help communities execute some of those strategies, DCA offers several financing resources. Some of those focus on homeowner rehab and neighborhood revitalization, but perhaps the most significant resource in our toolkit are the housing tax credits, federal and state, which are essential to addressing one aspect of the housing continuum. Tax credits enable the development of affordable housing for seniors and families who subsist below the average income. For example, those in the hospitality sector, low-skilled manufacturing, call center operations, and most anyone that is earning less than about $25 an hour. On this map, and I know it may be hard to read, but you get the gist, you can see that we have funded 328 developments since 2019, and these developments are all over the state. Most importantly, whether rehab or new construction, these will provide safe, affordable homes for more than 35,000 Georgia households. Now, I'm sure that we all appreciate that homeownership is the ideal, not only for households, but also for communities. Our home ownership division is focused on getting people into and keeping people in their homes. Georgia Dream leverages tax-exempt bond financing and a network of local lenders, along with homebuyer education and other resources to assist first-time homebuyers. I'm proud that over the last decade, we've enabled nearly 12,000 households to achieve the dream of home ownership. At the top left, you will note that over the last 3 years, the annual numbers have declined a bit. And honestly, the lack of available housing stock, particularly that for first-time home buyers, is a contributing factor. And more on that later. Now, housing is important community infrastructure, but it is only one of many community infrastructure needs. Our community and economic development finance division provides a number of resources to enable healthy, safe, and thriving communities. Primarily through federal community development block grants, DCA has distributed more than $275 million to 204 communities since 2019. And the map on the left shows you the breadth of that distribution. This division is also responsible for economic development incentives and small business lending, the job tax credits, et cetera. For sake of time, I'm going to focus on the REBA program as it relates to the state's economic development success that the governor spoke about this morning. I understand you'll hear from Commissioner Wilson tomorrow. I know that you understand and appreciate, and they will reiterate that activity is at a record high all around the state. While I hear a lot of talk about the 5 largest projects in the state's history, all of which have landed over 2 fiscal years, it's important to note that the state's economic development team announced 426 expansion and relocation projects last year. As you'll hear from Commissioner Wilson, not only has there been an uptick in project activity, as you see at the top left, but also the amount of private investment, that's private investment that has generated. That's increased substantially. Now, not all of these projects involve discretionary incentives. In fact, the vast majority of projects occur as a result of land, local leadership, and job tax credits. But a small number, the most competitive based on quality of jobs, wages, or significant investment, do involve some discretionary incentives that DCA administers. In those cases, DCA works with economic development to determine eligible uses of funds and performance expectations. We then enter into a contract, typically 3 to 5 years, with the local development authority and the job creator or the company. DCA manages that contract to ensure that all of these requirements are satisfied. And on the rare occasion where expectations are not met, we either withhold the funding or claw those funds back. It may be worth repeating that Georgia does not buy jobs and investment. I did a random file sample of projects and observed that the average discretionary award ranges somewhere in the $750,000 to $1.5 million range. Compared to the private investment, those incentives may be 1%, often less than the total investment. And as you all know, we are constitutionally prohibited from giving money to companies, as some of our competitor states often do. Whatever we invest in, we take public ownership, whether that be land, infrastructure, or equipment. So REBA and EDGE incentives are simply an ante to stay in the site selection process and compete on our own merits. Moving on to the One Georgia Authority. One Georgia is focused on economic growth and vitality in rural parts of the state. The authority is funded through state appropriations with additional legislative oversight on the authority board. One Georgia comprises several key programs. The equity program invests in rural economic development capacity. You can see here on the map on the left, all of those red dots indicate equity investments since 2019. For example, Candler County last year requested $500,000 to assist with extending public infrastructure in an industrial park that was at capacity. This new infrastructure would open up additional parcels for them to market, and the authority matched the local contribution to complete this project. Ultimately, by the end of the year, 2 companies had announced plans to locate in this park. One, a local entrepreneur who was starting an ag-related business, and the other was a Hyundai supplier. Now, I wish that every equity investment paid off a return that quickly. The next program is the Workforce Housing Program, which is our newest initiative, thanks to your support with $35.7 million of seed funding last year. It may surprise you that programs like this are not simple to launch. It's not just an issue of new contracts and processes and infrastructure, but also working with community applicants to identify needs, to develop partnerships, and to encourage applications. I was extremely proud of our teams working together to launch this program in 2 short months. To date, we have extended 9 awards that will yield more than 818 new homes in 6 rural regions, from Seminole County in Southwest Georgia to Stevens County in the Georgia mountains. The interest in this program is high and continues to grow. Lastly, the EDGE program, which is a competitive deal closing fund similar to REBA, but focused on rural Georgia. Without getting too into the weeds on the process from the point where an offer may be extended, where it's accepted, where it's actually awarded and finalized, I will highlight that over the last 5 years, we have finalized 39 economic development EDGE awards in 28 rural counties. And those 39 awards have yielded 8,000 new jobs, helped us to retain 7,000, and yielded nearly $2.5 billion in private investment. Moving on, coming back to housing for just a moment, rental assistance is 100% federally funded, but I do want to highlight one important point that illustrates the challenge of housing affordability, especially to our lowest income workforce and fixed income seniors. So nearly 42,000 Georgians rely on DCA for rental assistance. That's about 12,000 vouchers currently. And as a normal practice, we opened our wait list last fall. That's not vouchers. That is simply the wait list to be contacted should vouchers become available. In 4 days, we had 175,000 plus applications for assistance, which is emblematic of some of the challenges that we seek to address. Next, I'll move on in the Homeless and Special Needs Housing Division. Here, the State Housing Trust Fund is an important and vital resource as it enables the state to draw federal funding that is then subgranted to service providers across the state. These funds and the federal resources that they unlock through HUD's continuum of care, which is a very wonky concept that I haven't time to explain today. Katie can help me. Have been relatively constant for decades. Again, I'm going to come back to that later. But before we move on to the recommendations, I would be remiss not to highlight the fact that I know you all appreciate all of this work and activity occurs and requires adequate accounting, IT, legal, and other administrative support. And I don't want to gloss over that, because when you consider the number of grants and loans and contracts that DCA administers, this is a significant effort. And I am really proud of the lean organization that we operate. So now let me turn to the governor's budget recommendations. And I'll try to move quickly. Hopefully I'm not speaking too fast, Mr. Chairman. Throughout, you will find enterprise adjustments related to the $1,000 per state employee that was recently included in our paychecks. Thank you very much. As well as the proposed 4% increase in the FY 25 budget. Cumulatively, these amount to $528,567 in the amended and $260,000 and change in the base budget. Under special housing initiatives, I mentioned that the funding for the State Housing Trust Fund has been constant for a long time. In the amended budget, we have requested additional funds for a $2.9 million required state match for an $11 million youth homelessness grant from HUD. The governor's office recommends that this be funded with $2,124,806 in new funding, combined with $1.2 million in redirected funds. Those redirects include $800,000 in special housing initiatives and $400,000 from the state community development programs. Cumulatively, that satisfies the required state match for the youth homelessness grant. In the same section, special housing initiatives, looking at the base budget, we propose using the same $1.2 million of redirected funds plus an additional $3,797,416 in appropriated funding to provide $4.6 million of funds to pursue a variety of other competitive federal grant funds to address homeless concerns. Yet while we anticipate the availability of these grants, notices have not yet been distributed, and the application cycles won't necessarily align with the state budget process, hence the request for funding, matching funding in the State Housing Trust Fund. I just touched on the $400,000 redirect from state community development programs in both the amended 24 and the FY 25 budget. You will note in the 25 budget, there is also an additional reduction of $302,087. That's for broadband funds that have been used to support our broadband mapping effort. In conjunction with GTA, who you heard from earlier, we plan to use some federal funding to continue those efforts, hence the program reduction here. Next, under state economic development programs, the governor recommends a $100 million amended budget add to support statewide economic development activity, specifically the REBA program. Despite the increased activity that we spoke about earlier, the annual budget for REBA has actually been reduced from $27 million in 2018 to $13 million today. And that simply doesn't support the current level of activity. Consequently, we must address the current needs in the amended budget. Last year, you provided amended appropriations specifically for 3 exceptional projects. This year, we're requesting funds both to address the current pipeline of activity and to replenish our working reserves that have been exhausted with the record level of activity over the last 2 years, particularly those 5 large projects I mentioned earlier. 3 things to note on this front. First, this funding is essential to our momentum and continued economic development success. For years, decades, in fact, Georgia has employed a model that enables us to respond at the speed of business. When speaking about our recognition as the #1 state in the nation for business 10 years in a row, Governor Kemp sometimes touts the data that makes those rankings up. Georgia ranks top in 7 categories, but one he likes to highlight is cooperative and responsive state government. Well, that responsiveness is not just a function of the executive and legislative branches working together and state agencies like ours collaborating, but it also has to do with our time-tested approach that enables Georgia to operate at the speed of business. Second, this funding supports regionally significant projects literally anywhere in the state, from the coast to South Georgia to Metro Atlanta. As I was reviewing the sample of projects files, I was once again struck by the breadth and flexibility of this regional economic tool. Third, we're not asking for any additional funds in the base budget, but that does mean that we've got to true this funding up in the amended to address the actual project activity and ongoing project program needs. Moving on to the Georgia Environmental Finance Authority, which is administratively attached to DCA. I expect you'll hear from Executive Director Hunter Hill at some point. He and his team are doing outstanding work to address extraordinary water and sewer needs statewide. This $250 million add in GFA's Georgia Fund is important to addressing expanding needs across the state. Finally, there are 3 items in One Georgia that I will take one by one. Like REBA, first of all, EDGE has been exhausted as well over the last 2 years. One Georgia's base appropriation, roughly 21 million, down from 48 million a decade ago, has not allowed EDGE to keep up with the current level of economic activity in rural Georgia, particularly over the last 2 years. The governor's recommending the addition of 100 million in the amended to replenish EDGE, both the current project pipeline as well as adequate working reserves. But also this funding will support the new rural site development initiative, which I know he alluded to this morning. And I don't want to get out ahead of Commissioner Wilson, but he and I both have concerns, and I know several of you have shared these as well, that about the dearth of construction-ready sites across the state. That is, sites that have utilities and infrastructure in place that site selectors today put a premium on. The second One Georgia item relates to the workforce housing program, where we have already begun to make an impact. The governor's proposed continuing this initiative with $50 million plus an additional $6 million in the base. In the amended, you'll note an add of $23,921,179, which combined with $26.1 million of residual funds from the discontinued Rural Innovation Program, this amounts to $50 million for workforce housing. Rural Innovation accounted for $5 million in the FY24 budget, and the governor recommends repurposing those funds and an additional $1 million in disregarded funding to provide $6 million in the base. Depending on the circumstances this time next year and the trajectory of this program, I envision a scenario where we'll be having a similar conversation in the amended next time or this time next year about this very successful program. And last, but certainly not least, the governor recommends transferring $450,000 in the base budget from One Georgia to the Department of Economic Development for the Rural Strike Force Program to more accurately reflect the administrative arrangements for that particular program. With that, Mr. Chairman, I'm going to take a breath. Thank you again, and take any questions you may have.
I thought you were going to catch us up. You did good to start with, but you slowed down. Senator Lucas.
Commissioner.
It's working. The mics are working. There should be.
Commissioner, what do I have to do to get you to come to Hancock County and Johnson County? I need some help.
Just see me afterwards and we'll get on the calendar. I'm through there all the time. So look forward to meeting you while we're there.
Representative Gamble.
Thank you, Commissioner, back here in the back. I had a question. I know there's a lot of investment in the infrastructure this year for our local communities. Is there currently a limit on the amount that a county can get through GFA? Is it a $25 million limit?
There is that, and I will tell you, that's a great question for Executive Director Hill. I do sit on the board and I do know that there is a limit, but I'm really hesitant to tell you what it is. I think you are right, but let me follow up and make sure that we've got that correct.
Good.
So,
I think it would be good as we have this additional money, there might be some consideration if that is the case, that we at least have some type of waiver process for our communities that have these large projects coming that may be a little bit low to handle the volume of what some of us are experiencing. I just wanted to mention that.
yeah. So just like I believe that you are right about the limit, I also believe that there is a waiver process in place, because I know from time to time we may see some, but again, let me follow up with you after I speak with Hunter.
Senator Davenport.
Thank you. Thank you very much, Mr. Chairman. Thank you, Commissioner, for the presentation. I was concerned about the housing assistance and food assistance, and I think I asked you last year about that and the money that we got from the feds, and you said it went straight to the counties and the counties distributed. Can you tell me today for a fact that the counties are helping people
And if they have not, have they returned the money? I'm not sure if it's the CARES money or wherever, but if they have not, did they return the money? And if they have they been accountable for it? Have they, do you have an audit? Where can I see this audit? Do we have to go to the counties and ask them and they kick rocks all day and never answer the question?
So a lot packed into that, and I'm trying to isolate the specific program, but I think what you're asking about is the emergency rental assistance funding that flowed to the state that was dispersed. And yes, we, along with our 12 local partners in that program, distributed $1.2 billion out of that program. I glossed over it because I was trying to make up some time for the chairman. But we did use some residual administrative funding from that program to stand up a 2-year eviction prevention program with 2 service providers, Georgia Legal Services and Atlanta Legal Aid. If you think about it, they're running a program that they have about $20 to $25 million a year to run. At the height, we were distributing about $70 million a month cumulatively with our partners. So yes, all of that money has been exhausted and those were finite federal funds.
Representative Buckner.
Thank you for your presentation. I learned a lot. Housing issues have been brought to me quite a bit recently. And in some communities, there are some really well-built, out-of-style homes from the 1920s and 30s, which are actually historic homes now. And those neighborhoods are kind of declining. I hate to say that they're becoming a blight, but some of them are. So my idea was, is there a way that we could go into some of those communities as a neighborhood and work toward affordable workforce, low-income housing, which would ultimately maybe eliminate the blight, the crime, and regenerate that community to be flourishing and thriving again? And in particular, I'm thinking about the tax credits that were mentioned. Some of them are, the word I use is stackable. You can have multiple, like a historic one and affordable housing one. Are they stackable? Is there something we need to do legislatively to make that where that could happen for those communities to be renovated?
Right. So on the last point, I'd love to have a conversation offline about how you might be able to better leverage those tools, but you're exactly right. The historic tax credits, a portion of those, not the commercial component that goes to redevelop kind of large scale developments, but the historic home component absolutely is an important tool when you look at it through a housing lens. And I appreciate you bringing that up. We had a sidebar, but never followed up. So I will circle up with you, and I may pull my historic preservation team in that conversation as well. Thank you.
Got a question quickly, Commissioner. I'm just following along the state community development programs, the 400 that came out. I'm just trying to track what it was. It looks like, would that be the Helping Hands End Hunger program and the 211?
That is my understanding. Yes.
Okay. So those were what was being proposed to be cut. All right.
Representative Becky Evans.
Thank you. Thank you so much, Commissioner. So I just want to confirm that 4 new housing initiatives for this year. We have the rural workforce housing, which we had last year, and we have it this year, 37 million last year, 50 million this year. And then, has there been any increase in the DREAM and the home ownership program?
So the Georgia Dream home ownership program is funded entirely through bond issuance. The last 3 years, let me go back to that slide. I know you're the last 3 years, in part due to the lack of first time. Our average home price in the Georgia Dream program is about $201,000. You go look on the MLS, there's not a lot of properties in the state at $201,000, right? So the last 3 years, we have not used up all of our bond issuance authority to extend first-time homebuyers mortgages, but that is something that we continue. We're through a lot of different things, and I'd love to talk with you offline about this because it's actually a longer conversation than I'm going to be allowed time for. It is a big push for us to get people into homes, and it's not a state appropriation item.
Okay. All right, great. And I just want to confirm, and then set this other thing that's new is the state housing initiative and the new funds going into that to leverage more federal funds. Is that right?
That's correct.
In
There
the-
are at least a half a dozen grant opportunities that we know from our contacts with HUD. We're a very major HUD partner that are in the planning phases, but they've not been, it's called a notice of funding availability, or NOFA. That NOFA has not been laid out. So those are funds that we will pursue provided the additional funding to match.
Commissioner, that's it. Congratulations.
Thank you. Oh, and
Thank you.
And if I might say one thing, if this doesn't tell you how we collaborate as state governments, Hunter Hill's already gotten back to me, and that is in the process of increasing that limit. So we do work well together, and thank y'all very much. Thanks, buddy.
Thank you. Next up is the Commissioner of the Department of Transportation, Mr. McMurray. It's hot. It's hot. Feels good. Feels good. Welcome to the last presenter, Mr. Moneyman.
Yes, sir, Mr. Chairman. Okay.
All right, Commissioner McMurray. Hold on, there's still a few people coming in and out. Let them get in and out. It's probably all your team.
It's good to have entourage.
They'll keep you straight. All right, Commissioner McMurray, welcome, and the floor is yours.
Thank you, Chairman. It's great to be here today. I'd first like to start by recognizing two of our board members who are with us today. They may be entering. We have Ann Purcell, our Vice Chair from the 1st Congressional District, and Miss Stacy Key. There's Ann in the back left, and Miss Stacy Key from the mighty 5th Congressional District, as she makes me refer to her. I want to thank them for their support of the board for GDOT, and also their work with you here in the House and Senate on your transportation issues. So thank them for being here today. I understand your day has been long and it is hot in here. It's not hot outside, but it's hot in here. So I'll try to be short since your day has been long. I was really excited to see the governor's budget recommendation and certainly appreciated his comments this morning. So let me just jump right to it. And as you look at the Georgia DOT budget, I just wanted to remind you that you're going to see 4 different fund sources that refers to our budget. One is motor fuel. Then you'll see the Transportation Trust Fund, which consists of the alternative vehicle fee, the heavy vehicle impact fee, and the hotel fees. Those are the 3 revenue sources that constitutes the Transportation Trust Fund. Then we have the Transit Trust Fund, which comes from the rideshare fees, and of course, state general funds as well. So let me take a look. Let me show you on the next slide how we deploy these revenues and what we did last fiscal year as it relates to our capital construction program. So this is delivering projects here in Georgia. As you can see, we executed 1,638 professional services contracts valued at $695 million. These are contracts for consultant services to do things such as design, geotechnical work, environmental work, right-of-way services, the purchasing of right-of-way, and also construction management. So this is the consultant resources that we use to supplement our staff to deliver the capital projects throughout the entire state. Also, you can see that we acquired 1,634 parcels of right-of-way or easements across the state. which is no small feat in itself. If you think about every right-of-way transaction you ever done, ours are the same ways with closings and estimates and all those kind of things to get to a closing. And you'll see that we bid 301 projects totaling a little over $2 billion last fiscal year. Now, out of the 301 projects we bid, we did reject 25 projects, which totaled about $422 million. We rejected those bids and we repackaged some of those to make big projects into smaller projects, and we simply rebid some projects as well. So why did we reject 25 projects? Those were due to high prices. And so on the next slide, I'd like to share with you a little bit of a national perspective on cost. And you've got some of that this morning from the state economist, but this is a very busy chart from the Federal Highway Administration. And it's also an eye test for this late hour of the day. What this chart is representative of is the Highway Construction Cost Index, which consists of asphalt, cement, reinforcing steel, electrical conduits, concrete, and other commodities that go into projects. So this is actual cost data from across the United States the Federal Highway keeps track of. Now, what I want to show you is the National Highway Construction Cost Index is the red line, and you can see NHCCI there to the top right. The CPI that you talked about first thing this morning is the blue dash line toward the bottom. The Power Producer Index is the green line, and the Employment Cost Index is the yellow line. So this is basically comparing all the indexes of those various and sundry indexes to each other. The main point here is the orange area below the red line down to CPI is making a point that basically the transportation construction cost is outpacing even that of CPI. Most people think about inflation and costs related to definitely to CPI. In fact, from Q2 of 2020 to Q2 of 2023, the Highway Construction Cost Index increased by 51%. So you can see a 51% increase in those costs. Now, that's the national perspective. Let me drive this home just a little bit closer to us here in Georgia of the cost of doing business. In the top table, you can see the percent increases of the going back from December 2020 to October 2023 that we've realized in bidding projects. And I'll start there with resurfacing, an 80% increase. But what that really means now is it costs $335,000 per mile to resurface a 2-lane road. So think about that, 335,000 miles per mile for a 2-lane road. A roundabout has increased by 114%. Average cost for a 2-lane roundabout now is $3.4 million. In widening, you can see that widening has increased on average by 118%. And if you look at urban widening in an urban area from 2 lanes to 4 lanes, that is now averaging about $19 million a mile to widen a road from 2 lanes to 4 lanes. And we've actually seen higher costs of that in some areas. Now, the bottom table is, I want to talk about routine maintenance contracting. So the contracting that we do to the private sector to do things like pavement preservation, patching, crack filling, guardrail repair, sign repair, things like that. So in fiscal year 2020, we bid 238 contracts with the average cost being $428,000. In 2023, we only were able to do 139 contracts. That's 99 different at $620,000 on average, which represents a $192,000 cost increase on average per contract. So the dollars didn't allow us to go as far. We couldn't do as much work because of the increased cost, basically. So simply put, a dollar or hundreds of millions of dollars just don't go as far as they used to. That's why the governor's budget recommendation is so important for our Georgia's transportation infrastructure future. So let's look at the budget highlights for amended 24. And let me start again by thank you. A sincere thank you for your support for the employee pay raises as in the amended budget year, as well as FY25. The FY24 pay raise is helping with our retention. We're currently at 3,900 employees. We're really striving to try to get to 4,000 or more. Last year, when I stood in this very place, we were at 3,775 employees. So the increase in pay has certainly helped with our retention rates. And I might add, our employees are truly amazing and our most valuable asset we have. And I'm able to say that today from our district in Northwest Georgia and our district in Northeast Georgia, who started Sunday pre-treating roads based on this weather forecast that we had and the inclement weather that was experienced in the very northwest part of Georgia. They started on Sunday and have been working around the clock ever since. And I'm glad for the sunshine and the wind, even though it is cold. So be careful for black ice still. That's your warning. Again, big thank you for them. So let's start with our revenue for amended 24 and take a quick dive into that. Just going to highlight the 57.9 increase in motor fuel, which represents interest earnings adjustment, and $1.506 billion in state general funds. So let's take a look at where those $1.5 billion are going to be used. If you want to look on the summary, that's on page 375, I believe. But I'm going to draw your attention to the capital construction program. And line item 2 says, provide funds to expedite the department's existing project pipeline. So you can see that there's a $659 million add in state general funds to our capital construction program and an $8.5 million add in motor fuel to the capital construction program, bringing it to $1.68 billion. As you just saw, those cost increases of project costs that I talked about, this additional funding will keep us moving the projects that we're currently working on forward, and will give us the capability to advance other project phases like design, right-of-way, or construction into future, move those projects ahead, basically. So based on the timing of the amended fiscal year, it's likely that we'll start deploying these dollars this fiscal year, but the most of those certainly will be deployed into next fiscal year, just based on the timing of the budget and bidding projects and getting things moving. We're committed to working with our transportation committee chairs as we move through this session and as we work with our team at planning to move forward strategically on what projects get the benefit of this additional revenue. Now, let me turn your attention to the local maintenance improvement grant program. And line 2 there talked about providing a one-time state general funds for the additional support of local transportation infrastructure projects. And that's exactly what that local maintenance improvement grant program is the formula dollars that go right out to our cities and counties. The $200 million add is basically a doubling of the LMIG budgets. And just like us at DOT, the cities and the counties have experienced the same cost increases that we've seen. We look forward to working with ACCG and GMA on deploying these LMIG funds strategically to all the cities and the counties across the state. Listen, this is truly a wonderful add for our cities and counties that all have significant maintenance needs, from resurfacing to repairing bridges and pipes and safety projects as well. So just a wonderful opportunity for our cities and counties that have tremendous needs. Let me stay with the maintenance theme just for a moment. And on the next slide, we're going to look at the routine maintenance budget. So routine maintenance is just the upkeep of our roadways and roadsides. And so this was one of the bigger adds for motor fuel. $32.4 million of motor fuel was deployed to routine maintenance. That represents about a 7% increase in the routine maintenance budget, and those dollars will go directly toward taking on the increased cost and maintenance contracting costs that I've shared with you in a previous slide. Now let's move to the biggest, one of the new programs as well that I'm super excited about, and we're very excited to have funding for Georgia's freight future. You heard at Eggs and Issues, Chris Clark give the 91% growth in tonnage out to the year 2050. I always remind people that we're almost equal distance to 2050 as we were to 1999. That doesn't seem like that long ago, thinking back to 1999. But what Chris didn't tell you is the makeup of that number. We will see 96% increase in freight tonnage on Georgia's highways 69% of tonnage growth on Georgia railways that aggregate to be that 91%. The other thing Chris didn't share with you there is we know that the congestion cost back in 2015 for freight on a daily basis was about $14 million. When we project the congestion cost of freight to 2050 without doing anything, that number is more than 2 times greater at over $33 million on a daily basis of congestion, unless we did something about it. That's why this program is so important. Tomorrow, the planning division will be posting the 2024 freight plan, a business-focused planning analysis that builds upon a joint study committee between the House and Senate going back to 2020 and some subsequent study committees, as well as all the great work that Janine Miller and the planning division has done. Things like the Coastal Empire study, the I-85 planning and environmental linkage study, the Troup County study, the State Route 365 study where the inland ports going up in Gainesville, just to mention a few of all the studies of freight-focused work that planning has done. This funding will absolutely allow us to get started on things that we did not have funding to get started on. And it will certainly help us to advance the things that we're already advancing and freight-focused and hope to accelerate those. Again, we look forward to working with our transportation committee chairs as we move forward through this session and keep you updated on what these additional revenues will do. Moving very quickly into 25, again, just a few highlights. We'll start with the revenue. Revenue is add $113.3 million to bring the FY25 budget to $2.5 billion. You can see the distribution between motor fuel, transportation trust fund, transit trust fund, and general funds here in this table. Now, let me just sort of share with you on a few items of where the bulk of the additional revenue is being utilized. We'll start in capital maintenance, adding $35.3 million, which brings us to a total of $194.7 million, which will leverage federal money to be right around over $400 million for capital maintenance. Capital maintenance is resurfacing, rehabilitation, bridge repair, and bridge maintenance, capital bridge maintenance. As I said, resurfacing has increased by 80% since 2020. So this helps to deal with those increased costs and will help us address our capital maintenance needs across all of Georgia. On the next slide here, I just want to again call your attention to the LMIG program. The $7.3 million increase in FY25 is representative of the increase in excise collections brings it to $220 million. That $220 million in FY25 and with the amended year brings the LMIG budget to $638.7 million. That is a really big deal for our cities and counties across this state. It's a fantastic opportunity for them to work on the backlog of projects that they have. Next, I'll just call your attention to another big add. It was $34.5 million in routine maintenance, the same as we had in amended 24. $27.4 million of that $34 million is going to go right after the increased materials cost and contracting cost. And lastly, let me just call your attention to traffic management, a $4.94 million add to $3.9 million of that's going toward increased traffic operation project costs. So you think about the technology projects, the signs, the cameras, and we're even putting broadband along our interstates now to deal with increased project costs. But very importantly, part of that $3.9 million is going to go to address recruitment and retention with our HERO program. Back last year, we had to reduce our HERO program from 24/7 to reduce their hours and also scale down their coverage area because out of 120 HERO operators, we've got down to 30. Okay. The good news is we've built back to about 80 through a lot of recruitment and retention, just as I mentioned through the previous thanks of what the increases have done has certainly helped retention, but we still have work to do. We bring HERO trainees in just under $20 an hour and then move them to $20 an hour once they become permanent. So we have a lot of work to do in that regard. It's one of the most popular programs we have. And if you've ever been helped by a hero, you know how they got their name. I will add that we've backfilled what the heroes, when we had to shrink their hours of operation and their coverage, we've backfilled that with the CHAMP program that you see outside of Metro Atlanta to cover that. So a very small ad out of a big budget, but a very critical ad, again, to invest in our people so that we can cover the roadways of Georgia and keep things safe for our first responders out there and you who may have a flat tire or need a gallon of gas. We look forward to working with the subcommittees, Mr. Chairman, as these budgets move forward. We sincerely thank you for your support of Georgia's transportation infrastructure and the work you've done here at Joint Appropriations, and I'll be glad to entertain any questions you may have. Thank you for this opportunity.
Thank you, Commissioner. Page 4 of your presentation is the National Highway Construction Cost graph. You mentioned a day where basically cost, I think you said doubled. You may not have said doubled, and I can't remember when that was, but that doesn't really matter. What, if you could put your finger on one or two things that really caused the cost to increase, what would that be?
Well, you know, I'm not an economist, I'm an engineer, but I play an economist at work. So a couple things. One is energy. So if you look at the power production index, the green line, energy to make raw materials and products has an impact. Sort of the interesting thing here, though, is you see that PPI line going down, the highway construction cost index has not reflected there. The other thing that drives construction commodities prices is the dollar barrel of oil. So petroleum products drive a lot of the cost as well. So when you see oil prices go up on a per barrel cost, you'll see those commodity costs rise as well. Labor is a component of that as well, as labor has continued to increase. And as you heard this morning, you know, nobody wants to let anybody go. So salaries and wages have risen as well. But the biggest things are the power production and the correlation to the barrel of oil, which has a lot of those commodities. There's steel was an impact too, sort of globally worldwide with the conflict in Ukraine. That has had an impact on the world steel supply. As big as we like to think we are, we met with a steel producer who reminded us that transportation is a very small user of steel compared to other durable goods and auto manufacturers and people like that. So those are the big impacts.
So you didn't mention demand. And I would almost think that in Georgia, that could be part of the issue, because as we all know, there's orange cones everywhere. But I'm wondering, you know, we're putting a lot of money in there. We've got local communities that basically are bidding against each other for the ability to have stuff done. I know there's been some discussions about groups getting together to possibly form a bigger conglomerate, maybe counties or whatever, to try to get a better cost. Do you think that is at all possible or could be done, or would it be fruitless?
Yeah, a couple things to respond to that. Very good question. Is certainly aggregating and scale of economy can be good. A lot of cities will go with counties sometime to bid their resurfacing so they get a bigger package. The issue now is risk, though, is if it gets too big and too long, then contractors are having to build the volatility. So you're going to pay for that risk up front. But back to the sort of supply and demand, we did a pretty good look, a hard look earlier or late last year, and we're still averaging over 3 bidders per project. And on bigger projects, we're seeing 4 and 5 bidders. So we have ample competition. And we did an analysis of the capacity of the contractors to do work. So every project we do and bid, the contractor has to put up a performance bond. And they have to get, you know, credit that basically says they have the capacity to build this project. If not, the bonding company has to take over. So when we looked at last fiscal year's 301 bids, there was still the winners only. So just the people that won still had over $12 billion of bonding capacity available. So the financial markets say the contractors have the capacity. You know, on a daily basis, is it hard to hire people? Yes, everybody's got the same challenges. But when you look at that capacity, I'm not sure that there's a lot of bidding against each other. It's just the fact of unknowns and bidding risk over time. That's why we've taken some of the big projects and chopped them into smaller projects so that there's more quantifiable risk and less risky of time over a project that may have a 3 to 4 year duration.
Thank you. Senator Beach.
Thank you, Mr. Chairman. The other issue you didn't mention was right of way. And I know that's, at least in the metro area, it's been a major cost in projects. And I've been telling my cities in my county, Cherokee County, they want to build that ball ground bypass. I said, acquire as much right of way as you can, and we'll get the construction money later, but that land's going to continue to increase in value.
I believe Will Rogers said it best: when you better buy all you can because they're not making any more of it. So.
Representative Vance Smith. Oh, don't tell me you can do that.
I get it on every way, and I know you're not trying to pump it up or not pumping it up any of it. You think we can get it from some kind of state where we could? Yeah, she's there. She's rural area for picking up businesses. There are people and they're finding there that have to track. It's very.
The question was about airport aid for those online.
I was able to hear it. So to restate the question, was just a question about airport aid. Notice that there was no change. You're correct. There was no change in the amended 24 or 25. I can tell you that we did a call for projects for fiscal year 25. We're already trying to work ahead on that. I'm trying to thumb to a number. We had somewhere around 400 projects submitted for over $400 million. That would include federal, which is about another 20 to 40 million. But as you can see, our line item of airport aid is around 26 million or so. I'm shooting from the hip here, trying to page, but so we'd welcome a conversation. Obviously, there's a tremendous need for airport aid around this state.
Senator Sims.
Thank you. Thank you so much, Commissioner. Commissioner, are there any matching funds for unpaved roads? And do we get a discount if we just pave one instead of two sides of the road? Because we had a lot of dirt roads in Southwest Georgia.
So the LMIG requires local maintenance improvement grant is either a 10% match if you're in a TIA region, T-SPLOS region, or it's 30% match if you're not. So that is we don't have money to match. We actually look for local governments to match the LMIG money. And generally, federal dollars are not available to pave unpaved roads. They don't meet the high enough threshold for federal dollars. But this is a really tremendous boost with the additional 200 million in the amended budget year for local governments. But they do have a match.
Chairman Jaspers.
Thank you, Mr. Chairman. Commissioner, I didn't want to let this moment go by without, as we were putting our heads to sleep last night, your employees are all over North Georgia. And I had a commissioner call me this morning saying thank you. He said, if I saw you, to make sure I told you that. And I appreciate, and I really appreciate the governor's thing. I think everyone in here should have, or should, especially on the transportation committee, has gotten a text from your mayors and commissioners about doubling the LMIG money. I mean, that's going to make the biggest impact that they can go home with from us to them. Will make a big impact in their communities.
Thank you.
Chairman Lee Anderson.
Commissioner, I want to thank you.
Your mic's working.
Mine works.
It should.
Commissioner, I want to thank you for your department, the great job y'all do. My question is, how much, have you done a study on how much money we're losing on motor vehicle, that are electric cars versus on the motor tax? I mean, how much are we losing on revenue?
So actually, Senator, thanks for that great question. That's a question I get a lot. So actually, part of that transportation trust fund dollars are the alternative fuel vehicle, meaning if you have an electric vehicle, you pay an annual registration rate. That is commensurate with basically the state excise tax and federal excise tax. So we're not technically losing at this juncture. If the fleet became 100% EV, that's probably a different discussion. But at this moment, there's really not a loss of revenue. We're probably seeing a bigger impact to revenue. And we had some studies, joint study committee, I guess 2 years ago now. Time flies. And probably the biggest impact to revenue is just the overall fuel efficiency continuing to get a lot better. And I might add that to this Joint Appropriations Committee, we are in a pilot now where through the end of February to look at how a mileage-based user fee, basically for paying based on how much you drive, not the type of vehicle you drive. So there's a pilot, not anything from a policy point of view, but that's underway right now. So we look forward to seeing what those outcomes may be and reporting back certainly to their transportation committees of what that information may be.
Thank you.
Chairman Perkle.
Thank you, Mr. Chairman. And so I have two questions. I'm not going to hold you to have to answer them now. Monday morning, we do have a committee meeting. I look forward to having you at. The first has to do with the state-owned railroad. So we have so many miles, and we have made a concerted effort over the last 5 years to upgrade our state-owned rail lines. And it seems like we have about 30% left. I wanted to see if I could be wrong, but if there are plans and continued upgrade in those rail lines. And secondly, if we could have a conversation about the rideshare fees, the portion that goes to rural transit that we had talked about for several years, and those not necessarily, unless you have them off the top of your, that probably was not in the top of your notes. And we could discuss that Monday if you don't have it here.
I'd love to discuss it in detail Monday. I'll just give you a little preview. Obviously, on state-owned rail, we do have prioritization and list. A little deeper dive is if you look at that, it's locomotive diesel tax and a new change in law that where we do have a competitive process now for short line operators to compete for those dollars. And there's some criteria on that. We can talk about that in more detail. And then on rideshare, we're very excited that now we're in the second budget year since you've appropriated the rideshare fees, that we're actually using a formula distribution to all the rural transit providers outside the ATL. The ATL here in Metro Atlanta gets a portion of that money. The other portion of that money is being used to all the rural transit providers to not supplement or supplant anything that they're doing that provide enhanced service or helping their overall operations to do more. Again, not supplant local dollars.
Not supplant.
That's correct. And so we're very excited about that. It's been a wildly successful program and look forward to reporting more to you on that in detail.
Representative Sains.
Thank you, Mr. Chairman. Commissioner, thank you for being here today. The pilot you mentioned in terms of the driving-based fees, can that be utilized for airport aid?
No, just the pilot the pilot is a mileage-based user fee. So that's just there's no revenue being collected. It's just for informational purposes.
I think that was a play on words, Commissioner.
Hey, y'all been here all day. I hadn't.
Senator Lucas.
I appreciate a good dad joke. So
thank you, Mr. Chairman. Commissioner, are we gonna have to build a new bridge in Savannah? And if so, what is projected cost?
Okay, thanks for that loaded question, Senator Lucas.
And the other one, and there's part two.
Okay.
The finish date on I-75/16.
The answer to the second part is yes, we'll eventually finish. We still have one more section to bid. That's probably I think in FY 25 or 26.
That section designed.
Yes, it is ready to go. But thank you for your continued patience in a project that literally has been a decade. And we knew it would be a decade when we started. As it relates to the Cable Stay Bridge or the Talmadge Bridge in Savannah, we're actively under contract with a designer and a specialty contractor to look at, we have to replace the cables due to maintenance. They're 30 years old. It's time to upgrade the cables and replace them, which is a normal thing to do. While we're doing that, we're going to see how much we can raise the bridge up to help support GPA getting larger ships under that bridge that can support a 16,000 14 and 16,000 TEU ship. So we're just getting started on that. Just made that selection announcement last month. And over this calendar year, we'll be doing the engineering and basically we're bringing the contractor and engineering together to come up with how they can actually accomplish that and how much.
So Commissioner, are you saying that when we go over that bridge, we're all gonna need to raise our hands like this?
That would help.
We're gonna close it out with Chairman Prince.
Thank you, Chairman. Thank you, Mr. Commissioner, for your briefing. Also, thanks for Josh. We appreciate you lending them to us to help service. But my question is, based on the new truck weight allowances and things like that, did you project anything in your budget to maybe help with some of the bridges and some of the possible outcomes?
Certainly that capital construction ad will help on bridges and maybe help move some bridges forward as it relates to replacing bridges. And then the additional LMIG money to cities and counties certainly could be of help. So they'll be getting about double if each city and county, when you go back home or if you get reached out to your city and county, we'll post something hopefully very quick of what $200 million does, but it's about 90% of what they're getting now. If you want to give them a rough math, that could help go toward replacing bridges and what have you.
Thank you, Commissioner. And I want to give a shout out to your Chief of Staff. He's very patient with me and probably many of us, and he makes you look good. So
He sure does, and I'm very grateful for him.
with that, y'all, you have any closing comments, Chairman Tillery?
Make sure you bring your jacket tomorrow. I know it was real cold in here today.
Y'all, thank you. We can start up in the morning at 8 o'clock. We got a full day tomorrow. Thank you.